Yes, students. Now we will revise chapter 8, which talks about unit and batch costing. From now on, whatever we will be studying is with respect to methods of costing. Methods of costing. We learned in the first chapter only the basics about this, guys. Now we will learn in detail along with how to apply this method in the calculation of cost. See, method of costing is something which an organization will follow to calculate their cost or to ascertain their cost. Sir, there are various methods of costing, no, sir. How do I choose for me or for my company? Depending upon the nature of work the company is doing, they will choose whichever method of costing is suitable for them. Once they choose using that method, they will calculate the cost of completing their job. In this chapter, we will be covering only the two methods. In the upcoming chapters, we will cover the other methods. Okay, sir. So let us see some basics about the method of costing or what are the different industries classification is there. They have given. We will see that. Costing method enables the users to have customized information of any cost object. What is cost object? It is something for which we will determine the cost separately or we will measure the cost separately. To the need and suitability. Different methods of costing have been developed according to the needs and nature of the industry. So depending upon what work I am doing, I will adopt whichever method of costing is suitable for my company. For the sake of simplicity, industries has been grouped into two types, guys. One is industries who is doing the job work. Industries who are doing the job work means I will do the job or I will start the work only once you give the order for me. And whatever work I will do is as per your specification, as per your requirement. Under this, each job would be unique, guys. Each job would be different. One job may not be the same like the other job. Clear? For example, assume I am a furniture maker. Now you will come and give an order for double cot. I will do it as per your specification. You will tell length, breadth, everything. According to that, I will do it. Now your friend will come and tell, sir, I want same double bed, but in a little different way. I will do as per their specification. Correct? So each job I am doing as per the customer's request. Clear? Yes, sir. Whereas there is one more industry which is industries engaged in the mass production of a single product or identical products. Means, sir, same product I am producing on a continuous basis. I am a pen manufacturer. Will each pen be different? No. Assume I am manufacturing 1000 pen or 1 lakh pen. Each pen will be different. Sorry, each pen will be same. Are they unique? No, sir. They will be same to same. Everything. See, I might be producing different types of pen. Assume this is one of the type of pen. Even whether I am producing 1,000, 100 or 1 lakh, everything will be same to same. Will they have a separate identity? No, they will be same to same as. Clear? Yes, sir. So let us see what is the difference between both. For the industry doing the job work, an entity which is engaged in the execution of a special orders, each order being distinguishable means each order is different from the other. Jobs are worked strictly in accordance with whom? The customer specification or requirement. However, you tell, I will do the work and give it back to you. And each job order is unique. Means each job order is different from the other. Yes, sir. Well, coming to the other one, that is the continuous or process type of industries. The continuous or process type of industries are characterized by the continuous production of uniform products. Uniform is same according to the standard specification. Guys, company would have already fixed what should be the length of this pen, width of this pen, okay, how it should be, how this nip should be, everything they would have specified. As per that, we will manufacture all the pens. In such a case, the successive lots are generally indistinguishable, means one is not different from the other as to the size and form. Examples are who are following job work, shipbuilding, construction of road and bridges, manufacturing of heavy electrical machineries and tools. Guys, if it is heavy machines, shipbuilding and all, they will manufacture only once they get the order. If it is a small machines and all, maybe they will manufacture and keep it. You will go and select it. They are talking about here heavy electric machineries and tools, wood and furniture works, etc. Whereas coming to this, which are the industries which will follow this type of methods? that is chemical and pharmaceutical products, paper or food products, canning, paints and varnish oil, rubber, textile, etc. We will be manufacturing the same kind of product on a continuous basis. Then coming to the last difference, the method of costing for ascertaining the cost of each job either is job costing, or if it is a contract costing like for construction work and all, we follow contract costing, or the last one is batch costing. Sir, can we follow batch costing also here? Yes. For example, assume guys, I'm a furniture maker. Now one of the educational institution came and told me, because sir, we want 100 tables or 100 bench we want. Now, can I consider this as a batch? Yes. Okay, now 100 bench or desk, whatever I have received the order for, I can consider it as one batch. So can I follow batch costing also here? Yes. Coming to the other side, which are the suitable methods of costing? Process costing, single output costing, or operating costing. In this chapter, we will be discussing two methods of costing. What are those, sir? Unit costing and batch costing. And guys, unit costing here, sir, is there anything special we will be learning? No. Whatever we would have learned in cost sheet, now same thing. Once we get total cost, if I divide it by total output, what do I get? Cost per unit. Sir, who will follow unit costing? When a company is manufacturing one product on a continuous basis, they will follow the unit costing or single output costing. So through this method, what do they do, sir? They will calculate the total cost, which includes all the expenses, material, labor, overhead, everything. It is easy now because they are not doing multi-product. Any expenses they have incurred is for this product. So just calculate total cost divided by number of units. You will get cost per unit. Next, batch costing. Batch costing, this is important. You can get a numerical question also here. Batch is what, guys? A group of units. When I'm producing the same product on a continuous basis, clear? Or else when I'm producing or I'm doing a work for a group of product or group of job, I can follow batch costing. For example, I am a biscuit manufacturer. Instead of manufacturing one single biscuits, I will manufacture maybe 12 biscuits in a batch or 100 biscuits in a batch. Or I assume I'm a pharmaceutical company. Clear? I manufacture medicines. So, sir, should I manufacture each single tablet separately? Maybe not. Assume I will manufacture 12 tablets in a batch or 100 tablets in a batch. Clear? This 12 and 100 is nothing but batch size. Batch size. When I am manufacturing a group of units in one particular lot, that is called batch costing. So in this, what do we do, sir? We will calculate the cost of each batch separately. Each batch separately. So I will keep each batch separately. So what would be the cost object here? Batch. So identify what is the material cost, labor cost, overhead cost for each batch. Once you get the total cost of the batch, divide it by number of units in the batch. Assume guys, number of units in the batch is 100. So we have got, what is the total cost of a batch? Assume 10,000. Now 10,000 divided by 100, what do you get? Cost per unit. Cost per unit in the batch. I repeat, first we will calculate what is the total cost in the batch, which includes material cost, labor cost, overhead cost. Then divide it by number of units in the batch, which we call it as batch size. Once you do this, what do you get? Cost per unit in the batch. Cost per unit in the batch. And when the companies come manufacturing or doing number of batches, they will give name for each batch. Batch 1, batch 2, batch 3, like this. Even for your guys classes, okay, there will be given a name, or else maybe year 2025 batch, 2024 batch, or September 2025 batch, clear, or Jan 2026 batch, like that, correct? So when the organization is handling multiple batches, they will keep a name for each batch. Okay, sir. And one important thing in this batch costing is deciding the batch size. Batch size should always be a standard, guys. That is, I told you, I am producing 100 units in each batch. This 100 is a batch size. Now I told 100, but how will the company decide this, sir? How will the company decide what should be the size of the batch? For that, we need to use a concept called economic batch quantity. Economic batch quantity. Now assume guys, in a year, we are supposed to produce totally. In a year, we are supposed to produce totally how many units? Let us consider it as 10,000. 10,000. Now I want to produce it in batches. I want to produce it in batches. Now I want to know what should be the size of each batch. Should it be like 1,000, 500, 2,000, 5,000? What should be the batch size? I am confused. Now I am deciding on that. Now, see guys, if I keep batch size highest, then the carrying cost would be more. Clear? Let me write it down. If the quantity of the batch is more, then the carrying cost also would be more. Whereas machine setup cost we will call it as that will be lower. Why sir? Because number of batches will be less. If batch size is more, number of batches will be less, right? So in that case, setup cost will be lower. At the same time, if I produce less quantity in each batch, then carrying cost would be lower, whereas setup cost would be more. Why sir? Because number of setup would be more. Clear? And one thing you should be knowing, guys, please be careful. Economic batch quantity is similar to a concept called EOQ, which we learned in material cost chapter. But one important difference between both is EOQ is calculated for raw material, EBQ is calculated for output. Clear? Let us go back to EOQ and try to connect to this. Guys, in EOQ, that is economic order quantity, which we learned in the material cost chapter. What did we do? Sir, in a year, totally I require, assume 1 lakh kgs of raw material. Annual requirement of raw material is how much? 1 lakh. My confusion is, how much should I purchase each time? How much should I purchase each time? That is where EOQ helped me. If I am purchasing in a larger lots, then carrying cost will be more because I have to look after more number of units. Whereas ordering cost would be lower. Why, sir? Because the number of orders will be less. Same way, if I purchase in large, smaller quantity, carrying cost would be lower, but number of orders would be more, na? So ordering cost will be more. So EOQ concept will help me to decide a lot size where the total of carrying as well as ordering will be minimum. Assume as per EOQ, we got 10,000 kgs. That means every time I place a fresh order, if I place it for 10,000 units, my total of carrying cost and ordering cost would be minimum. Will be minimum. And at EOQ, total carrying cost and total ordering cost would be same. Would be same. Total of both will be minimum. Individually, both will be equal. Correct? Yes. So EOQ we will calculate for what, guys? Raw material. And if carrying cost is given in percentage, we will apply that percentage on what? Purchase price. Because higher the purchase price of the raw material, higher would be the carrying cost. Carrying cost. Why, sir? I have to care for it more. I have to take the extreme care of it. So accordingly, my carrying cost would be more. Now coming to EB, that is economic batch quantity. We are calculating it for output, guys. What do we manufacture? Output. Now we are deciding, sir, in each batch, how many units should I manufacture? How many units should I manufacture? Totally in a year, I am supposed to produce 10,000 kgs of output. But in each batch, how much should I produce? So there are two costs associated with it. What is it, sir? Carrying cost, and the other one is the setup cost. What is carrying cost, sir? Sir, once the output is produced in a batch, I need to take care of it until it is sold. Until it is sold. So once the manufacturing is done, to take care of it till it is sold, whatever cost we incur is called carrying cost here. Carrying cost, holding cost, or storage cost. And please be careful. In EOQ calculation, carrying cost was for raw material. That is, once I purchase till I use it in the production process, what is the cost I incur? Whereas here, once I produce my output till it is sold in the market or till it is sold to the customer, what is the cost I will incur to look after that? That is to look after what? Finished goods. Okay, now then there is one more cost called machine setup cost. That is, once a number of units are produced, we need to set up the machine again and manufacture it. So what is the cost we will incur to set up the machine, guys, or equipment? Got it? Yes, sir. So please be careful. One thing you have to be very clear. Concept, formula and all almost same. But for what we calculate is different. Clear? Yes. Let us study that. Primarily, the total production cost under batch production comprises of two main costs. What are those? Machine setup cost and holding cost. Inventory holding cost is for what? If you want to write for finished goods. For finished goods or output, guys. Okay, sir. If the batch size is higher, means the number of units in the batch is more, means which cost would be more, guys? Which cost would be more? The inventory holding cost. The setup cost may decline due to lesser number of setups, but units in the inventory will go up, leading to what? Higher holding cost. If lot size is lower, lower inventory holding costs are accomplished, but with what? Higher setup cost. Why higher setup cost, sir? When batch size is lower, the number of setups would be more. When number of setup is more, the setup cost would also be more. Okay. So you can see, I have also given by way of diagram. Okay. So you can see, this is the batch size, this is the cost. So, just a yes. Now, as the batch size increases, inventory carrying cost will increase. Clear? As batch size increases, the setup cost will decrease. Will decrease. If batch size is lower, assume like 100, 200 and all, then setup cost would be highest somewhere here. Clear? Yes, sir. And this is what, sir? The total cost, total of both carrying cost as well as setup cost. Carrying cost as well as setup cost. Very similar to yoke, guys. Correct? Same to same diagram. Only names will change. Economic batch quantity is a batch size where total cost of setup and holding cost are at minimum. At minimum. Guys, see, in the place of setup for EOQ, what it was? Ordering. Correct? Total ordering cost. Whereas here it is total setup cost. The objective here being to determine what are we calculating through EBQ, guys. The production lot or batch size means in each batch, how many units should I produce? And that optimizes both setup as well as inventory holding cost. Now, important statement I have given you. Economic batch quantity is always calculated for what? Output. To decide how many units has to be produced in each batch or in each lot. Whereas it is similar to EOQ, but EOQ will always be calculated for what, guys? Raw material, that is input. To decide how many units should be purchased, not produced, purchased. Each time an order is placed. Each time an order is placed, guys. So what is the formula to calculate EBQ, sir? Square root of 2 into annual demand. D stands for annual demand. Annual demand of raw material or output? Output, please be careful, into setup cost for setup, whole divided by carrying cost per unit per annum. Important thing. If carrying cost is given in percentage, you need to apply it on what? Cost of production. Cost of production. Well, calculating EOQ, if carrying cost is given in percentage, we used to apply it on purchase price of raw material. But here, guys, once the manufacture is manufacturing is completed, I need to look after the products. If the cost of the product which I have manufactured is huge, then the carrying cost which I incur also should be more. Why, sir? Because I have to take care of it properly. Even if few units are lost, it is a huge loss for me. Clear? Yes. So the carrying cost directly depends on the cost of production of the product. So if carrying cost is given as a percentage in the question, apply it on cost of production per unit of output, not on purchase price. Please be careful. Here we are calculating it for output. Now, sir, can we calculate total setup cost and total carrying cost? Yes. We used to calculate total ordering cost for raw material. Now, what was the formula? Annual demand of raw material divided by lot size, which was normally EOQ, into ordering cost per order. Same way here. Annual demand of output divided by EBQ or lot size. What do you get, guys? Number of setup into setup cost per setup, cost per setup, cost per setup. Then second one, total carrying cost, same like mine, yo, half into batch size here. Okay, that is for output into carrying cost per unit per annum. And please be careful, in EBQ formula we will use only this last part. Clear? Whatever you get here, don't use it in EBQ formula, you will go wrong. In EBQ formula, it is setup cost per setup and here carrying cost per unit per annum and not the total. Yeah. And at EBQ, both of them will be equal. Both of them would be equal individually. Yes, sir. Hope you understood. Clear? Yes. Yes, students. Now we will revise chapter 9, which talks about job costing. So we have started with the methods of costing. We have covered two methods in the previous chapter, that is unit and batch costing. Now we will learn the third, which is job costing. Sir, which type of entities will follow job costing is? Guys, whoever is doing the work after receiving the customer order as per the customer requirements. When I am doing the work or job as per the customer's requirement after receiving the order from the customer, then I would be following job costing. By following job costing, what do I do, sir? I will calculate the cost of each job separately. So to complete the job, I would have incurred a number of expenses. So for each job, I will maintain a separate job cost sheet and calculate the cost of completing each and every job separately. For example, I will accumulate the cost of material, labor, and overhead incurred for each job. Like material also, I would have used it for number of jobs, but for one particular job, what is the material cost? Same way, sir, my workers would have worked for number of jobs. We will see how much time they have dedicated or allocated for this particular job, and we will accordingly calculate the cost, guys. Yes, sir. Now, sir, this kind of method of costing is followed by the entity which are producing the same product on continuous basis, or when they are manufacturing or producing each product differently, which is unique. Unique. The second one. Correct. So under job costing, each job would be unique. Each task I complete would be unique. Yes. So what is it? We will see. Quickly, we'll go through. This method of costing is used in job order industries where the production is as per the requirement of the customer. It is not like I will manufacture and keep it, you will come and buy. No, no. You will come and give the order. Only then I will start doing the work as per your specification. In job order industries, the production is not on continuous basis. Rather, it is only when order from the customer is received. But it can be continuous. For example, I will not be keep on manufacturing and keep it. But if I am receiving the customer orders frequently, very regularly, will I be doing the work regularly, continuously? Yes. But what are they trying to communicate here? Not in continuous means, guys, we are not manufacturing and keeping the output so that customer will come and buy it. No, we are not doing it. Only when you come and order, we will start working. It is only when order from the customer is received, and that too as per the specification of the customers. Method used in such type of business organization is job costing or job order costing. Guys, we already learned the cost sheet chapter. In cost sheet chapter, whatever we did was, I have prepared a cost sheet maybe for a company as a whole. Means by considering what work they are doing or what job they are completing, we will prepare the cost sheet for the company as a whole for a year, for a month, or for a quarter. But under job costing also we can prepare a cost sheet for each job separately. For each job separately. That means there will be a separate cost sheet for each and every job. And for the organization, for easy maintenance, what they do is they will give a name for each and every job, or maybe the number. They will give it. If you guys also observe, the best example for job costing is the motor workshops or the service. When you guys leave your two-wheelers for service, they would have maintained one job card telling what all work we have done for your vehicle. And they will explain you, this is what the costs are. If you ask, if not, they will tell, sir, this is the bill, please pay the amount in the counter, we will clear your vehicle. So if you pay the bill, they will seal it and give it to you. You have to take it to the security guard. You will tell, okay, sir, you are free to take your vehicle. Clear. So if you observe in that job card, they would have given the details of what and all we have earned. What is the labor charges? What is the material consumed? Everything they would have given. Clear. So did they maintain it only for you? Yes. With respect to your vehicle, they have maintained separate job card. Likewise, they would have maintained it for each and every vehicle which they serviced. Clear. So that is the best example for job cost sheet or job card. Oh. So what is the process under job costing, guys? Simple. We will prepare a job cost sheet where we will consider what is the material cost, labor cost, and overhead cost incurred for each and every job separately. Here we can also pass the journal entry, which is as same as what we discussed in cost accounting system, guys. They can either ask the question on cost sheet, where you will follow the same format which we discussed in cost sheet chapter, but all the items might not come. Okay, we have discussed all the items from A to Z, everything. But sir, when they ask the question in the exam, when they ask on everything, here, even in the class, we discussed one illustration from ICI material where almost every item was given. Clear. So will they ask so much items in the exam, sir? May not be, guys, because that is very much time taking. Oh, fine. So whatever, one thing is they can ask you to prepare job cost sheet, or else the other one is journal entry. Journal entry is nothing but whatever we learned in cost accounting system under non-integrated in cost books. Same to same interest rates. Oh, let us see. For purchase of material, what is the entry we will pass? Stores ledger to cost ledger control account. Next, for the value of direct material issued to the job. Issued to the job in the sense direct material always. Here, issued to the production, they may not mention. They may give it as issued to the job, which is nothing but like a production. Yes. So what is the entry, sir? Work in progress to stores ledger as a direct material. It is considered to be direct. Sir, what if it is returned back? Means whatever was issued to the job is given back. Then reverse the entry. What is it, sir? Stores ledger to work in progress. Whatever entry we have passed here, we need to just reverse. Next, sir, what if I return back the goods to the suppliers? Purchase returns. This is PR. Purchase returns. When you purchase, what is the entry you have passed? Just reverse. Just reverse it. So stock is going out, sir. So the entry would be cost ledger to stores ledger control account. Then if there is any indirect material, straight away send it to where? The factory overhead control account. Yeah, you would have purchased. When you have purchased, you would have passed the same entry for both direct as well as indirect material. But when you are transferring, you will transfer it to whom? Factory overhead control account to store structure. Then for wages paid, what is the entry? Wages control to cost ledger control count. Then in direct wages and indirect wages. Sir, can I combine both of this and pass one compound entry? That is also fine. Okay. Now coming to this. So if it is the direct wages, where do we transfer it to? Work in progress. So work in progress to wages control. If it is indirect wages, it will go to factory overhead control account. So factory overhead control account to wages control account. Then, if there is any other indirect expenses paid other than indirect material and indirect wages, then where do we record it, sir? In factory overhead control. Factory overhead control to cost ledger. It is nothing but like any factory or production overhead incurred. Next, we are charging it, means we are observing the factory overhead. What is the entry? Whatever factory overhead is observed, where do we send it to? To WAP control. So who is the receiver? WAP control. Who is the giver? Factory overhead. Debit the giver, debit the receiver, credit the givers. Okay. Then for the total cost of jobs completed, similar to cost of production, here we will call it as cost of job completed. Where are we sending it, sir? There we used to send it to finished goods control account now. Yes, but here there is nothing called finished goods control account. So straight away send it to where, guys? Cost of sales. Cost of sales to WAP control. Hope you are understanding. It is nothing but cost of production. Clear? We used to send from where to where? WAP control to finished goods control. But when it comes to job, there won't be a finished goods control account. If at all, if by chance if they are given in the question, then follow the same procedure which we discussed in cost accounting system. Clear? Normally finished goods will not be there. So straight away, cost of job completed. Where do you transfer it to? Cost of sales. Okay, sir. Now, whatever balance is there in cost of sales, you will transfer it to costing P&L account and record the sales in costing P&L account. Sir, instead of opening the cost of sales and closing it, can I straight away transfer here only to costing P&L account? Yes. You can transfer this to costing P&L account. On the debit side, you will record the cost of sales or the cost of job completed. On the credit side, you record sales. Where, sir? In costing P&L. Clear? So in that case, you can avoid preparing this one extra account. Clear? Or else, sir, in between this, can I bring even sales account also, sir? Yes. Clear? But in order to save time, better record the sales in costing P&L account here. Clear? Yes. Notes you can see. General ledger adjustment account is another name for cost ledger. Here everywhere I have used cost ledger control account, which is nothing but general ledger, guys. Okay, sir. Then the balance of costing profit and loss account will show you what profit or loss made on that particular job. Then the balance of cost ledger control account shall be carry forward. Carry forward means it is like maybe the incomplete work, or we will carry it to the next year or next period. Last one. With the balance on all the accounts, trial balance can be drawn. Okay, sometimes they may ask you, if they ask you to prepare the ledger accounts, there are two kind of questions. One, they can ask only ledger accounts, or else they will ask you to prepare ledger accounts along with trial balance. Along with trial balance. That's all. That is all about this chapter. Very simple and small, sharp. Yeah. Now we will revise chapter 10, which talks about process costing. Even process costing is one of the method of costing, guys, which is followed by an entity which follow different processes to convert their raw material into output. We call this as conversion process. Clear? Conversion of what, sir? Raw material into output. Guys, the conversion process will include two types of cost. What is it? Labor and overhead. Once I purchase raw material, started using it in the production process, we will take lot of efforts to convert that raw material into output. That process is called conversion process or manufacturing process. If organization is following different processes to convert their raw material into output, they follow process costing. Sir, by following process costing, what do? They calculate the cost of each process. And it will also help them to know which process is performing better, who is incurring more cost, who is contributing more to the organization, which process. So in this case, guys, which would be the cost object? For us, the cost object would be process. So we are allocating the cost for each process separately. So assume there are three different processes in an organization. We will prepare three different costs. All the expenses relating to the process would be debited, and if there is any sales or output transferred to next process or loss, we will record it on the credit side. Normally, sales will not be done in the process accounts, guys. It will be done finally in the finished stock account or in the sales account. And in process costing, the output of process 1 will become the input of process 2. Same way, the output of process 2 will become the input for process 3. Clear? And it has to go in a sequence. In your exam, they can ask you to prepare process account. Either one process account or multiple process account. Multiple process means maximum 2 or 3. Not more than that. Clear? Yes. And for the organization, for easy sake, they will keep a name for each process. There will be a name for each process. And in your exam and all, what they do is 1, 2, 3 or A, B, C like that. Clear? Or they may also give the name used in the industry. Yes. So you can see raw material will be introduced into the production process where in the first process. Then we will send whatever work is done in process 1. We'll go to process 2. Then next to process 3. Last is finished goods when it is ready to sell. When it is ready to sell. So I told you we need to prepare a separate process account for each and every process. Sir, what do we record there? Guys, I have tried to give everything here in one account. This is just like a format for you. Just like a format. I will also discuss along with some question or examples later. But first pay attention, understand the format. Process account is like any expense account. Yeah, we will debit with all the expenses and credit with. Normally incomes are not there. Whatever you transfer to next process or the loss. Or the loss. And loss means we will transfer it to the respective loss account. Clear? Yes. Listen. Now basic raw material means the raw material which is introduced in the first process. This is the raw material for the entire company. Clear? We will take that. Then there might be direct material for each and every process. Clear? For example, sir, for process 2, process 3 also, can there be a direct material? Yes. Like direct material means the material which is used by that process has direct. Clear? Sir, what is the difference between the basic and direct? Simple. Basic is nothing but this, guys. The raw material from which we started manufacturing. Whereas direct material, in case of process costing, is the materials used by the respective processes for the work which is assigned to them. For the work which is assigned to them. So this is also direct material, but for the company as a whole. Whereas this is a direct material for whom? For the respective processes. Clear? Yes. Sir, what if they have given indirect material, indirect labor and all? Everything you will record on the debit side only. Any expenses of the process, please record it on the debit side. So you can see labor, direct expenses, production overhead or any overhead, you will take it here. Okay, sir. Then all the expenses are recorded. Then if by chance if there is any defective or waste For rectifying that, I have incurred some cost, debit that. If at all it is given in the question. Then coming to the credit side, guys, important. Normal loss. Sir, what is normal loss? What is abnormal loss? There are two different types of losses in the production process, guys. Clear? If there is any loss which is unavoidable, which is uncontrollable, whatever I do, it is bound to happen. So I don't have any control over it. We call it as what? Normal loss. And the cost of normal loss will always be observed by good units. Will always be observed by good units. Means the cost per good unit will go up automatically. Clear? Yes, sir. So simple. Let me tell you. I will show you. Assume, guys, I had purchased 100 units at 10,000 cost. Cost is fully debited. Yes. Now there is a loss of 5 units. There is a loss of 5 units. So remaining units is how much, guys? 95. So whatever is the cost of these 5 units will be absorbed by whom? Remaining 95 units. Remaining 95 units. But this 5 units can bring me some small scrap value. Some small scrap value. So what should I do? I have to reduce it from 10,000. 10,000 is my total cost. But this 5 units which is lost, but I will get some scrap value. Assume it is 100 rupees. So I need to deduct 100 here. What is my net cost back? 9,900. So what is the cost of this 95 units if I ask you? How much is that? 9,900. But instead of deducting, as I already debited 10,000 on the debit side, what will I do is I will give a credit. I will give a credit of for what? Scrap value of normal loss units. This is not the cost, guys. This is the scrap value of normal loss units. Now, if I ask you, what is the net debit? 9,900. 9,900. Correct? Yes, sir. That is the cost of how many units? 95. How did I get 95? 100 minus 5. So if I ask you what is the cost per unit now? 9,900 divided by 95. Hope you understood. Now, assume whatever is the cost per unit you have got. Out of this 90, 95, 90 is sold, 5 is kept as closing stock. If I ask you what is the cost of output, then it is 90 into the cost whatever you have got. What is the cost of closing stock means? 5 into the cost per unit what you have got. Hope you understood. I repeat. Guys, I have incurred a total cost of 10,000 for 100 units input. Later, I got to know there is a 5 units loss, normal loss units. Now, whatever is the cost of it is a loss for me, will be absorbed by remaining units. How much is that? 95. But from this 5 units, I will get some small scrap value, which will reduce my cost. So, what is my net cost now? 10,000 minus 100, which is 9,900. Divide it by what is the good units remaining? 95. How did I get 95? 100 minus 5. You will get cost per unit. Assume out of this 95, the units transferred to next process is 90. So what is the cost of output transferred to next process? 90 into whatever cost per unit we have got. And 5 we have kept it as closing stock. What is the cost of closing stock? 5 into whatever cost per unit we have got. Got it? Yes. Yes. Let me read for normal loss. It is defined as the loss of material which is inherent. Inherent means I cannot avoid it, sir. It is bound to happen in the nature of work. Such a loss can be reasonably anticipated from the nature of the material, nature of operation, the experience and technical data. It is unavoidable because of the nature of material or the process. Guys, organization would have already be prepared for it. I know it will happen and I cannot control it. So not what normally organization will do is they will fix it as a percentage of input. 5%, 2%, 3%, they will fix. I know it will happen. Nah? I cannot control. So better I will be prepared for it. I will be prepared for it. So they will anticipate it and they would estimate what is the percentage. Assume 5% they have given. You need to apply this 5% on what? Input. Input, guys. Got it? Yes, sir. Treatment in cost accounts for normal loss. The cost of normal loss in practice is observed by whom? Good units. Good units means the remaining units. Clear? That is the total input minus the normal loss units. In my example, it was 95. Remaining units produced. The amount realized from the sale of normal loss units should be credited to processor. Why, sir? Because we have to reduce it from the cost. Now I cannot go and deduct it on the debit side. So instead of doing it, what do I do? I will give a credit. So after considering normal loss, how do I calculate the cost per unit, guys? Very simple. Take the total cost minus the scrap value of normal loss units. In my example, it was 1000, I guess 1000 or 10,000? 10,000. So 10,000 minus 100. Minus 100. How much it will give? 9,900. Divided by total input minus normal loss units. Clear? Yes, sir. That is 100 minus 5, which is 95. Which is 95. What do you get now here? Cost per unit. So you can see, guys, assume input is, I am giving another example. Input is 1000. And normal loss, normally they would have given in percentage. Assume it is 10% of input. So 10% of input comes to 100. What was the expected output now? What is the expected output? 900. But actually we ended up getting only 750 output. We ended up getting only 750 as good units of output. That means remaining 150 is what, sir? Abnormal loss. Abnormal loss. Guys, we call this as normal output. After reducing normal loss from input, whatever I was anticipating, whatever I was expecting is called normal output. If I get the same, there is no chance of abnormal loss or abnormal gain. But if my actual output is less than normal output, then the difference is what, guys? Abnormal loss. Abnormal loss. Or else, if I ask you, what is the total loss? 250. 250. If total loss is more than normal loss, what is the difference? Abnormal. Hope you understood. You can analyze in two ways. If your actual output is less than normal output, what is normal output? Input minus normal loss. Then what is the difference? Abnormal loss. Or else, your total loss is more than normal loss. What is the difference? Abnormal loss. Hope you understood. Now, what is abnormal loss? Abnormal loss is something which I would have controlled it. If I had taken precautionary measures, I would have avoided it. But I didn't do it. So it happened. So when it happened, it is because of my ignorance or negligence. Should I allow it for the cost of the units to increase? No. Please value it separately and send it to abnormal loss account. And from there, whatever is the net loss, you will transfer it to costing P&L. So you need to value the abnormal loss separately and send it to abnormal loss account. And in abnormal loss account, if you are receiving any scrap value, you will record it there and transfer the final net loss to costing P&L account. Okay, sir. Sure. Let us see. What is that abnormal loss? It is defined as the loss in excess of predetermined loss. What is the predetermined loss? Normal loss, which I had already expected it will happen. Have I predetermined it as I anticipated it? Yes. This type of loss may occur due to carelessness of workers, a bad plant design, or an operation sabotage, that is wastage. Such a loss cannot obviously be estimated in advance. Clear? So this normally will not be estimated in advance, guys, because this happened because of my mistake. Clear? It is a reason. Yes. So this would have not been anticipated. Normally this would be like balancing figure, guys. Balancing figure. Okay. What is the treatment for it in cost accounts? Do we value it separately or will we include it in the cost of good units? We will value it separately. The cost of abnormal process loss unit is equal to the cost of good unit. The total cost of abnormal process loss is credited to a process account from which it arises. Sir, why do we credit it, sir? That's very simple. Here already total cost is debited. Now, can I allow my abnormal loss to be absorbed by good units? No. So as the total cost already includes the cost of abnormal loss units, what do I do is I will try to remove it by giving a credit. By giving a credit. And I will treat it separately in abnormal loss. So how do we calculate this value, sir? Guys, listen here. In the units column, normally this will be the balancing figure. In the units column. Once I get the units, can I calculate the value? Yes. What is the formula? Here we discussed same formula. Now you need to apply multiply with what? Abnormal loss units. So what is the value of abnormal loss? Same formula into how many units, sir? Abnormal loss units. That's simple. What do you get here? Cost per unit. Multiply it with abnormal loss units. You got it? Yes. Now coming back to this. Pay attention. Guys, when you are preparing the process account, you need to present both the sides, units column also. Units amount. Okay, sir. First thing you will close is units column. When you close units column, there are two possibilities. Either you will get abnormal loss or abnormal gain. If debit side is more, abnormal loss on the credit side. If by chance if credit side is more, then on the debit side, abnormal gain. Either of the two, not both. I have given both here in the format. That doesn't mean that you will get both. Anyone. Anyone. That is why I have highlighted. Okay. So whatever I have given in red color is like a balancing figure in units column. Once I close units column, now come to the amount column. Now you need to calculate the value of abnormal loss using the formula which I just now explained. Then output, you can keep it as balancing figure in the amount column. You can keep it as balancing figure in the amount column. Or else, even this you can calculate. How is it, sir? If you multiply year with the number of units of output, you will get the same answer. Here we multiplied with abnormal loss units. Now, instead of that, if I take the number of units transferred to next process, I will get what is the cost of output transferred to next process. Clear? And if at all, if they have given closing stock, you will consider that also on the credits. You will consider that also on the credit side. Okay. Now, whatever amount we will transfer to abnormal loss account, we will receive it there. We will receive it there. Yes, sir. So I will prepare an abnormal loss account. So you can see your process account, whatever we transferred there credited will be debited here. Now, even for these units, we will get some scrap value. Yes, sir. So record. By cost ledger control account is nothing but the scrap value. Scrap value of what? Abnormal loss. See, in the exam, if they have just given scrap value, take it for both normal loss units as well as abnormal loss units. Whereas, if they have given it separately, for normal loss separate scrap value, for abnormal loss separate scrap value, please take it accordingly. Clear? Yes. And whatever is the net loss, this will be the balancing figure. Transfer it to where? Costing P&L account. Costing P&L account. Guys, one difference between both the losses, listen, y'all. Here, what I transferred to normal loss account is not the cost of normal loss units. It is the scrap value of the normal loss units. Whereas, whatever I am transferring here to abnormal loss account, it is the cost of abnormal loss units. Clear? Will I record the scrap value of abnormal loss units in the process account? No. Where do I record it? In abnormal loss account. In abnormal loss account. Hope you understand. Yes, sir. Next, sir, if not abnormal loss, I can get abnormal gain. Abnormal gain is what? Guys, listen. Logically, you learn. Simple. Listen here. Sir, I expected 100 units will be normal loss. This I would have expected at the beginning of the year or at the end of the year? Beginning of the year. I would have already recorded this at the beginning of the year. I have recorded the scrap value, assume 5 rupees per unit, 500. Already I have recorded. Yes. But the end of the year, I got to know. Actually, loss is not 100 units. It is only 80 units. That means 20 is what? Abnormal gain. Now, what is abnormal gain, sir? I expected it to be loss, but it turned out to be good. Sir, I expected 50 marks, passing marks in my costing paper, but I got 60. Gain of 10 marks. Abnormal gain. They will not do any charity. Only if you are written, they will give marks. Okay, don't assume that. Sir, if I write for 50, they will give 60. Definitely not. Okay. So I repeat, listen. You expected 50 in a paper, but you ended up getting 60. 10 rupees is gain. Sorry, 10 marks is there. Gain. Clear? Yes. Same way. I expected my normal loss to be 100 units. But the end of the year, Jamuna, at the end of the year, I got to know there is actual loss of only 80. That means 20, which I expected to be loss, turned out to be good. But I would have already recorded this, guys. 100 I would have already booked. Now, can I go and cancel that? No. So, what do you do now? Go and record 20 years. Go ahead and record 20 years. Now, how do I calculate the value of abnormal gain, sir? Same like abnormal loss. Same like abnormal loss. Whatever cost per unit you would have got into the number of abnormal gain units. Clear? So, whatever I will transfer here, I will receive it there. I will receive it there. Where, sir? Abnormal gain account. You can see here. Whatever I have debited in process account, we will credit it here. We will credit it here. Guys, one important thing now. How many normal loss I observed? I estimated 100. But actually normal loss is how much now? Only 80. Guys, listen. For normal loss, I would have already accounted scrap value per unit 5 rupees. 500 I already accounted. But will I get now 500? Will I get 500? No, I will get only on 80 units. That means on 20 units, I lost scrap value. I will record. See, this is my actual gain. Where is it? It is my gain. But out of this gain, I am losing some small value. What is it, sir? For this 20 units, I am losing scrap value. Record it here. Guys, whatever I am writing here, to normal loss, it is nothing but loss of scrap value. Why, sir? Because I already recorded the scrap value on the credit side for how many units? 100 units. I expected that I will get scrap value for 100 units and I reduced 500 from my cost. But only at the end of the year I got to know actual loss is only 80. That means on 20 units I will be losing the scrap value. Yes. Please record it here. Please record it here. Clear? That is 20 units. 20 into 5 will come here. Remaining is the net gain, which we will transfer it to costing P&L account. This is the net gain. This is the net gain. Hope you understood. Clear? Yes. Sure. Let us read it. Abnormal gain. Guys, listen here. Input was 1000. I expected 10% as loss. So normal output was 900. That is normal loss is 100. But actually my output turned out to be 950. My normal output was what? 900. So that means remaining 50 is what, sir? Abnormal gain. Or else, let me take like this. What is my total loss? Only 50. Only 50. Whereas my normal loss is 100. When total loss is less than normal loss, what is the difference called as? Abnormal gain. Abnormal gain. Okay, sir. Sometimes loss under a process is less than the anticipated normal figure. In other words, the actual production exceeds the expected figures. Under such a situation, the difference between actual and expected loss or actual and expected production is known as abnormal gain or abnormal yield. So abnormal gain may be defined as unexpected gain in production under the normal conditions. Means guys, simple. Sir, I expected 100 would be a loss, but actually I ended up getting only 80 loss. That means 20 which I expected to be loss turned out to be good units. Turned out to be good units means, can I sell it in the market, sir, at a usual selling price? Yes. How do we calculate the value of abnormal gain? Same formula, guys. First calculate cost per unit. Multiply it with abnormal gain units. Now you might ask me, sir, when you are reducing your normal loss units, will you reduce only 50 or full 100, sir? 100, guys. Because all these calculations would have been done at the beginning of the year only. Normal loss you would have expected at the beginning itself, percentage. Clear? Yes. Even scrap value I would have taken for 50 units or 100 units, sir. 100 units. Clear? Yes, sir. Into abnormal gain units, which is 50 for me. Clear? So once you give debit in the process account, bring it here and please be careful with this. Many students might miss this. And even if they're doing, they may not know the reason why is it. Yeah, so simple guys. This is a loss of scrap value. Loss of scrap value. So can we lose scrap value also? Yes, we have gained something big guys in life. Clear, we have lost something small. Let us leave it. Let us leave it. Correct now, guys, because this abnormal gain 50 units is there. No, I can sell it in the market at a regular price. For that, we are losing some small scrap value. Let us let go. Correct now. That is what the story of even CA students. Okay, you guys are making yourself for a better future. In this journey, if there are some small sacrifices which we have to do, you have to do it, guys. Clear? Now, you might see some of your friends, especially those who have completed their degree. You might be seeing your friends working, earning some income and all. Okay, but don't worry. Don't compare your present to today with their life or with their happiness. You guys are aiming something big in your life. It's okay to sacrifice few things, hold your nerve, control your emotions, control your desires, and focus on your studies. Okay, definitely you will have better future. That is what I can tell. Don't compare with others, guys. That's the best thing. If at all, if you want to compare, always compare with someone who is above you, not below you. Above you in terms of knowledge and qualification and talent. Yeah, yes. Sure, sir. Fine, sir. Again coming back to format. Again coming back to format. Yes. Hope you understood whatever I have explained it. Clear? Guys, follow the order. Follow the order. Let me tell the order. First, record all the expenses, people. Abnormal gain will not come at the beginning. It will come only at the end. First, record all the expenses. Okay, sir. Then units column. You open inputs. Then normal loss will be normally given in percentage. That percentage has to be applied on input. Okay. Then output and all normally units will be given, guys. Clear? So first, to try to close units column. Check which side is more. Majority of the time, debit side might be more, but may not be always. Check which side is more. If debit side is more, then on the credit side, abnormal loss. If credit side is more, on the debit side, abnormal gain. So in the units column, always the balancing figure would be either abnormal loss or abnormal gain. Once units column is closed, you need to find out maybe two figures at least. Clear? Calculate one figure using the formula. That is like this. Another one you can keep it as balancing figure. Or else you can find out this also using the formula. If you just multiply with the number of units of output transferred to next process, you will get this line. Clear? Yes. If closing stock is given, you can record that also. Clear? Yes. Sure. I have also given what it would be debited, credited and all individually, one by one item. So we have covered some basics about the process costing. Let me also explain it through an example. I already give one or two examples, but still I am taking one more here. I will also take up one question and tell you, don't worry. First, raw material 10,000 is introduced into the production process at a cost of how much? 10 rupees per unit. So total cost is 1 lakh. Direct wages 10,000, production overhead 15,000. So what is my total cost? 1 lakh 25,000. Everything would be debited here, sir. Hello, sir. Everything would be debited here. Yes. Next, actual output transfer to next process is only 9,200. Output is 9,200. That is this figure. Units. Okay, sir. Then normal loss 5%. 5% on what? 10,000. 10,000, which comes to how much, sir? 500. 500. So normal output is how much, guys? 10,000 minus 500. How much it should is of it was supposed to be? 9,500. But actually output is how much, sir? 9,200. That means remaining 300 is what, sir? Abnormal loss. Abnormal loss. That would be the balancing figure in the normally units column. Okay. Sure. Now let us come to the cost part. Sir, total cost is 1,25,000. We have a normal loss of 500 units. We are getting a scrap value of 3 rupees for each unit. So what is the scrap value? It is 500 into 3, which is 1,500. What is my net cost, sir? 123,500, which is nothing but the numerator part. Total cost minus scrap value of normal loss units. So you will get 123,500 divided by normal output. What is normal output, sir? 10,000 minus 5% loss, which is 9,500. Divide each other. What do you get? You cost per unit. Cost per unit 13 rupees. Now, if I want to calculate value of abnormal gain, 13 into 300, which comes to 3,900. I want to calculate cost of output, 13 into 9,200. 9,200. Hope you got it. Clear? Same thing, whatever I have calculated here, now we need to present. Now we need to present. So 1 lakh cost. Okay, let me do it. I need to present it. How much is the units? 10,000. Okay. What is the cost of that? 1 lakh. Wages cost 10, 15. Okay. 10,000, 15,000. For this and all units will not come, people. Normal loss is 500. What is the scrap value? Into 3,500. So if I ask you what is the net cost? Debit minus credit. Debit minus credit. Okay. Then we have abnormal loss 3,900. 3,900. What is the unit, sir? 300. Pros output is how much, sir? 9,200. Normally, this would be the balancing figure. So, total of 10,000, 10,000. Until I find out abnormal loss, there will be zero here. You find it out as balancing figure. Now, output cost is how much? 119,600. 119,600. Hope you understood. Now bring that here. 300 into the cost of it is 3,900. For this also, do we get a scrap value? Yes. If they are not given separately, take same 3 rupees. So 300 into 3, 900. Clear? Remaining is how much, sir? 3000. Transfer it to costing P&L. What is this, sir? Net loss. Net loss. Clear? And if you prepare normal loss account also same, guys. Listen here. If you prepare normal loss, once again I will show you. On the debit side, you will take how much in units? 500. 1500. Then on the credit side, by cost ledger control account, how much, sir? Same. 500, 1500. Match. That's all. This is normal loss account. Normal loss account. Debit side, you receive whatever is transferred here, no? You receive it here. Clear? This was with an anticipation you have booked. When you receive it, you will pass this entry. When you actually receive the scrap. Clear? Guys, when I pass this entry, I have not yet received the amount. It was just with an anticipation. When did I pass this entry? At the beginning of the year. When I actually receive it, you need to receive the amount. What would be the entry? By cost ledger control account to normal loss account. Got it? Yes, sir. Sure. One second. I will just show you a question which I have solved in my regular class. Oh, you can see your guys. All the data is given. We will not go in detail about the data and all. So you can see one by one. First material, wages, overheads, every expenses we will take. Okay, sir. Every expenses we will take. On the credit side, we will first record the normal loss. How much is that? 5% of input. Take it. Then scrap value they have given 12.5. 375 into 12.5. You will get scrap value of normal loss units. Now, if I ask you what is the cost, it is the total of debit side 6,94,350 minus 4,688 divided by units 7,500 minus 375. You will get cost per unit. Now, first let us close the units column. Output they would have given 7050. Total of debit side 7,500, credit side not matching, sir. So, what is the balancing figure? 75. So, multiply 75 here. You will get cost of abnormal loss. Take it here. And now close amount column. Debit side is more, balancing figure on the credit side is cost of output. Sir, can I calculate this using the formula also? Yes. Instead of 75, if you bring 7050 here, you will get cost of output. But I would suggest you to keep it as balancing figure so that amounts column will exactly match as. Amounts column will exactly match. Especially if you have got something decimal here, then it may lead to some difference. So in order to avoid that difference, better keep it as the balancing figure under the amount column. Under the amount column. Okay. So abnormal loss you can see whatever I have transferred here, I will receive it first. I will receive it first. Then we will receive the scrap value for abnormal loss units. Then remaining we will transfer it to costing P&L account, which I call it as net loss. Net loss. Guys, please don't straight away transfer from here only to costing P&L account because here we don't record the scrap value of abnormal loss accounts or loss units. Clear? So please transfer it to abnormal loss. There you record scrap value and from there you transfer it to costing P&L. Sir, what if there is abnormal gain? Okay, in this account there is an abnormal gain. Okay, guys, when there is an abnormal gain, you have to be extra careful. First, record all the expenses, inputs, then also output. Normal loss, how much is that, sir? 10% of input 7050 into 10%. Okay, record the scrap value also, which is 37.5 into 705. Okay, game over. Now, first we need to close units column. Check which side is more. Don't always conclude that debit side would be more. Sir, this time credit side is more, sir. 7250 and on the debit side only 7050. So what is the difference, sir? Balancing figure of normal gain on the debit side. Clear? And once you close the units column, now we need to calculate cost per unit. Now, first total of the cost debit side, but don't write it here. Don't write it here because we will get this value also. Do the total, but don't write it in the total. Just take it here. Whatever total you get here, just to take it here, guys. So total cost. Please be careful. Total cost will not include this. We have not yet determined this. Only this will come. Minus scrap value divided by input minus normal loss units. You will get cost per unit. multiply with abnormal loss units. You will get value of abnormal loss. Sorry, abnormal gain. Multiply with abnormal gain units, you will get value of abnormal gain. Now, whatever value you have got here, add this and write the total. Clear, guys? One mistake students might do is, whatever total they get here, they will immediately write. Don't do that. When there is abnormal gain, wait, guys. Wait for the value of abnormal gain because that will also come on the debit side. Clear? Or if at all, if you want to write the total, you can write this total provided you have got this. If not, you would have still have to determine this. Clear? Yes. Once I get that debit side total, you can take the cost of output transfer to next process as balancing figure. Or else you can calculate this also using the formula. So instead of 180, if you take 6525, you will get the cost of output. You will get the cost of output. Hope you understand. And when there is abnormal gain, observe. Sir, first receive it. 180 units at 25209. Receive it on the credit side. Because there it is debited, here it would be credited. Now, for 180 units, will I get a scrap value? No, it is a loss. So for 180 units, 37.5 I am losing. So it is like a loss size. It is like a loss. So record it. Remaining whatever is there is called net gain. Transfer it to costing P&L. Transfer it to costing P&L account. This is nothing but loss of normal scrap. Clear? Yes. Sure. Let us now enter the new concept here. Inter-process profits. Guys, as we already learned, sir, the output of one process will be sent to the next process. Same way, output of process 2 will be sent to process 3 at cost. But now company want to know what is the performance of each process. Who is contributing better? Who is adding more profit to the company? In that case, they will not transfer the output of process 1 to process 2 at cost. They will ask you to add some profit and transfer it at what price, sir? Transfer price. But please be careful. Process 2 will not know how much profit is added by process 1. Same way, process 3 will not know how much profit is added by 1 and 2. Got it? This would be kept as confidential by the top level manager. They will just tell process 1, whatever work you are doing, you transfer it to process 2 at this much price. Same way, whatever work process 2 you are doing, you transfer to process 3 at this much price. This price is normally fixed by top level management. Yes. Doing the industry research and all means simple. How do they fix it, guys? Simple. If process 1 output is sold in the market, at what price can we sell it? We are not selling it. If I sell it, then we will fix that as transfer price. Same way, whatever work process 2 is doing, if I sell it in the open market, at what price can I sell it? We will fix that as transfer price. Yeah. Sir, what is the main reason behind it? Simple. To evaluate the performance of each process. To evaluate the performance of each process. Now assume guys, company got to know process 2 is not performing better. They are incurring huge cost. They are taking too much time. In that case, what company can plan is they can give 1 or 2 warning for them. If not, eliminate process 2 and try to outsource that work to others. Whatever process 2 is doing in-house, try to eliminate it and outsource that work to maybe the outside agency. Why so? Because assume guys, if process 2 is doing in-house work, they are incurring 10 lakh costs. Now there is one person who is ready to do the same work for me for 7 lakh. I can save 3 lakh, no? Yes. But obviously there are other qualitative factors to consider. I have to share some secrets with him and all. Now what if he himself starts the business which is competitive for me? That and all we need to consider. But if everything is okay, maybe I can outsource this work to outsiders. So that is why companies normally transfer the output of one process to another process, not at cost, but at profit, by adding a profit, which we call it as transfer price. Transfer price. But one problem here is, guys, whatever process 1 sent to process 2 to process 3. Now, process 1 doesn't have any problem. Why? Because there is no one adding profit to them. But when it comes to process 2 and process 3, they will be having a material which is sent by 1 and 3 will be having which is sent by 2. Correct. Now, if they have already completed the work and send it to next process or sold it, no problem. But what if they are having it as closing stock? Now assume guys, process 3 is having a closing stock. Closing stock, can it be shown at profit? No. But here, closing stock is not at cost. Why, sir? Because process 1 and process 2 would have added some profit. Can I show my inventory at cost or at profit? Cost. Correct? Even accounting standard or Ind AS 2 tells the same. You value it at lower of cost or net realizable value. If your selling price is more than cost, then you will always show the inventory at cost. Now, can I show my inventory which is there in process 2 or process 3 at cost plus profit? No, I have to show it at cost. But my closing stock will have some profit which is added by previous processes, which we call it as unrealized profit. What should we do with this, sir? Create a reserve and remove it. Create a reserve and remove it. Why so? Because we cannot make profit by keeping the goods with us only. Can we do it? Will accounting standard allow recognizing the profit by keeping the goods with you only? No. So now closing stock of process 3 will have some element of profit which is added by 1 and 2. Can we have that in our books? No. Please try to remove it. Please try to remove it. Hope you understand. By creating a reserve. Yes. That is what we are learning now. Inter-process profits. Normally, the output of one process is transferred to another process at cost, but sometimes at a price showing a profit to the transfer process. That to the transfer process means to the receiver. Okay, the transferer will add some profit and send it to the receiver. The transfer price may be made at a price corresponding to the current wholesale market price. That is, if I sell it in the market, what price can I get? We are not selling it, but if I sell, what is that I will be getting? Or at a cost plus some agreed percentage of profit. That is cost plus some certain percentage of profit. The advantage of the method is to find out whether the particular process is making profit or loss. So we can calculate each process. Is it making profit or loss? If yes, how much? This will help the management whether to process the product or to buy the product from the market. Guys, we will make this decision in marginal costing. Make or buy decisions. Make or buy decision. Sir, should I continue with this process in-house or should I stop it and start purchasing it from outside? So transfer price is nothing but cost plus profit, guys. Don't call it a selling price. We are not selling it. Clear? If it is for outsider, we call this as selling price. But here we are not selling it. We are sending it to the next process. The profits introduced remain a part of the prices of process stocks, finished stocks, and work in progress. The balance sheet cannot show the stock with profit, guys, because the accounting standards will not allow it. This problem arises only in respect of stock on and at the end of the period. That is only on the closing stock. So what about the units completed and transferred to next process? Guys, this goods, if I had already sold it, then I would have recognized profit on it. There is no problem in it. So for the goods sold, we don't care. But for the goods which are still lying with us, we cannot show that goods along with profit. We have to show it at cost. The unrealized profit in the closing stock is eliminated by creating a stock reserve. By creating a stock reserve. I will try to explain this with an example with a question, guys. See, whenever you are preparing the process accounts, which includes the inter-process profits, you should have three amount column on the both sides. Cost profit total on both the sides. Clear? Guys, think like this. This is the cost to the company as a whole. Whereas this is for the process. Will process know what is the profit added by the previous process? No, they will not know. But will top level management know it? Yes. So for the company, if I ask you what is cost, it is this. For the process, if I ask you what is the cost, for them, Papa, they will believe that this is their cost. Clear? So cost column stands for company, whereas total column stands for the process. Got it? Yes. Process 1 normally will not have any profits, guys, because no one is there before them to add. Let us go to process 2 to understand better. Yeah. So opening stock value they had given 9,000. Clear? In that, how much is the profit they would have given? This I would have anyway recognized it during the period, because normally opening stock I would have sold during the period, because this was the closing stock for the last year. This I would have sold it. We will take care of. Then this is what we have received from process 1. Now for process 2, what is cost price? Is it 4,500 or 54? 54. 54, because they don't know what profit added by process 1 and all. But for the same goods, what is the cost to the company? 4,500. 4,500. Only top level management will know this figure. Clear? I repeat. For process 2, the cost is 54,000. Whereas for the same goods, what is the cost to the company? 4,500. Okay. Then we got prime cost and all here. Then closing stock, normally they will give this value, 4,500, which includes profit. Sir, how will I find out the profit element? Simple. You can either find out cost element or profit element. Either one you calculate. How is this, sir? Simple. Let us calculate cost. 4,500 is a part of 90. How much is for 70? So simple. 4,500 divided by 90 into 75,000. You will get what is the cost. In that case, you can keep profit as balancing figure. Or else, can I calculate the profit amount, sir? Yes. How is it? 4,500 divided by 90,000 into 15,000. Into 15,000. You get profit. You either calculate cost or profit. Keep the other one as balancing figure. You can see I have shown it here also. Cost element I have calculated. Cost of closest. Clear? Huh? Yes. So simple. I repeat once again. This divided by this into 75,000. That will give you the cost of closing stock. Or else if you want to calculate the profit in closing stock, then 4,500 divided by 90,000 into 50,000. 50,000. Okay. Then we have added overhead cost also. Then we will get a total cost 90,000. Now on 90,000, process 2 has to add a profit. Normally, if they have given it as a percentage and all, will you add it on 75, 750 or 90? 90. Because what is the cost for process 2? 90. For that, you add profit and send it to next process. So next process story is what? Sir, 75,750 worth of goods is sent to next process at 1,12,500 by adding a profit of 36,750. So when finished stock receive the goods, for them what is the cost? 1,12,500. 1,12,500. Okay, sir. This is the profit and the profit percentage and profit amount calculations. Finish stock. Oh, guys, if I have to then see this, you will do only if they have asked in the question reconciliation of profit. So inter-process profit added you have to take. What is the inter-process profits, sir? One by one we will see. 13,500, 22,500, and here 16,250. Clear? We will take it. But is it realized profit? No, because some of them still might be lying in closing stock. So what should we do? Add unrealized profit in opening stock. Why are you adding it, sir? Simple. Opening stock. Would I have been served it in the current period? Yes. I would have recognized profit on it. Yes. And this is the profit added in the current period or last period? Last period. Clear? Because this was the closing stock for last period. I would have deducted it. In the current period, I am adding it. Same way, closing stock. On closing stock, is profit added in the current period? Yes. Is it a part of this? Yes. But have I sold it? No. That means, is it realized or unrealized profit? Unrealized. Deduct. Deducted. You will get what is the realized profit from each process. If I ask you who is performing better, process. Clear. Company has totally earned a profit of how much? 57,575. How much is contributed by each process? Each process. Got it. So this is what the total profit made by the company. You can see here. Total profit. So if I ask you the breakup, how much each is contributed by processors, we will get it here. Yeah. If they ask you, show the value of closing stock to be appearing in the balance sheet. Guys, whatever process 1, process 2 and finished stock, closing stock is there. Closing balance. Is it a closing asset of a company, of an entity? Yes, inventory. They have to show it as a current asset in the balance sheet. At what value? Cost. So we need to take what values, sir? Closing stock 3,700, 3,750, and here 757. So this is the value of closing stock in the balance sheet of the company. Cost of closing stock. Hope you understand. Yeah, this and all only if they ask you to it. Yeah, normally they may ask only the process accounts. You will stop it there. Got it? This is all about the inter-process process. Yes, we'll continue. There is some more topics to be covered. Next is valuation of work in progress. That is, if there is work in progress, then how do we value it? Important for this chapter, guys. So first of all, what is work in progress? Partly finished goods. Partly finished goods. Guys, if there is any units on which I started manufacturing but not completed. Because see, by the end of the year, that is 31st March, can every unit be completed and be ready for sale? No. So there can be few units on which I have started working but not yet completed. But not yet completed. What do we call it as? Work in progress. Even in cost sheet format and all we saw. Opening WAP means we will add, closing WAP means we will deduct it. But there the values was already given. In this chapter we are understanding, we are learning how to determine that value. How to determine that value. Guys, for work in progress, we should always calculate equivalent units. What is equivalent units, sir? Guys, assume there is a 1000 units of closing work in progress on which we have done 60% work. What is the number of equivalent units? 600. Sir, what is the meaning of it? Means if 100% work is done, how many units I would have completed? 600. I'm not done. This is just for calculation. Equivalent units is only for calculation purposes. Clear? See, there are 5,000 units which is completed. Clear? Now I have to compare that with 1000. Sir, is the base same? No. 5,000 100% complete, whereas 1000 is not 100% complete. If this 1000 100% complete means how much I would have got? 600. Now can I add 500 with 600 with 5,000? Yes. Now assume my total cost is 10 lakh. 10 lakh. 10 lakh divided by 5,600. What do I get? Cost per equivalent unit. Cost per equivalent unit. Hope you understand. Clear. To calculate cost per unit, I cannot simply add up both of this and take 6,000 as denominator. Why is that? They both are not for same level of work. Same level of work. So in order to calculate cost per unit, I need to have equivalent units, which is equal in terms of work completed. So 5,000 100% work done, whereas 1,000 knows. But if 100% work done, how much I would have completed, sir? 600 completed units. Now I can add up both and take it as a denominator to calculate what? Cost per unit. So you can see equivalent units I have given. Equivalent production means converting the incomplete production units into equivalent number of completed units. Guys, it is just a notional calculation. Sir, does it mean that 600 units are completed? Can we go and sell it in the market? No, no, no. I am not selling it in the market. This is only for calculation purpose. The term equivalent unit means a notional quantity of completed units substituted for an actual quantity of incomplete physical units. What is the incomplete actual physical units? 1,000. If I convert that into equivalent number of units, this is notional. This is notional. Incomplete physical units in progress. Sir, how do I get it? Simple. Equivalent units of work in progress is equal to actual number of units in progress into percentage of work completed in that period. That is also important, guys. Listen here. Now assume there is an opening WAP of 100 units on which 40% work is done, and there is closing WAP of 500 units on which 75% work is done. You tell me on this how much work is done in the current period? How much work is done in the current period? 60%. Why, sir? 40% was already done last year. Remaining we will complete. Will we start again from zero? No. Whatever is remaining, we will do it first. So 60% is the work done in the current period. So if I ask you what is the equivalent unit, it would be 60 here in the current period. Current period. Whereas on closing WAP, how much work I have done? 75%. When I have done this? Current period. So what is the equivalent unit? 500 into 75%. 375. Got it? Hope you understand. So, for opening WIP, should we take work completed or work remaining? Work remaining. For closing WIP, we need to take work completed or remaining? Complete. That is in simple. Whatever we have done in the current period. Whatever we have done in the current period, guys. Oh. So accounting procedure. Whenever there is a work in progress, sir, what is the accounting procedure? Step 1. Prepare statement of equivalent production. Step 2. Prepare statement of cost per equivalent unit. Then prepare statement of evaluation. At the end, prepare process account as usual. Okay. Sure. Format for equivalent production, guys. Statement of equivalent production. First take inputs. Input opening WIP will be there plus unit introduced during the current period. Means how many units are introduced into the manufacturing process. Then you try to tally that with output. We'll come to this part later. First we will try to tally with output. Units completed you take. That is nothing but output transfer to next process. Then normal loss. Normally will be given as a percentage. And guys, here when they give percentage, you need to take it on both most of the time. If they clearly give only 10% on unit introduced, you will take only on this. They will tell 10% on both, including opening WAP. Then you have to take on both 10%. Clear? Yes, we took it, sir. Then closing WAP, they will be given in the question. Now try to tally this. It won't be matching. The balancing figure would be abnormal loss. Clear? Sir, what if by chance if output only is more? Then the difference is abnormal gain. You need to deduct it. If there is abnormal gain, you have to show it as a negative loss. Clear? First you do this. Try to tally the output with input. Here normally the abnormal loss would be the balancing figure. Clear? Or else if output only is more, then you will have abnormal gain loss. Hope you got it. Clear? Once I ensure that yes, these both are equal, sir, then I will proceed further. Clear? And if there is abnormal gain, first total up, this will be more. Maybe here you will show abnormal gain, how much ever is there. Clear? Then you will get one more number. Try to match that with this. Clear? Yes. If it is abnormal loss, you can show it here only as positive. As positive. Any doubt, madam? Got it now? Yes. Sure. Once I am done with this two, I will proceed further to calculate equivalent units. Equivalent units for 100 units completed, it will be always 100% percentage of work done. So we will get same units. Same units. It also depends on the methods, which I will explain later. Then for normal loss, we never take units. Why is that? Simple, guys. We are calculating the units to calculate the cost. So while calculating the cost, will we value the normal loss units separately? No. Whatever is the cost of normal loss will be absorbed by good units. So automatically, whatever is the remaining units, the cost of which will become more. So we will not take anything in the units column here for normal loss. Whereas for abnormal loss, take whatever percentage they have given as percentage completion work. That is the degree of completion. If nothing is given, consider 100%. Consider 100%. Then closing WAP, they would have given it accordingly. Take it. Clear. And with respect to degree of completion, sometimes they may give for labor and overhead same percentage. In that case, you can club both and write one column, labor and overhead. If they have given it separately, please show separately like this. No, sir, they have given same percentages. Then in that case, you can club and write under 1, under 180. Oh. Now we got equivalent units for material, labor and overhead. Take it to the next calculation. Statement of cost per equivalent unit we are calculating. What do we do? Take each of the material, labor, overhead cost. And if at all, if there is any scrap, value of normal loss units, reduce it from material cost. For this normal loss units, if you are getting any scrap value, reduce it from where? Material cost. Take the net. That is material cost minus scrap value of normal loss units, remaining you take. Okay, sir. Then take labor and overhead cost also. Then whatever equivalent units you have got here, consider here. Divide each other. Cost by equivalent units. What do you get, sir? Cost per equivalent units. Clear? Here if you do, you will get total cost per equivalent units. This is element wise, material labor overhead. If you total up, you will get cost per equivalent unit. Using this, we will calculate the cost of output, closing WAP and abnormal loss, for which we need to prepare something called as statement of evaluation test. We need to prepare statement of evaluation to calculate what and all, sir? Value of abnormal loss, value of closing WAP and value of output transferred to next process. For that, what values will we take it, sir? Cost per equivalent unit. I have given some notes here. For normal loss, no equivalent unit is calculated. As normal loss unit is observed, whatever is the cost of normal loss units are there, is observed by whom? Good units. Good units is nothing but now here. This units guys, remaining units. Then, if degree of completion for abnormal loss unit is not given, you will take 100%. Same way for abnormal gain, you will take the degree of completion as 100%. But please be careful, if it is abnormal gain, you have to show it as a reduction here. Whatever is the units. Okay. If the degree of completion for opening WAP is given in the question, then you are supposed to follow FIFO method. Sir, what if degree of completion for opening WAP is not given in the question? Then you will follow weighted average. Yeah, see, normally in the question, they would ask you to follow the respective method. But they have not mentioned the method, but they have asked you to do statement of equivalent production, statement of cost, statement of evaluation. Sir, how do I do it? Check for opening WAP. Have they given the degree of completion? Degree of completion means how much work is done. If it is given, you can follow FIFO method. Sir, no, sir, opening WAP, degree of completion is not given. Then you have to follow weighted average method, guys. Now, to prepare all this, we have two methods available. What are those, sir? FIFO method and weighted average method. I have given it here theoretically, but let me explain it through the numbers. That would be better. Yes. Let us learn from this. Yes, pay attention. Look here. We will go step by step. First one, statement of equivalent production. Chetan, look at me. Look at me, man. No. Chalo. Opening WAP, 3000 is there. Sir, have they given the degree of completion for opening WAP? No, only cost they have given. That means which method can I follow? Weighted average. Weighted average. Okay, let us follow weighted average. Then unit increase during the current period, how much? 42,000. So totally we have an input of 45,000. Now they are given the data. Units completed and transferred to next process, which is nothing but output, is how much? 36,000. Then normal loss, they have told 4%. 4% of what? Both. So 45,000 into 4%, 1,800. Then closing WAP also they have given 4,200. They would have given it in the question. Okay. Then abnormal loss is not given. Find it out as balancing figure. 45. But if you do here, you will be getting 40. So try to match it by keeping abnormal loss balancing figure 3,000. Now both are matching, sir? Yes. Go ahead. Once we are done with this, tick. Next part. Equivalent production. I am doing it for material separately, labor and overhead together. Why, sir? Because for labor and overhead, they have given the same percentages. Now, under weighted average method, hello, under weighted average method, we need to take 100% for work completed and transferred to next process. How much is from opening WAP and all, we don't care. Okay. So 100%, 100% we will take. Then for normal loss, we don't take anything in the units column. Please be careful with this. Oh, then abnormal loss, they would have given. Yeah, they have given here. Accordingly, take it. If nothing is given, you can consider 100, 100. Clear? Then for closing WAP also, they would have given. How much, sir? 150. Okay. So 100 here, 50 here. Take it. So we got equivalent units. Which method we are following? Weighted average. Very good. Now, statement of cost. Statement of cost, we need to take total cost, guys. Total cost means cost of opening WAP plus current period cost. What is the cost of opening WAP? They have given you. Plus current period cost, they have given here. Add up everything. Add up everything. And from material cost, we need to deduct one thing. What is it? Scrap value of normal loss units. This one. You can observe, I am reducing it from current period material cost. Clear? So we took cost of opening WAP as well as current period cost. Guys, one thing you should know. This is the cost incurred in the current period or last period? Last period. But under weighted average method, we don't have any separate treatment. Cost is cost. Just take it and calculate weighted average price. Just calculate weighted average price. Okay. So once you get total cost, how did you get total cost? Cost of opening WAP plus current period cost. Okay. Divided by equivalent units. Equivalent units. You get cost per equivalent units. I call it as weighted average price. I call it as weighted average price. For material, labor and overhead we have got. Per unit how much? 136. Using this, we can prepare statement of evaluation. Statement of evaluation. Okay. Cost of output is how much? 36,000 units into per unit straight away take 137. Multiply. Oh, we got it. For abnormal loss, please be careful. 3000 is actual units. But for calculation, you need to take equivalent units. Because whatever cost we have calculated here is for actual units or equivalent unit? Equivalent unit. So for material, how much, sir? And 3,000. For labor and overhead, how much, sir? 2,100. Multiply with respective cost. 3,000 into 85 for material. For labor, 2,100 into 12. For overhead, 2,100 into 40. Clear? What did I take here is not actual units, equivalent units. Why is the simple logic? This is the cost per equivalent unit. Okay. Then coming to closing WAP, actual units is 4,200. But I need to take equivalent units here. What is the equivalent units, sir? 4,200, 2,100. Multiply it with the respective cost. 4,200 into 85, 2,100 into 12, 2,100 into 1. Clear? Guys, here my intention is not to solve the question. I am explaining you how to apply the concept. Clear? Yes. Because if you know the concept, if you know how to apply it, sir, that is more important for you now. Clear? Solving questions we will take care. That is separate. Clear? Just sure. Now we got the closing WAP cost. Add up everything. Guys, under weighted average method, this figure has to match with this figure. The total year has to match with the total year. There should not be any difference. Clear? And if by chance if you have got any of this as decimal, maybe some minor difference you get, you better set it up here. As the last amount, you just set it up. This will be only if you are getting this as decimals. Clear? Hope you understood. Which method did we solve, guys? Weighted average. Under weighted average, what work we did when and all we don't care. Sir, in the current year, we have completed this many units, just transfer it. And we take total cost here. When we have incurred it, we are not bothered. Clear? Same question. Now let us solve under FIFO. Under FIFO. Now they have given the degree of completion for opening WAP. Material 100% expense, labor and overhead 50% expense. Pay attention. Sir, input is same story. Output. How much is the output? Transfer to next process 36,000. But there you give a breakup. How much is from opening WAP? 3,000. Remaining is how much, guys? 33 is out of current year introduction. You know, under FIFO, they are only bothered about what did I do this year? What I have done this year. What I have done last year is for last year. What I will do for this year is for this year. Clear? Now, as soon as I begin the show in the current year, first I will complete the incomplete units and sell it. Remaining only I will produce from here. So totally my output is 36,000. Out of that 3,000 is from here, remaining 33 is from here. Hope you understood. Okay. On this 3,000, am I doing 100% work now? No. Sir, with respect to material, already everything is done. So 0% work. With respect to labor and overhead, 50% is already done. What is remaining? Another 50%. Another 50%. So we need to take only that. Hope you're understanding. See, sir, what if this was 40%? Should I take 40 or 60 here? 60. Remaining work. Remaining work. Oh. Then out of current period introduction, how much I have produced out of this? 33. When did I start working on this? Current period. When did I complete? Current period. That means 100% work I have done. 100% work I have done in the current period itself. So what is the equivalent unit? 33, 30. Rest all will remain same as. Rest all remains same. Only difference is this part. Hope you understand. Under weighted average, what we did? We simply took 36,000 into 100%. Into 100%. Correct? Huh? That's all. Weighted average. We never bothered about what did we do exactly in this year, how much we had done last year. No. We didn't. Clear? Okay. So under FIFO, we only considered what is the work we have done in the current period. So we got the equivalent units this. Same way, even when it comes to cost, should I take total cost or only current period cost? Only current period cost. Sir, what is the logic? Guys, simple. While calculating the equivalent units, did we consider only the work done in the current period or full? Only the work done in the current period. Same way. Here we need to take only the current period cost. Divide it by equivalent units. Here also scrap value and all you have to reduce, which is same. So we will take only current period cost divided by equivalent units. What do you get? Cost per equivalent unit. Is it for the current period or weighted average? Current period. So simple guys. Current period cost divided by current period work. You will get cost per equivalent unit in the current period. In the current period. Now coming to statement of evaluation. Here it is important. Sir, here I need to transfer the output to next process. No, sir. There, should I take 36,000 units or only 33? How many units I am transferring to next process? 36,000. So take fully. So out of 36, how much is out of opening WA? 3,000. On that, we already incurred some cost in the past year. Take that. This is the cost of opening WA. Clear? Which I used to take here, na? Under weighted average method. Whereas under FIFO, we are taking it separately. Okay. So what is this, sir? Simple. Cost of opening WAP, which was incurred in the last year. For that, we need to add on opening WAP, how much cost is incurred in the current period. Sir, how do you get it? What is the equivalent units for opening WAP? Material 0. For labor and overhead, 1,500. So take 1,500, 1,500 for labor and overhead. Multiply it with the cost per equivalent unit. So you will get 76,275. Guys, someone. This is the cost which was incurred on opening WAP in the last period. To complete how much work? 50% work. Sorry, 50%. 100% with respect to material and for labor and overhead, 50%. Now, remaining work is done in the current period for which we have incurred cost of how much? 76,275. Now, what is the total cost of 3,000 units? 379, 175. What is the total output? 36. We have only got 3,000 cost. Remaining 33 is completely done in the current period. So 33,000 into what is the cost per equivalent unit? Total I will take 137.7. 137.7. Now if I ask you what is the cost of 36,000 output which is transferred to next process? This figure is clear. Then abnormal loss and WAP will remain same. And here if you do total, this total will not match exactly with this. The difference is nothing but this figure. Clear? The difference between this and this is exactly equal to this. Got it? Yes. Hope you understood. Because simple. I considered this figure in this calculation, but I didn't consider it here. That is why that difference. Under weighted average, exactly it will match. Whereas under FIFO, the difference would be the cost of opening WAP incurred in the last year. Clear? Let me summarize that. Let me summarize only this, not the entire chapter. Till now, I'm doing that only. Under FIFO, I'm only bothered about what did I do in the current period. What work did I complete in the current period? What cost did I incur in the current period? So we only consider what work we have done as well as what cost we have incurred in the current period. Clear? Whereas when calculating the cost of output, we will take the even cost of opening WAP. Whereas under weighted average method, work done is work done. Just take it. 36,000 work units are completed and transferred to next process. Take it as 100%. Even in the cost, take total cost. Open and WAP cost as well as current period cost. Divide the total cost by equivalent units. You will get weighted average price. That is cost per equivalent unit. Yeah. And once I do this, if they ask you to prepare the process account and all, guys, easy. Process account and all, easy. See, open in WAP 3000. For that, cost would have already been given in the question. Take it. Sir, instead of presenting it individually like this, can I add up everything and put one amount here? That is also fine. Then this is the cost incurred in the current period. Take it. Okay. Then on the credit side, normal loss 1800 units. Scrap value 1,12,500, which we will take here, which we will get here. Yes, 1,12,500. Take it. Then abnormal loss 3000 units. 3000 units. What is the cost of it? 367,335. Then closing WAP, how many units? 4,200. What is the cost of it? 471,790. Take it. Even output, how many units are there? 36,000. What is the cost of it? 4923,275. One thing you have to be careful here is, guys, see, while doing the statement of evaluation for closing WAP, abnormal loss and all, we will take the equivalent units for calculation. But in the process account, when you are presenting, please take actual units, or else units column will not match. You need to present what in the units column? Actual units, not equivalent units. Yeah. And whatever cost we write here is nothing but what I would have got in statement of evaluation. Statement of evaluation. Got it? Yes. And if there is any scrap value of abnormal loss, then you will record it separately, guys. You will record it separately. Where is that? Just a minute. Yes, you can see here. First, write whatever you have transferred from process, that is, this figure has to come there. Then, if there is any scrap value of abnormal loss units, record it here. And the balance net loss, transfer it to costing P&L account. Costing P&L account. Okay, sir. Normal loss also same way. Whatever is transferred here, bring it. Later, receive the scrap. Receive the scrap. Yes, sir. So this is all about FIFO and weighted average method, guys. Okay. What is the main difference? I already explained it. Let me go through it once. The main difference between FIFO method and weighted average method is that units of opening work in progress and their costs are taken in full under average method. While under FIFO method, only the remaining work done, that is the work done in the current period, is considered. Then one small topic in this chapter called operation costing is covered. Operation is different, operating is different. Clear? Operation means, guys, I am producing the same products but in different varieties. Different varieties. So manufacturing process is same, sir, but the raw material which I use is different. The raw material which I use for each kind of variety of output is different, whereas the process is same. Whereas the process is same. For example, assume I am a shoe manufacturer. Clear? So I manufacture different types of shoe. The process is same, but depending upon which shoe I will manufacture, the raw material also will change accordingly. Clear? Yes. Process is it same, sir? Yeah. So operation costing is nothing but when you are producing the different varieties of same product using different raw material, but the same manufacturing process. We call it as operation costing. Let me do. This product costing system is used when an entity produces more than one variant of final product using different materials, that is raw material, but with the same conversion activity. Conversion activities means manufacturing process, which means conversion activities are similar for all the product variants, but material will vary significantly. Operation costing method is also known as hybrid product costing system, as material costs are accumulated by what? Either job order or batches, because material will vary from product to product or from batch to batch. Say, same kind of shoe, I can manufacture 100, So in that case, can I follow batch costing? Yes. Next. But conversion cost, that is labor and overhead costs, are accumulated by department wise or process wise. So in the manufacturing process also, I might have different processes. Process 1, 2, 3 like that. So for conversion process, I can either follow department or process costing method. Better is process costing method to assign this cost to the products. Example of the industries which will follow operation costing is ready-made garments, shoemaking, jewelry, etc. Clear? Yes, sir. So this is all about the process costing chapter, guys. Yes, now we will revise chapter 11, which talks about joint and byproducts. Guys, this is like a continuation from process costing. So at the end of process, if we get two or more products which are of same value or equal value or same importance, we call them as joint products. No, sir, one product is higher value, the other product is lower value. Then we call it one product which is having higher value as main product and the other one as byproduct. Let me try to explain this with an example. Then we will go through whatever is there. Guys, assume I am using milk as a raw material in my production process in order to produce two products, butter and cream. My intention is to produce both the products. My intention is not to produce only one product. My intention is to produce both the products. Out of what, sir? Milk. And both of them are coming out of same process. Same process. So till this point, butter and cream doesn't have any separate identity. Only at this point they get their separate identity. And that point is called split off point or point of separation. Until here, whatever cost might be incurred from the beginning of production till the split off point. Sir, we don't know how much exactly I have incurred for butter, how much exactly we have incurred for cream. We call it a joint cost. So why do you don't know? Because they got their separate identity only at this point. So any cost which is incurred up to this, I don't know individually how much I incurred for butter, how much I incurred for cream. So we call it as joint cost. Now, few of the joint products can be sold at this point only. Again, let me tell you, sir, why do we call this as joint products? Guys, they are resulting from the same process, same raw material, and they are almost having same value. Means need not be exactly equal, but almost they are having same value as. Correct? Yes. Now, at this point, they got their identity. The company has an option. They can either sell these products at the split off point only, provided there is a ready market, or else they can further process this and sell it as next product. Clear? For example, assume they want to further process butter into ghee and sell it. It is their option. Sir, if the ready market is available for butter, they can sell butter itself. If not, they can further process it into ghee and then sell ghee. Choice is this. Clear? Or sometimes for butter, means for butter there is a ready market, but one of the joint product, assume for cream, there is no ready market, sir. Customers will not buy it as it is. I need to further process and sell it. Then you don't have a choice to sell here. You have to further process and sell it at this. Clear? Whereas for few joint products, company will have an option. They can either sell here or further process that and then sell it as the next product. In that case, what do we do is we will compare. If I sell here, what is the sale value? If I sell here, what is the sale value? For example, let me take another example. Guys, just listen. Now, sir, raw material, I started manufacturing through a raw material. I have incurred a joint cost up to split off point. At the end of split off point, I got JP1, JP2, joint product 1, joint product 2. How much quantity, sir? 100 kg, 120 kg. Now, if I sell it at split off point only, I will get a sale value of 80,000 and 90,000. Company can sell it. Or else, if they further process JP1, they will incur a cost of 10,000. We call it as further processing cost. And if they sell, they will get 1 lakh. 1 lakh. Now you tell me, should I further process or sell at split off point? See, if I sell at split off point 80, if I further process and sell 1 lakh. So what is the additional sales, guys? 20,000. For this additional sales of 20,000, what is the additional cost I will incur? 10,000. So there is an incremental revenue of how much? 10,000. Means my profit will increase by 10,000 if I further process and sell it? Hope you're understanding. So this kind of questions can come. This kind of questions can come. Should the company sell the joint product at split off point, or should they further process and sell it? Simple. Take incremental sales. Incremental sales means what is the additional sales we will get? 20,000. For further processing, what is the additional cost you will incur? 10,000. Deduct each other means 10,000 minus 20,000, you will get 10,000 positive. That means you can further process and sell. Same way here. Assume like JP2. If I sell it at split off point, 90,000. If I further process and sell it, I can sell it at 1,20,000. So what is the additional revenue, sir? 30,000. For this, what is the additional cost I have to incur? 15,000. So if I further process and sell, what is the additional income I will earn? 15,000. Means the profit of the company will increase by 15,000. Clear? Sir, what if by chance, if this is, okay, I'm just changing it. Assume this is like only 95,000. 95,000. Don't just compare this. Additional sales is 5,000. But for this, I have to incur an additional cost of how much? 15,000. That means there will be a loss of 10,000 if I further process. There will be a loss of 10,000 if I further process. This is one of the decision making guys. They may ask you, should the company sell the joint product at split off point or after further processing? Or after further processing? Yes, sir. Now, one more important task in this chapter is, sir, this cost I have incurred for both JP1 and JP2, no, sir. How do I distribute it to JP1 and JP2? Should I first of all distribute it, sir? Yes, because guys, ultimately company want to know what is the profit made from JP1, what is the profit made from JP2. Hey, here, coming late and JP1, how much profit we have made? JP2, how much profit we have made? For that, we should know individually what is the cost of JP1, what is the cost of JP2. So for that purpose, we need to distribute this 1 lakh joint cost between JP1 and JP2. Sir, oh, we have various methods available. We have various methods available. Same way in this example also. Sir, I have incurred 1 lakh expenses for both butter and cream. Now, how much for butter, how much for cream? I need to distribute it or apportion it in the ratio. Various ratios are available. As per the method, we will choose. Yeah. And what is the main purpose of doing this? I am repeating again. What is the main purpose of distributing or apportioning the joint cut between the products? Sir, I want to know what is the profit made by each product. If you want to know the profit made by each product, you should know what is the cost of each product. Cost also includes what? The joint cost. See, further processing cost, no doubt. Sir, we know for how much is incurred for which product. It is individually incurred. Whereas this cost is jointly incurred. So we need to split this 1 lakh between the joint products. Hope you understood. Okay, so the main task for us is to split this. Okay, quickly we'll go through. Joint products are those products which are produced simultaneously. Did I separately produce them? No. It is coming from the same process, same raw material. From the similar process of manufacturing of equal importance. Guys, both the products are almost having same importance. Clear? That is why we call them as joint product. Sir, what one product is having higher value, the other product is having lower value. Then we call it as main product and byproduct. Clear? Yes. The point where the joint cost get identified is known as what, guys? Split off point, or we also call it as point of separation. Point of separation. In my example, this part, where the joint products got the separate identity. Examples of, okay, cost incurred up to split off point is known as joint cost. Example of joint products in the oil industry is gasoline, fuel oil, lubricants, paraffin, coal, tar, asphalt, and kerosene are all produced from where? Crude petroleum, which is a raw material. Okay, I have also given on diagram here. Where are you? Yes. You can see joint input, common production process. From that, we are getting 3 joint products. What are those, sir? Oil, gasoline, chemicals. If it is separately processed, then I can sell it. Sir, can I sell it at this point only? Maybe yes, if there is ready market available. If not, you need to further process it and sell it. Clear? For example, here they have given gasoline. I am selling as it is at split off point only. Whereas this too, we are further processing and selling it. Further processing and selling it. Oh, coming back. So joint products imply the following. These are the features of joint products. What are those? Everything I have already explained one by one. They are produced from the same basic raw material. Yes, so in my example, it was milk. They are comparatively of equal importance, that is butter and cheese. They are produced simultaneously by a common process. Sir, is the production process same? Yes. They may require further processing after the point of separation. I have mentioned may. It is always not must. Clear? If required, we will further process and sell it. If not, can I sell it at split off point only, sir? Yes, few joint products would be sold at the split off point only. Okay. Now we have understood joint products. Sir, what is byproducts? What is byproducts? So, guys, I started manufacturing my product. My product is main product. Clear? My intention is to produce only this. But in the process, I also got one more byproduct, sir. I also got one more byproduct, sir. Yes. Will I accept it? Obviously, yes. I will not throw it away. I will not throw it away. And this is having lower sale value when compared to the main product. For example, assume this I am selling 1000 rupees per unit, whereas this I am selling at 50 rupees per unit or 20 rupees per unit. Clear? Guys, this is like secondary product. My intention was not to produce this. My intention was to produce main product. Incidentally, in the process, I also got byproduct. I am not throwing it away. I am also selling it for a lower value. Or maybe I will put it for a scrap and get some scrap value. Clear? Yes. So this is bringing some additional revenue to the company. Clear? Earn in this case, sir, there is a joint cost incurred 1 lakh for main product and byproduct. How do I split it? How do I split it? In this case, what we do is, guys, first we will calculate what is the share of byproduct in the joint cost. Remaining, we will give it to the main product. Remaining, we will give it to the main product. For example, assume we got 10,000 as share of joint cost to the byproduct. Remaining 90,000 will go to the main product. Clear? For this also, we have various methods. What are those? We will discuss later. First, we'll understand the concept of joint and by. Here. Now, sir, what is the main difference between joint products and main products? Guys, see the value. Okay, so here byproduct only 50 rupees when compared to main product. Sir, what if this is also almost equal to 1000? Then we call this as joint products. Joint products. If they're almost off, I'm not telling you exactly equal. Here, was it exactly equal? No, but almost same. Correct. So can I call them as joint products? Yes. But here I cannot call them as joint products. Clear? Example, sir. Example. Sir, while manufacturing sugar from sugarcane, we get molasses. Clear? That is a byproduct. Same way, while manufacturing soap, soap is my main product. We will get glycerin. Glycerin, you know, no? Yes, sir. Same way. Okay. This is not from manufacturing point of view, but let me mention. Sir, my investments, my main aim is to earn capital gains, which is the appreciation in share price. But as a byproduct, we also get dividends. Correct. So we'll get some small amount of dividends off. That is like my byproduct. Clear? This is from investment point of view. Please don't give this example in your exam. Clear? Yes. Sir. Byproducts. Byproducts emerge as a result of processing operation of another product, or they are produced from the scrap or waste of the material of a process. Guys, this can also happen. For example, especially in textile industry, clear? They will have waste clothes and all. Through that, they will make a mat. Doormat, you know, na? In textile industry, whatever waste clothes they will have, they will not throw it away. They will make out of that maybe something else they may stitch or the doormat. I have literally seen that. Clear? Sir, is this a byproduct? Yes. So using the waste which will come in the manufacturing process, we are manufacturing now. Means the other product, not our main product. Clear? Yes, sir. In short, a byproduct is a secondary or subsidiary product. All this can be your MCQ. Byproduct is my not main product. It is not my primary product. It is my secondary or subsidiary product, which emanates as a result of manufacture of main product. My intention is to produce main product. In the same process, incidentally, I got one more product. The point at which they are separated from the main product or the products is known as split off point. Cost incurred up to split off point is known as joint point. This is same diagram, common diagram. Examples I have given of byproducts are molasses in the manufacture of sugar and glycerin obtained in the manufacture of soap. Soap would be main product, sugar would be main product. Whereas what is byproduct? Glycerin and molasses. What is the difference? Main difference between the joint product and byproducts. Joint products will almost have same importance, whereas byproduct will have lower value when compared to main product. Joint products are produced simultaneously, whereas byproducts are produced incidentally. Means it will also come from the same process, but my intention was not to produce that. So it came incidentally out of the process. Now coming to co-products, co-brothers. You know Cobra, co-brothers. Like that. So co-products means, sir, companies manufacturing the same product in different varieties. Different varieties. See, even in last chapter, that is process costing, at the end we learned something called operation costing. I gave an example of shoe making. I am a shoe manufacturer. I manufacture different varieties of shoe. For me, the process is same, but the raw material is different. Correct? Yes. Similar to that, co-products. Means the same product and manufacturing in different varieties. Examples I have given here. Assume I am a fan manufacturer. I manufacture ceiling fan, table fan, pedestal fan, cabin fan. And here, what they are telling is, your raw material may be same or different. Even the process might be same or different. It can be reviewed. In operation costing, they told raw material would be different, but the process would be same. But here, for co-products, it can be same or it can be different, depending upon what exactly you are manufacturing. Let us read it. Co-products are a particular type of products, but produced in different varieties. These products may not necessarily arise from the same operation or raw materials and may be produced in different quantities without any correlation to others, according to the needs of the market. Clear? Sir, can it be produced in the same process? Maybe yes, but may not be always. May not be always. Clear, sir? Can we have different process? Yes. Next, coming to apportionment of joint cost price. So now we have seen what is joint products. What is joint cost also we have understood. Sir, how do we apportion it? I told you. Now dividing this 1 lakh between butter and cheese is my task. For that we have various methods. What are those? One by joint costs are expenditure incurred up to the point of separation or split off point. The commonly used methods for apportioning joint costs over the joint products are as follows. One by one. First one, physical unit method. Means whatever is the quantity of output at the end of split off. Let me take this example. What is the quantity of output at split off point? 100 kg, 120 kg. We will take that as a basis. We will take that as a basis to apportion joint cost. How much will go to JP1 guys? How much will go to JP1? 1 lakh into 100 divided by total 220. 220. How much will go to JP2? 1 lakh into 120. Yes, I will show you. 1 lakh into 120 divided by 220. 220. Hope you understand. This is for JP2, whereas for JP1, 1 lakh, I am showing it again, into 100 by 220. Got it? So how will you get 220? 100 plus 120, 220. Clear? So whatever is the quantity of output at split off point, we will take that as a basis class. I will show you one more example. Yes, you can see this is the units of output. This is the units of output. Using this as a basis, this all are joint products. Using this as a basis, we will apportion the joint. Sir, what if there is any loss in the process? In this process, what if there is any loss? Even that loss also will be apportioned in same ratio, guys. Same ratio. Clear? That is the quantity of joint products at split off point. Yes, the first one. Under this method, the basis are used for apportioning the joint cost over the joint product is the physical volume of materials present in the joint products at the point of separation. Any loss arising during the stage of processing is also apportioned over the products on same basis. Same basis means what, sir? Quantity of output. This method cannot be applied if the physical units of the two joint products are different. If physical units are different, for example, sir, one is in kg, another one is in liters, sir. Can I apply this method? Maybe not suitable. Maybe not suitable. Physical quantity is different. One is in kg, the other one is in liters. So this method is not suitable. Look for the next one. Next, what is it, sir? Net realizable value at split off points. Guys, important. Important method. What do we do? Guys, we will just do reverse calculation. What is it, sir? Please listen. I will take the sale value after further processing and whatever has happened in this process, I will deduct it. I will try to get what? The value of the joint product at this point. At this point. That is nothing but NRV. And we use this NRV as a basis to apportion joint costs. We will use NRV as a basis to apportion joint costs. Sir, how is it? Simple. We will take sale value after further processing minus further processing cost. And if there is any estimated profit, you reduce that also. Then, if there is any selling and distribution expenses, that will come only at this point because you are selling when after further processing, reduce it. Yeah, sometimes further processing cost itself might include selling and distribution, or else they might give separately. However, they are given, take it, deduct each other. Means from sale value, you will reduce three things. Guys. What are those? Estimated profit, selling and distribution overhead, and also the further processing cost. What do you get now? You will get the value of the joint product at the split off. Correct? We did reverse working. Use that as a basis. Use that as a basis to apportion joint cost among joint products. So I have given an equation here. How do we calculate NRV? Estimated sale value of joint products after further processing. From that, reduce three things. What are those, sir? Estimated profit, selling and distribution expenses, further processing cost. What do you get? NRV. And we are using this as a ratio to apportion joint cost among joint products. See, I have given all three here. Sometimes estimated profit and selling and distribution expenses may not be given. Ignore. If this two is not given, straight away it is only further processing cost, you will get NRV. If it is given, please deduct that also. Clear? Yes. I have one question for it. I will just show you. How do you present it? Yes. You can see this is the sale value of the joint products. Product A and product B is the joint products. We have taken sale value after further processing. Then from that we are reducing further processing cost. Estimated profit, selling and distribution expenses is not given. So this is my NRV. 3:2 ratio. Divide joint cost. Total joint cost is 64,500 and divide it into 3:2 ratio. 3:2 ratio. What is the 3:2? Net realizable values. And please be careful, as I mentioned you, if they have given estimated profit and selling and distribution expenses, please reduce the cost to calculate NRV. Guys, what is NRV is nothing but the value of the joint products at split off point. At split off point. I am calculating, I am taking sale value after further processing and doing the reverse calculation so that I will get the value of joint products where at split off. I am taking that as a ratio to apportion the joint cost. Okay, sir. Next, using technical estimates, normally the top level management will fix, okay, in what ratio should you split joint cost? 1:1, 2:1, they will fix the ratio. In that ratio, we will split the joint cost between joint products. This method uses technical estimates to apportion the joint cost over the joint products. This method is used when the result obtained by the above method does not match with the resources consumed by joint products or the realizable value, sale value of the joint products are not readily available. Means, sir, we are not able to apply this method, or if I apply this method also, they are not giving the proper results. They are not giving the proper results. In that case, which is better, sir? Technical estimates. Technical estimates means the company will do deep research. How much each joint product is consuming the resources, means how much money might be spent for each joint product, and they will fix the ratio. And as per that ratio, we need to split the joint cost. Next, other methods. Other methods. The following are the methods which are used by management for taking managerial decisions. Which are those, sir? Market value at the point of separation. Market value is nothing but sale value. Sale value. Okay, sir. Guys, see, this method can be followed only if joint products can be sold at split off point. Can be sold at split off point. Assume here both the joint products can be sold at split off point. What is the sale value? 80,000, 90,000. Take 8 is to 9 as the ratio. Take 8 is to 9 as the ratio to do what? To split joint costs between joint products. The sale value, guys, please be careful. They would have given selling price also sometimes. Don't take selling price. Multiply selling price with the quantity of joint products. You will get sale value. Now take sale value. For example, assume selling price they have given 100 here and 120 here. Selling price I am telling you. Will you take 100 and 120 as a ratio? No, no. You need to multiply this with the quantity. Selling price into quantity. You will get what? Sale value. Please take sale value as a base or as a ratio. Because some students by mistake they will take selling price. If quantity is different, if quantity is same, it will not make any difference. For example, here also quantity is 100, here also quantity is 100. In that case, you can straight away take selling price only. Clear? If quantity is different, please don't take selling price straight away. Multiply selling price with quantity, you will get sale value. Take that as a wish. Okay, sir. Let me read. This method is applicable when the joint product has a ready market without any further processing. It is useful method where further processing costs are incurred disproportionately. Disproportionately means, guys, what cost is like 10,000, here only 1,000. Too much difference is there. Or else here 10,000, whereas here 50,000. Difference is there, no? Yes, sir. Next. In such a case, joint cost will be allocated in the ratio of sale value, not selling price, of the joint products at split off point over the joint products. Next, second alternative available here is market value after further processing. This you can take only if all the joint products are further processed. Oh, in that case, what do we do, sir? We will take the sale value after further processing as a ratio. So I can take 100 is to 120 as a ratio. What is this, sir? Sale value after further processing. After further processing. Next, average unit cost method. Average unit cost method is simple. Divide the total joint cost by total output of joint products. Total output of joint products. What do you get? Average cost per unit. Average cost per unit. For example, I will show you. One question is there. See guys, in this case, joint cost is 60,000. There are 3 joint products which we have produced. The total of this is 1,000. So if I divide 60,000 by 1,000, what do we get, sir? 60 per unit. This is on an average. What is the cost per unit? So multiply that with the respective units. What do you get, sir? Share of joint cost for each joint product. But what is the disadvantage of this method is they are giving a same cost for all the joint products. Same cost for all the joint product. If it is having exactly equal importance, then you can follow this. If not, then this method is not suitable. Clear? So this is overall average cost per unit. Clear? What did I do, sir? Total joint cost divided by total output of all the joint products put together. Oh, we got average unit cost method. Last one is contribution margin method. This is a bit lengthy, guys. So here, what should we do is when we have a joint cost, we need to check how much is variable, how much is fixed. The variable portion of joint cost has to be apportioned to whom? Has to be apportioned to the joint products in the physical quantity. In the physical quantity. Whereas the fixed element of joint cost has to be apportioned in contribution ratio. Has to be apportioned in contribution ratio. What is it, sir? Just a minute. Yeah, let me take this example. Listen, guys. Sir, joint cost is 10,000. In that variable is 6,000, fixed is 4,000. Okay. There is two joint products, JP1, JP2. What is the output? 1000 kgs, 800 kgs. Further processing cost also they have given. Sir, how much? Variable 3, fixed 2 for JP1. Whereas for JP2, variable 4,000, fixed 2,000. Fixed 2,000. Okay. Then sale value is how much? This is for JP2. Sale value after further processing for JP1 is 20,000, whereas for JP2 is 25,000. Okay. Now what should I do? Guys, this 6,000 has to be apportioned in quantity ratio. Physical output of joint products. What is it, sir? 1,000 is to 800. You can observe here. So in this 6,000, how do we apportion it, sir? In this ratio. Got it? How much we got? 3,333 and 2,667 for JP1, JP2. Hope you understand. We have just apportioned this. Now coming to this. Sir, how do I apportion the fixed cost in contribution ratio? Sir, what is contribution? Sales minus variable cost is my contribution. Guys, if they have given both the variable cost, you need to deduct total variable portion. Total variable portion. Let me do that here. Sale value after further processing I am taking. From that, I am reducing all the variable costs. Joint cost, in that how much is variable portion? 3,333, 2,667. I reduced it. Then also in further processing cost also variable portion is there. 3 and 4 reduced. You get contribution of each joint products. Now 4,000 has to be split between joint product in what ratio? This ratio. Hope you understand. Clear? Yes. Got it. Sure. And if by chance in the same case, if they ask you to find out the profit, then reduce the fixed cost here. Fixed cost means both, even this as well as this part. This part is anyway separately available. You can reduce for each product. Whereas this, you need to split it between joint products in this ratio. Got it? So from contribution, if you just reduce fixed cost, then you will get profit. Yeah. And in this example, I had given even further processing cost. How much is variable? How much is fixed? Sometimes they may not mention this. They may give only the joint cost portion. In that case, what do you do, sir? Just a minute. Yes. You can see in this question, the joint variable cost is total is this much, whereas the marginal cost, which is nothing but variable cost, is 4,400, fixed cost is 3,900. So how do we split 4,400 in the quantity of output? So you can see in physical quantity. Then how do we split the fixed cost, sir? How much is fixed cost? 3,900. Only joint cost information they have given in the question. Further processing cost they have not mentioned. So from the sale value, first take sale value, just reduce the marginal cost. Clear, that is nothing but variable portion. You will get contribution. Take this as a ratio. Take this as a ratio. That is 40 is to 12. 40 is to 12. So now the fixed portion in joint cost, we will split it in 40 is to 12 ratio. 40 is to 12 ratio. Hope you understand the difference between that question and this question. Yeah, in this case, whatever I had mentioned, even for further processing, they had given a split between variable and fixed. So when you are calculating the contribution, you have to take care of the further processing cost variable element also. Here, yes. And here I have taken the sale value after further processing. But in that question, it was at split off point. Assuming the products are sold at split off point. Okay, both the ways I have shown. Both the ways I have shown. So the most important, see, if they want to keep it lengthy, they may ask this method. But the most important method is the NRV method, guys. Net realizable value method. Okay, sir. So done with the joint products and joint costs. Now coming to the byproduct. I already explained the concept of byproduct now. Even for byproduct, there would be a joint cost. Clear. Now what do the company do is on priority basis, first they will calculate what is the cost of byproduct. What is the cost of byproducts? Now, this is my byproduct. Listen now. Listen, this is for 50 rupees. Now, what do we do is, we will calculate what is the share of byproduct in the joint cost first. Joint cost is totally 1 lakh. So, what do I do is, there is one popular method called net realizable value. Net realizable value method. So, from net realizable, how do we get net realizable value? It is like this. We will take the sale value of byproduct. If there is any further processing cost, or if there is any estimated profit, or if there is any selling and distribution expenses, if there is any selling and distribution expenses, we will reduce it. What do we get, sir? NRV. Same thing we used to do for joint products now, but for joint products, this used to be the ratio to apportion joint cost. Agree, but for byproduct, this is straight away the share of joint cost. This is straight away the share of joint cost. Assume guys, we are getting this as 15,000. I'm just taking it as 15,000. Now this will be the share of byproduct in joint cost. So how much we are getting for byproduct? 15,000. Remaining you put it to main product. Remaining is how much, sir? 85,000. 85,000. Got it. 85,000. So what do we do here is always first find out the joint cost share for byproduct. Then remaining will go to the main product. Here. And most of the time, company will not expect any profit from the byproduct. Anyway, incidentally, we will not expect any profit from it. Whatever is the sale value, straight away they may consider that only as NRV. If there is no further processing cost also, straight away sale value of byproduct, they will take it as what? NRV. Or if any of this is given in the question, please reduce it. Please reduce. Okay, sure. Methods of apportionment of joint costs to the byproducts. For accounting of byproducts and arriving at the cost of production to the main product, net realizable value method. First, this is the important method here, guys. Same way, like however we used to calculate for joint products, na same way. But the difference is, guys, we will calculate net realizable value for each of the joint products, and we will take that as a ratio to apportion joint cost. Whereas now we will calculate NRV only to the byproduct, and that straight away is the share of joint cost to the byproduct. Clear? Will we calculate NRV to the main product? No, not required. Okay. The realization on the disposal of the byproduct may be deducted from the realization is nothing but the sale value, guys. Shall may be deducted from the total cost of the production so as to arrive at the cost of main product. When the byproduct requires some additional processing, like further processing, and expenses are incurred, the expenses so incurred should be deducted from the total sale value of the byproduct, and only the net realization should be deducted from the total cost of production. And here, total cost of production is nothing but joint cost. Yes, I will show you one question where I have done this. Yes. Guys, in this question, gamma is our main product, kappa is a byproduct. Okay, company is manufacturing two products from the same process, gamma and kappa. Kappa. Sure. First, what are we doing is they are asking you to calculate the share of the joint cost. We are using NRV method. Even if question is silent, follow NRV method. Yeah. So sale value of kappa is given. They have also told company is estimating a profit of so much on the joint product. Deduct that, then further processing cost you deduct. All this are for only byproduct. Now, what did you get NRV for the byproduct? 10,600. This is the share of joint cost for the byproduct. Clear? Now, total joint cost was 39,000. In that, how much is the share of byproduct? 10,600. Remaining will be share of whom? Main product. In joint cost, this is the share of main product. Got it? Yes. And even in the exam, assume guys, they didn't ask anything about the byproduct. They asked you to find out what is the total cost of main product or cost per unit of main product. Still, you need to calculate this. Why is that? Until you know what is the share of joint cost to the byproduct, you will not know the share of joint cost to the main product. So you have to do this either as a working and then find out what is the cost per unit of main product. Clear? Even though they have not asked it, directly. Next, standard cost in technical estimates means they will tell put this much cost to byproduct. Who will tell, sir? Top level management. They would have done some research. Based on that, they will tell we will not do all this NRV calculation and all. I have already fixed one ratio. Whatever is the total joint cost, 10% of that put to byproduct. Remaining 90% is for main product. Clear? They would have fixed certain percentage on ratio. Next, comparative price method. Under this method, the value of byproduct is ascertained with reference to the price of similar or alternate material. Means, sir, now we have got a byproduct, assume molasses. If I had purchased it from outside, or if similar product is available as a substitute outside, that is in the market, what is the price of? We will record the byproduct at that price. Remaining cost will go to whom? Main product. Last one, reuse basis. Guys, in the process, we got some byproduct. I am not selling it, sir. I am using it as a raw material in my production process. I am using it as a raw material in my production process. In that case, guys, listen now. I got a byproduct. Assume molasses. Am I selling it? No. I am using molasses in the chocolate manufacturing as a raw material. Clear? So if I had purchased this molasses from outside, what is the cost I would have incurred? Record byproduct at that price. Record the byproduct at that price. I repeat, byproduct we are not selling in the market. We are using it as input in maybe the same process or some other process. Clear? In that case, if this raw material was purchased from outside, what is the cost I would have incurred? Record byproduct at that price. In some cases, the byproduct can be processed in the same process as part of the input of the process. In that case, the value put on the byproduct should be same as that of material introduced into the process. That is nothing but cost of raw material. Now, treatment of byproduct in cost accounting guys. How do we treat the cost of byproduct? First, check whether the byproduct is of small value or bigger value. Obviously, smaller value. If it is of bigger value, will I treat it as byproduct? No. Sure. When there are small total value, the amount realized from their sale may be dealt in any of the following two ways. The sale value of the byproducts may be credited to costing profit and loss account. It is treated either as miscellaneous income or as additional sales revenue. You guys would have done all this in accounts. Now, if there is any small income and all, we will just credit it as what? Miscellaneous income. Same way, the sale value of byproduct, you just treat it as what? The miscellaneous income. Or else, the sale proceeds of the byproduct may be treated as deductions from total cost. Guys, very similar to the scrap value of normal loss units. Clear? So in process costing, we learn we will debit all the expenses in process account and we will give a credit to what? Normal loss units and the scrap value of normal loss units. We will get what? Net cost. Agree, no, guys? So even in the calculation below, what do we do? How do we calculate cost per unit? Total cost minus scrap value of normal loss units whole divided by total input minus normal loss units. You will get cost per unit, right? Yeah. So in the numerator, what did we do? Total cost minus scrap value of normal loss units. Same way here they are asking you. From total cost, just reduce the sale value of byproduct. Remaining is my net cost, which will be observed by whom? The main product. Which will be observed by the main product. Hope you understood. Clear? So here they are trying to asking you to treat the sale value of byproduct very similar to the scrap value of the normal loss units, guys. Next, when the byproducts are of considerable total value, means it is considerable having higher values, higher sales value, then in that case, where byproducts are of considerable value or total value, they may be regarded as what? Joint products and not byproducts, rather than as byproducts. To determine exact cost of byproducts, the cost incurred up to the point of separation should be apportioned over the byproduct and joint product using certain logical basis, like maybe the quantity, sale value, or anything like that. Next, where the byproduct requires further processing. In this case, the net realizable value of the byproduct at split-off point may be arrived at by subtracting what? Further processing cost from the realizable value of byproduct. I already explained this method. Clear? And such net realizable value will be the joint cost attributable to 5. Is it clear? Yes. And guys, this part is important. They had asked theory question on this in one exam. I guess for 5 marks. You need to explain it. Yeah. And there can be a question on decision making, as I told you, whether joint products or byproduct. Should it be sold at split off point? Should we further process and sell? Yeah. Like as I told you, yeah, I already mentioned about it. I'm just repeating, guys. Assume this is like byproduct. Sir, here I can sell it at 15,000. If I further process and sell it, I can sell it at 25,000, sir. What is the further processing cost? 5,000. So should I further process or not? Yes. Because if I further process, I will get additional 10,000 sales. For that, I will incur an additional cost of 5,000. What is my incremental profit? 5,000. Clear? Sir, what if by chance if this is 15,000? Will I further process? No. Better sell the byproduct at split off points. Clear? Just so. So this is all about chapter 11, guys. Yes, students. Now we will revise chapter 12, which talks about service costing. Guys, till now, whatever we have discussed, that is the different methods of costing, they were applicable to the manufacturer. Depending upon what work I will do, I will adopt the suitable method of costing for me to calculate the cost. Whereas for service rendering entities, there is one method of costing which is called service costing. So service costing is followed by the entities who are engaged in service rendering. It might be like educational institution, hospitals, transportation, or information technology, anyone who is rendering the service. Sir, what do they do by following the service costing? They will try to calculate what is the cost of service they are rendering. Sir, how is it possible, guys? They will prepare a separate cost sheet for whatever service they are rendering, or else it is very simple. Sir, what do they do by preparing the cost sheet? They will just first find out what is the total cost, divided by the total unit of service rendered. Total unit of service rendered. What do we get, sir? Cost per unit of service rendered. For that, we can add some profit and fix the price for the customers or clients. How much do we charge for each unit of service to the clients? Yeah, so that is what we will be learning, and there will be number of service industries, guys. Even in exams, you can get different kinds of questions on different industries, but the most tested one in exams are like transportation, educational, or hotel industry, like that. Even hospitals sometimes they are testing. These are the areas or service industries where they are trying to ask the questions repeatedly. Oh, we'll start. Service costing is a method of ascertaining what the cost of providing the service. So there itself we should understand that who will follow this method of costing, sir? Whoever is engaged in service provider or who is service provider. It is also known as operating costing. Guys, please be careful. Operation, which we learned at the end of process costing, is different. Operating is different. Operating is just the other name for service costing. Service costing is normally used in service sector. It is a method of costing applied to undertaking which provides service rather than production of material. Whereas if you are engaged in production, we already learned what are the different methods available. Depending upon whatever work I am doing, I will choose which is suitable for me. Service costing is just a variant of unit or output costing. Why is that? Right? What do we do in unit or output costing? When I am continuously manufacturing one product on a continuous basis, the regular basis, I will follow unit costing. What do? I will calculate total cost divided by total output. What do I get, sir? Cost per unit. Same way here also we have to. Okay, very similar to cost unit method or unit costing method. Sir, what do we do here is we will try to calculate the cost of each unit of service provided. Sir, how do we derive it? I already explained it. Total cost divided by units of service rendered. You will get cost per unit of service. Service cost unit. Guys, we have learned in first chapter only cost unit. That is something for which we will calculate cost ultimately. Cost object is like overall, whereas cost unit is like per unit, per hour. Like so, for service industries, what are the cost units? I have given various things are here. Transportation. It depends on whether it is a passenger or goods. If it is a passenger, then it is passenger kilometers. That is, what is the cost to carry one passenger for 1 kilometer? Sir, will we carry only one passenger? Assume I am a bus transportation. Will I carry only one passenger? No, no. Only for calculation of cost purpose, we will decide it. Cost per passenger per kilometer. Sir, what is the purpose of it? Guys, assume cost per passenger per kilometer, we got it 10 rupees. 10 rupees. I want to make 50% profit. So, how much will I fix the fare as? 15 rupees. Now, assume you got into my bus and asked for a ticket for a place which is around 100 kilometers from here. How much will I charge you? 15 into 100. Hope you understood. Means this fare is fixed based on what? Cost per passenger kilometer. Means what is the cost the company is incurring to carry one passenger for 1 kilometer. If they work out this, then it will help them to calculate the fare. Because the fare is charged for each and every customer, means passenger separately, guys. Clear? So when you embark my bus or when you get into my bus, I will decide the fare based on how long do you want me to travel. Okay, means how long will you travel in my bus? Clear? Where is your destination point and what is the distance of it? 100 kilometers means 15 into 100. Assume another person get into my bus and ask for a ticket which is 50 kilometers away from here. So how much will I charge? 15 into 50. 15 into 50. Same way for goods transportation, it would be 10 kilometer or quintal kilometer. Clear? Means to carry 1 ton per 1 kilometer. What is the cost we are incurring? And we call this as composite cost unit, guys. When there are two or more bays, here there are two bays. What is it, sir? Passenger kilometer. Same way for goods transportation, tonne kilometer, two bays are there. We call it as composite cost unit. Composite cost unit. Next, electricity supply service, kilowatt hours. Then hospital, per patient per day. This is also composite. Per patient per day. How much is the cost? Clear? Or else per bed per day. Like that. Or per patient per treatment. What is the cost? So, or per operation, which is nothing but treatment. Then canteen per item or per meal. If it is a cinema, per ticket. Then if it is a hotel, guest days or room days. That is per room per day. What is the charge? Correct. Now, see, whenever we go for any accommodation, we stay there for few days. Correct. Now, am I occupying the entire hotel? No, sir. One room in the hotel or in the resort. In that case, they have to work out the cost for one room per day. What is the cost? Accordingly, they will fix the rate. Room charges. Yes. Next, bank or financial institution per transaction or per service. Example like letter of credit per application per project. So based on they offer different kinds of services. So for each and every service, they calculate the cost so that they will know what is the amount to be charged to the customer or account holder. Educational institutions per course or per student per year also. Clear? Yes, sir. Or per student per course, which is composite. Then per batch or per lecture, etc. Then IT and ITES, that is information technology and information technology enabled service. Cost per project or per module. Then last one is insurance services per policy or per claim or per third party administration. Sometimes they will also outsource it to the others. Okay, whatever administration they will do, that is with respect to processing of claim and all, they will outsource it to the others. So we call it as third party administration. Oh, yes. Now, what is the major difference between service costing and product costing? Guys, in product costing, what is my first major cost? Which is the first cost which I will incur? Material. Correct? And that would be the one major cost for us in the manufacturing process. Whereas in service, there is nothing called material. Even if there is material, it might be indirect material, but not direct material. So, in service costing, what plays a major role, sir? The support services will play a major role. Most of the expenses which we will incur would be either indirect or overhead. Yeah, whereas in product costing, material is one of the major cost cuts. Then coming to cost unit. Use of composite cost unit, we can use normally for service. Okay, whereas for goods, we normally use output as a cost unit, like cost per unit. Correct? Huh? That is with respect to product. Then material and employee cost. For manufacturing, material will be the major cost, labor would be there. But when it comes to service, there it is more of employee. More of employees. Then coming to traceability of cost. Indirect costs like administration overheads are generally have significant proportion in total cost for a service. So most of the expenses which we incur in service industry would be indirect in nature because they provide support services. They provide support services. Yes, sir. Then KPIs, that is key performance indicators. Guys, there are different KPIs for different industries. What are those? Some of them has been listed down in your syllabus. What are those? One by one, we will see. Okay. Key performance indicators are the quantitative and qualitative factors which are commonly used to assess the performance of an organization. Using this, can we evaluate the performance of a company or the organization? Yes. Which are important to achieve its goal, like calculation of cost per cost unit, calculation of cost or revenue per KPI helps to evaluate the performance against the industry standard. It means I can compare myself with what is the industry average. Here, like in FM and all, you would have seen, sir, what is the PE of my company when compared to industry PE? Comparing this, I can tell whether my company shares are overvalued or undervalued. Same way here, whatever KPI we have computed for my company, I will compare it with industry standard and tell whether I am performing better or not when compared to others in the industry. So one by one we will see. First, transportation industry. What are the KPIs? First one, number of shipments means how much delivery we have given. Number of deliveries, especially like Amazon, Flipkart, and all, they are also into delivery. Now they will calculate what is the number of delivery or shipment they have done. Next, truck turnaround rate. Truck turning, guys, it is nothing but once the truck or lorry has entered my factory gate to load the goods, how long did it take from entering to exit? Clear? Assume today morning it entered and in the evening it went out, exit. Totally, they were in the factory in for 9 hours. So what is the turnaround time? 9 hours. Means it is simple. Once the truck entered the factory gate, how long did it take to load the goods into it and leave the factory? Then coming to lead time or order cycle time, the amount of time in between order placement by the customer and receipt of order. This is delivery time we call it as. Especially the quick commerce is in a tight fight in this class. Okay, they came out with 30 minutes delivery, 10 minutes delivery, 5 minutes delivery. Why, sir? Because customers are ready to pay premium amount if you can save their time. Yeah, even in this Amazon, Flipkart, and all, you would have seen one day delivery, they may charge you more, or same day delivery, they may charge you more. Or else, no, sir, I'm not ready to pay extra. You can wait for 3, 4 days. They will deliver it for sure. Whatever you have ordered, only they will deliver, but they will take time. If you want quick delivery, maybe they will charge you with a premium amount. Or if you have that Prime membership, then it is free for you. Yeah, for obviously, Prime membership is a cost. Okay, yes, means they're trying to push you to take that Prime membership. Yeah, so that they offer you a lot of things. Even whenever there is an offer, what I have seen is they will allow the Prime users one day before. You can access the offers one day before. Okay, so indirectly they are trying to push you to take the Prime memberships. Okay. Next, on time and in full. The number of orders delivered according to the schedule and quantity specified. Even in food delivery, this happens, correct? So, assume they have promised 20 minutes delivery or 10 minutes delivery. They will also cross check from their side. How many deliveries did we deliver on time as promised? How much we couldn't deliver? Okay, and they will try to work on how much they couldn't deliver now. They will try to work on that. Then coming to hotel industries, cost per occupied room means if a customer come and occupy the room, then what is the cost we will need? For unoccupied room, will they calculate the cost? No. Why, sir? Because we cannot charge anyone for unoccupied room, right? Whatever is the cost of the entire hotel, they will charge only for the occupied room. Clear? Assume out of 100, there is only 80 room which is occupied. Now cost is totally 10 lakh. So 10 lakh divided by 80 occupied rooms they will do. Why, sir? Because we can charge only when the rooms are occupied. So once they calculate the cost per occupied room, they will add some profit and they will fix the room charges. Yeah, yes. Next, occupancy rate. As I told you, assume guys, totally they have 1,000 rooms in a hotel. On an average, how much will be occupied? Like 70%, 80%. Because throughout the year, every room might not be occupied. Clear? So this is called occupancy rate. Occupancy rate. Next, revenue per available room. Sir, for one room, what is the revenue we are collecting? And there will be different categories of rooms which hotels will be providing guys, like AC, without AC, sir, single bed, double bed, okay, or different square feet also, or with different features. Okay, hill view, top view, ground source, the last floor and all. So different pricing they would be followed. Sir, on an average, per room, how much we are charging? I might be charging different rentals for different rooms, but on an average, approximately how much? Clear. So in that case, what can I do is total revenue. I will divide it by total rooms. I will get on an average per room how much we are charging. Next, hospitals, healthcare industries. Bed occupancy rate. Assume guys, an hospital has totally 100 beds. Will all the 100 beds be occupied throughout the year? No. Clear? Yes. Now getting patient also is business. Where? To hospitals. Okay. Chala, the reference, everything will happen. Okay. The only thing is we should not get into there. Once we step into that, they will make sure that we will go late as means we will go out as late as possible. Okay, we may go alive only. Okay, that is also doubtful nowadays. Okay, but when we are going late, they will try to push that number of days which we stay in hospital as much as possible. Oh, chal, come. Bed occupancy rate means out of 100 beds, on an average, how many beds are occupied? Like 70%, 80%, whatever is the bed occupancy rate. Yes, sir. Then staff to patient ratio. Staff to patient ratio means, sir, for one patient, how many staffs are there? Or else, for one staff, how many patients are there? For example, it can be vice versa. Clear. Assume there are to take care of 10 patients, there is one nurse. Clear like that. Or else to take care of 25 patients, there is 5 nurse, 1 doctor. This is the ratio. Clear. Yes. Because for every patient, there will be not doc, there won't be one doctor. Clear. One doctor will come to check you. Same doctor will go to check other patients also. Average treatment charge, guys. There will be different price which they will be charging for different treatments. Clear? On an average, sir, how much is my charge? How much is our charge? Sir, how do they calculate it? Simple. Total revenue they have collected from the patients or fees divided by total treatment given. So we will get on an average per treatment how much we are charged. Clear? Even in production or manufacturing entities, we can calculate it. Assume I am selling number of units. I want to calculate what is the average selling price. So divide the total sales by number of units sold. You will get on an average what is my selling price. Next. Next is IT industries gross burn rate. Guys, you would have seen, even if you are observing Shark Tank or if you are watching Shark Tank, they would be asking, some of the sharks will be asking, what is your burn rate? Burn rate means not burning the body. Okay, that is how much loss you are suffering. How much loss you are suffering. This scenarios will come when your cash outflow is more than cash inflow. Even in your FM, you would have learned. Okay, or in your accounts. Sir, what is it? Cash flow statements, correct? So if you have that negative net cash flow, it is like a loss for you, correct? So your outflow is more than inflow, especially from operating. If you have negative cash flow, it is a very bad signal, negative signal about the company, correct? Yes, sir. Even there is like application of fund, sources of fund flow statement, cash flow statement, and something related to that. Clear? So simple, sir. To take care of my business, I already invested capital, but to run it, to operate it also, I'm spending more and more money out of my own pocket because whatever I'm earning from my business is not enough, sir. So I'm spending something out of my own pocket. Next, it is nothing but loss wise. That's all. Customer acquisition cost, CAC. CAC. Sir, what is this? Guys, to acquire one customer, what is the cost we are incurring? Nothing but marketing and advertisement expenses. Clear. Nowadays, lot of competition in advertising also. Clear. Different modes of advertisement. You use influencer, affiliate marketing, different kind of marketing. For that, whatever cost you are incurring. Then customer lifetime value. Customer lifetime value means, see, you have the power of retaining the customers. One customer will come back to you how many times? And what is the total business one customer will give you throughout their life? Throughout their life. And this will come only in case of recurring nature. If it is only one time purchase, then this will not come us. Clear? Recurring, especially like subscription and all will be there. Clear? Subscription and all. Sir, every month you have to subscribe or every year you have to subscribe. How long will you subscribe? Clear? So that is called lifetime value. Means one customer can give you how much business throughout the life of that particular customer. Monthly recurring revenue, the amount earned each month, that is through subscription model. And clear. So every month we need to subscribe. Even classes are now available in some subscription model. Okay, you can subscribe for 1 month more classes, 6 months classes, 12 months classes. Clear, or full course. till I pass, like that. Different platform have different validity or plans. Clear? Or else, if you take easily this Netflix, Amazon and all. Sir, can I take the subscription monthly, yearly and all? Yes, they have a different plan. And one strategy what they are playing now is auto pay. Okay, that is the biggest strategy. That is once you opt for 1 month subscription, they will make sure that they will auto pay. They will fix an auto pay for the second month. If you don't want, you have to go and cancel it. See how they play with customers' mindset. Assume guys, my validity is getting over in 2-3 days. Your next subscription renewal is already been fixed, auto pay. Now you need to take extra efforts to go and cancel that. At the end moment, you also feel that one new movie came, one new OTT. What do you call that as? I forgot. I'm not getting. Series. New series came, so I want to watch. Let me extend it. Let me extend it. And now how they are playing is Geo when they came, everything was free. Now Geo also is charging. That is how they know how to make the money. When Geo SIM came, also they gave freely. They make people addictive to SMS, to calls, to internet especially. Later they start charging. Now they're lifting, they're trying to grab from how much ever is possible from the customers. Okay, how the plans are like this, you observe guys. See, if you take the normal plan, you will get advertisement. In between, you get advertisement. If you want to cancel that also, you want to opt out of that also, you take premium, where the price is more. They will show the advertisement in such a way that you feel like whether you are watching series or advertisement. Clear as they will show advertisement only like series. Same advertisement barutte happen ಹೊಡಿತಾರೆ. You feel like oh yo, let me not watch this again. Take premium. Okay, next level subscription. Yeah. Chalo. They should also understand that they're trying to irritate us. That's all. Clear. So same advertisement, how many times will you see? Clear. In one part only, how many times it will come. So they are trying to irritate you so that you will take the next level subscription. Chalo. And here there is also something called as monthly revenue recurring. That is one is subscription. The other one strategy is like new sales, upsales, and all. Like whenever you guys shopping, you do shopping in Amazon, Flipkart, and all, you put something for a cart, or you are about to buy one product. They will tell customer bought together. Influence. Customer bought together. Laptop jete tabu, laptop jete bagu, charger. They will show you mobile jete mobile case. They will show you 2-3 products just to influence you. You will be feeling like, see, you didn't have plan to purchase that second item that they're trying to push you. You will feel like, oh, mobile, 50,000 mobile. What if it is there without screen card? Oh, yo, what if it is there without case? Let me buy that toss. Yeah, or else some warranty, guarantee, and all they tell 3 years warranty, break, that to this. Especially if you go to Sangeeta, they will Sangeeta, you know, na? Not well. So, mobile store. Yarappa adu anta. Sangeeta ಅಂದ್ರೆ Chala, listen. So when you go there, they are not selling mobile. They are selling what? Insurance policies. Insurance policy is not for your body, for your mobile. People, they are not bothered about insurance for their health, life and all. But for their mobile, they should have insurance. What if it breaks? Seriously, I have literally youth, especially. Sir, they don't care. Parents are there, no sir. If anything happens, they will take care. But mobile, mattam kodsala. They will not get you one more mobile, no? So they want the on mobile insurance, pakka. And insurance company will do such a way that, sir, if you go out and break, we will give you a new mobile, sir. They will influence you in such a way that you have to buy that insurance. Sir, what if it breaks or that is so? You will be scared. You are investing so much to my mobile phone, which is the cost of your kidney or heart, especially iPhone. Clear? iPhone. Huh? So in that case, you feel like Apple or the Apple Care. Yeah, sure. How much cost? For the cost of that Apple Care, you can buy one more smartphone. Serious, normal phone. I'm not talking about iPhone. Another phone you can buy. Okay. So my mother, when I took iPhone, she asked, okay, what is Apple Care and I like that. Oh yeah, my mobile cost is only your insurance cost. That is what Papa parents. Okay, sometimes they will be using simple phones. Okay, they prefer to use it. But guys, to the extent possible, don't trouble your parents for all these fancy things. If they can really afford to it, okay. But if not, please don't trouble. Because I have literally seen students getting mobile phone, good mobile phones from their parents on EMI. Papa, they are working to clear your dues. If they are taking loan to at least pay your fees or anything, sir, always good. But to get you bike, mobile, all those things are not good, guys. So wait for a moment, complete your studies, and you guys, once you start earning, do whatever you want with your art and money. Where were we? Churn rate. Oh, churn rate means what, sir? The percentage of customer that cancels their recurring subscriptions. Means, sir, I was using this Amazon Prime or Netflix subscription from last 6 months. Now I am cancelling, sir. Sir, exams are near now, sir. Why should I need subscriptions now? 2 months cancelled. Now they will also call you. They will try to push you. Take your subscription is getting over, and you send back the message for them. I have my exams. Will you come and write? Sure. Cost per feature. Now, if I want to add any additional feature, what is the cost of it? Guys, we are already giving the feature. If I want to add additional feature, as in now you are watching classes on our app. Now you want to add one extra feature that will come with the cost. And what is the cost we are incurring for it? Yeah, like that. Even companies which have various websites, Amazon, Flipkart, they also have a lot of features, correct? Like filter options, that, this, and all. Now, if they want to make you, the user, experience more, feel better, they may keep on adding additional features. Obviously, that will come with a cost for them. Telecom, average return per user, ARPU we call it. This is one of the commonly used words. Even this, whenever Airtel or Jio announces their results, they will announce their ARPU. ARPU means what, sir? Average revenue per user. Means how do they calculate it, sir? Total revenue from all the subscribers divided by number of subscribers. Means on an average, from one subscriber, how much they are. Yeah, and companies are trying to increase this. Correct. Now they are trying to plan in such a way that, sir, now monthly plan was like initially 200. They will increase it to 300, 350, 400, 450, and they will plan in such a way that even though Airtel and Jio are competitors, they will plan in such a way that both will increase the price together. Okay, so that none of the customers feel discriminated. You will find an option. Some students, especially, they will have both the SIMs. Okay, they will see where the option is better. You will see both the plans under Airtel also, Jio also, almost same prices. ಹೆಂಗಿದು ಇಬ್ರು ಒಟ್ಟಿಗೆ ವರ್ಕ್ ಮಾಡ್ತಾರ. Yeah, because they will plan their price hike in such a way that both of them will hike in the at the same time. Subscriber acquisition cost. This is the cost incurred by the telecom industry to or telecommunication company to acquire one subscriber. That is new customers. That is what this Geo did. Okay, they gave lot of things free, almost everything. Why? To acquire the customers from other telecommunication company. Many of the telecommunication companies shut down only. And whatever loss they incurred initially, that was like for them customer acquisition cost. Subscriber acquisition cost comes. Next, network operating cost. Guys, this telecommunication company has to shell lot of money on license, telecommunication network. That is the tower and all you have seen. They have to incur a lot of cost for it. How much cost they are incurring? Then gross revenue retention means by retaining the same customer, what is the extra revenue we are earning? That is you guys also will be doing. If you have recharged for 1 month, 3 months and all, again and again you will be doing it. Clear? So that repetition is called the gross revenue retention. Then educational sector, our sector, instruction cost, that is the cost of part-time and full-time faculty members. Then administration cost, any college or school or even this institute, they will have administration team. Obviously, there whoever is working, they have to pay salary. So what is the cost of administration? Then tuition cost incurred by the students on semester or annual basis. So whatever fees they charge you. Okay. For that, what is the cost? What is the fees you pay is their revenue. But they will also be incurring the cost to run one semester or 1 year class. They have a lot of cost. What is the cost of running the classes for 1 year or 6 months or per batch? Then student to faculty ratio means, for example, sir, for 100 students, how many faculties are there? Assume 2 faculties or 3 faculties. So this is the ratio of student to faculty. Yes. Assume in a school, there are totally 1,000 children, all sections put together, all the classes put together. 1,000 children are there. For them, 50 teachers are there. So what is the ratio? 50 teachers per 1,000 students. For each and every student, there will not be one teacher. Correct, Mr. Disney? In your school, it was like that. No. ಸ್ವಲ್ಪ ಜೋರಾಗಿ ರಿಯಾಕ್ಷನ್ ಕೊಡಬೇಕು. ನೀವು ತುಂಬಾ ಸ್ಲೋ. ನಾನು ಹಂಗೆ ಟೀಚ್ ಮಾಡಿದೆ ಅನ್ಕೊಳ್ಳಿ ಅಷ್ಟೇ. ಈಗಲೇ ದೊಡ್ಡ ಇನ್ಶೂರೆನ್ಸ್ ಸೆಕ್ಟರ್. Average cost per claim. Average cost per claim is nothing but when the policy is matured, you will submit this. You will claim the amount. Now that is called the average cost per claim. They have to cross check everything and they will have to process the amount, right? For that, will they incur the cost, sir? Yes. Then components of claim cost. Cost which are associated with like legal fees, time to settle, administration costs, report delays, everything will come. And some of the insurance companies will also take you to the court when you are claiming falsely that, sir, I am supposed to receive so much money. Clear. But they believe that no, you have manipulated something. In that case, there is a chance of that they will also incur the legal cost. Then cost per quote. The cost that the company incurs in order to get a quote in front of potential claim. Potential claim means you have not yet taken the policy. Now we have sent some agent to your home, okay, to convince you to buy the policy. Okay, whatever cost they are incurring for it. Clear? So they will convince you in such a way that, sir, what if you are not there? Your family full on road. Okay, please take the policy so that if you go also, your family is taken care of. Administration cost per policy. The cost of policy administration to number of policies outstanding. So in simple, how much administration cost the insurance company are incurring. They will also have a lot of administration cost. If you have not paid the premium on time, they will call. Clear. And whenever you are supposed to claim the amount, or assume you have taken a health insurance policy, you are supposed to claim it, you have admitted for some medical purpose. Now you have to talk to them, the calling customer care center. Clear. All this is a part of administration. Then average policy size. Right? There will be different policy holders would have taken the policy for different amounts. Assume she has taken for 5 lakh, he has taken for 10 lakh, he has taken for 20 lakh. Sir, on an average, what is the cost? What is the policy size? Means you take the total of all the revenue or premium collected, divide it by number of policies. Number of policies. You will get to know what is the revenue per policy on an average. Okay. Guys, they may ask like theory questions. They may give any particular industry and ask you to list 2 or 3 KPIs. Okay, or maybe 4, depending upon the marks. Next. Now we are getting into the numerical part. Methods for ascertaining the service cost unit. First one is composite. If it is a single cost unit, you will find out cost per unit of service. Composite means what, sir? 2 or more, like we discussed. Passenger kilometer, 10 kilometer, per patient per day, per student per year. All these are composite. Composite cost unit. Sometimes 2 measurement units are combined together to know the cost of service or operation. These are called composite cost units. For example, in public transportation undertaking, would measure the operating cost per passenger per kilometer. That is to carry one passenger per 1 kilometer. What is the cost we will incur? Same way, 10 kilometer, quintal kilometer, passenger kilometer or per patient per day. Okay. Guys, especially when it comes to the composite cost unit, normally they ask it for especially transportation systems or transportation industry. We can calculate in 2 ways, absolute or commercial. Absolute is nothing but weighted average, whereas commercial is nothing but simple average. Guys, see, please understand it numerically. Only then you can understand. Because if you try to understand only theoretically, then you may not get clarity. You will get confused with quantitative and qualitative factor. First of all, so what is qualitative, what is quantitative? I have mentioned here. In a transportation service, variable cost is dependent on distance covered. Correct. Now, variable cost will vary with what? Number of kilometers traveled. So in that case, what is the quantitative factor? The distance. Number of kilometers would be the quantitative factor. Whereas whatever weight the truck carry or whatever is the passenger the bus will carry, it would be qualitative. Will variable cost vary with how much weight you are carrying? No. Will variable cost vary with how many passengers you are carrying? No. Assume guys the bus capacity is 100 passengers. Now whether they are carrying 20 passenger, 50 passenger, 80 passenger or 100 passenger, will variable cost vary? No. That means it is a qualitative factor. But if the number of kilometers traveled is 50 or 100, 150, 200, will variable cost vary? Yes. That means it is a quantitative factor. So if variable cost change due to change in this, then that is called quantitative factor. No, sir, variable cost will remain same. Clear? Means it will not vary. Then we call it as qualitative factor. Since the weight carried, that is in case of goods transportation or in case of passengers travel does not affect the variable cost. Does not affect the variable cost means it will not vary by variable cost. In that case, it is a qualitative factor. So in simple guys, if it is a goods transportation, what is quantitative factor? The number of kilometers. What is qualitative? Weight. Clear? That is ton or quantity. Next, coming to qualitative factor. In case of passenger transportation is what? Number of kilometers. Qualitative is number of passengers. Quantitative is kilometers, whereas qualitative is passengers or the weight carried. Now coming to this. Listen. Sir, what is absolute or weighted average basis? It is a summation of products of qualitative and quantitative factor. Let us break down that. First, you need to calculate what? Product of qualitative and quantitative. That means you have to multiply quantity with quality. Means I'm talking about quantitative factor with qualitative factor. Clear? Yes. Then you need to find a sum of all that. That is aggregate. Clear? I have given the tip also here. Multiply distance covered. That is quantitative factor with weight carried in case of goods transportation. Whereas if it is a passenger with number of passengers, you multiplied both for each journey, then you add up everything. What do you get back? Weighted average. Guys, very simple. Even in your store ledger, we discussed about it. Even in your FM, you have something called as weighted average cost of capital, WACC. Correct? What do you do? Simple. Listen here. Assume we have Q1 into P1 plus Q2 into P2. We have 3 lots totally into P3. Clear? So what did we do? We multiplied first. Correct? Then we added. This will give you total cost, huh? Yes. And there, if you want to calculate weighted average price and all, what do we do, sir? We will also divide it by Q1 plus Q2 plus Q3. This will give you weighted average price. Correct? Huh? But here, we are doing this contrast. Multiply quantitative factor with qualitative factor and at the end, add up everything. Let me explain this with an example also, guys, for more clarity. Oh, you can see here there are different journey which is made through a truck. Truck is carrying a weight and it is making different journey. Okay, sir. Now you see they have carried 20 tons and traveled for how many kilometers? 80 kilometers. They have carried 12 metric tons and traveled for how many kilometers? 120. And 16 metric ton and traveled for how many kilometers? 160 kilometers. So listen. What is quantitative factor here? Kilometers. Quantitative. What is qualitative factors? Weight, sir. First, each journey, what is the kilometer? What is the weight? What is the kilometer? What is the weight? Multiply. Then you add up. What do you get? Sir, absolute metric ton kilometer. Absolute metric ton kilometer, which is nothing but weighted average. Hope you understand. Clear? Nothing. Guys, simple. Multiply weight with the distance traveled for each. Keep on multiplying this. At the end, you add up everything. Clear? Sir, what if it is a passenger transportation? Simple. In place of weight, number of passengers will come. Each journey, how many passengers you have carried? Multiply that with kilometers. At the end, add up everything. Got it? No? Yes. So you need to find out the product of qualitative and quantitative factor, which is nothing but multiplication. Then you find out the sum of all. Sum is nothing but addition. Now coming to simple average or commercial basis. Sir, what is it? It is a product of average qualitative and total quantitative factor. Means you do like this. First calculate total quantitative factor, means total kilometers traveled. Then you need to calculate average weight carried or average passenger traveled. Then you multiply both. Product means multiply both. Yeah, yes. Tip. What is the tip to calculate this? Calculate total kilometer traveled, that is quantitative factor, and then multiply it with average weight carried. or average passengers traveled, qualitative factor. Guys, they will give sometimes in the question only to make your work easy, simple. Assume the bus is traveling 100 kilometers, 150 kilometers, 120 kilometers, different trip they are doing. They will tell on an average the passenger traveled is 60. On an average the passenger traveled is 60. That means this one. Clear? Or else, on an average, the truck carried a weight of 100 tons. 100 tons. So in that case, you have to use simple average. Oh, let me see this also with an example. Same question. Now we are doing the simple average or commercial basis metric ton kilometer. How is it? Guys, simple. First, find out the simple average of all the weight. 20 plus 12 plus 16, whole divided by 3. So you will get simple average of weight carried, simple average of weight carried. Multiply that with how many total kilometers traveled. Add up all the kilometers. Yeah, so that means, guys, it is like this. The truck has totally traveled for 360 kilometers by carrying, on an average, 16 metric tons. 16 metric tons. Got it? So this is nothing but commercial metric ton kilometer. Sir, what if it is instead of goods transportation? What if it is a passenger transportation? Then you consider the weighted average of different passengers traveling. Assume you got the weighted simple average of the passenger traveled is 60. Multiply that with the total kilometers traveled. Multiply that with total kilometers traveled. Hope you understand. Guys, even in case of store ledger, in simple average method, what we used to do, whenever we used to issue, we used to take the simple average of prices. Then we will multiply with the quantity. We will get the cost of issue. We will get the cost of issue. Same way here. You need to take the simple average of weight or passengers. Multiply that with total distance traveled. You will get what? The commercial metric ton kilometer. Or we simply call it as simple average. Hope you got it. Yeah. Yes. Next. See, guys, this is one of the preferable questions in the examination. Number of times they are repeating the question on transportation, either goods transportation or passenger transportation. And whenever the question is on goods transportation or passenger transportation or in simple transportation service, please break up your cost into 3 categories. What are those, sir? Variable, fixed, and the other one is maintenance. Like how you used to calculate machine hour rate now? Same thing, same presentation. But here it is not per hour, it is per passenger kilometer or per ton kilometer. I will show you the way of presenting the answer also, so that you will know how to present it. You can see, you will divide the cost into standing charges. Standing is nothing but fixed. Then running charges. Sir, what is running charges here? If the cost vary with how many kilometers the bus or truck will run, that is called running cost, like petrol cost, diesel cost. Then one more extra thing is here maintenance. Repairs and maintenance always put it under this. Like semi-variable. It is a semi-variable. Got it? Yes. So you can see you will maintain one column that is to calculate cost per month or cost per annum or cost per bus or cost per truck. The other one is cost per passenger kilometer for passenger transportation, or if it is a goods transportation, cost per ton kilometer. Clear? So for standing, just calculate the total and divide it by passenger kilometer. Then for running, show it individually. Show it individually. And for repairs and maintenance or maintenance charges, one item would be there. Even if multiple is there, you can just add up and divide it by passenger kilometer. Clear? I will show you. You can see some more questions. This is also on passenger. Especially this calculation, sometimes you have to do, guys. Please be careful. This depends on how many kilometers the bus or the truck has traveled. If it is a goods transportation, it will be like this. Instead of passenger kilometer, it will be 10 kilometer. Try to present like this, guys. See, even if you are not giving a breakup, end result will remain same, but step marking will be awarded. So if you don't present the cost like this, giving a breakup, then you might lose step marks. Please be careful. You do like this. Very similar to our machine hour rate calculation. Okay, but in machine hour, we will divide only cost into 2 types. Here, one more extra is the maintenance. Yeah, and whatever questions I would have solved in the class also is based on the suggested answers of ICI. So I would also suggest you, ICI suggested me to teach like this. Okay, I have taught. You also make sure that you follow the same. Sure, that's all. Coming back. Coming back. We have solved number of questions on every service industries, especially transportation and all. I have solved good number of questions in the regular class. Chalo. Equivalent cost unit or equivalent service unit. Guys, when an organization or entity is providing different category of service or different grade of service, now to calculate cost per unit of service, you should have one equivalent base. You should have one equivalent base. So taking one as the base, convert all others equivalent to that. Either take the highest or lowest as the base and convert all others to the equivalent to that. Yeah, I will explain, especially when it comes to hotel industry or accommodation or lodges. They have this. They have different room category. For each room category, they charge you different price. So when they want to know the cost also, they have to calculate the cost for the respective category. Sir, how do they do it? I will explain it with an example. Yeah, this is a part of my concept book. I will just take this example to explain you. Yeah. Assume guys, this is an example I have given. A hotel has three types of suites for its customers. Suites means different types of rooms. Three types of rooms. What are those? Standard, deluxe, and luxurious. Standard 100 rooms are there. Deluxe 50 rooms are there. Luxurious 30 rooms are there. Okay, very good. Room tariff. Standard, whatever charges you charge, but deluxe you're charging 2.5 times of standard. For example, if you're charging 100 rupees per room, no hotel will charge you 100 rupees, but just for easy sake, I am taking. Assume you are charging 100 rupees for standard room per day. How much will you charge for deluxe room? 250. 2.5 times of standard. How much will you charge luxurious? Twice of the deluxe. That means 250 into 2, 500. 500. Correct. So can I tell luxurious is like 5 times of standard, whereas deluxe is 2.5 times of standard. Correct, no guys? Okay. So based on this, we are deciding room tariff. Clear? I repeat. Standard we are charging normal price. Assume 100 rupees. All these are rupees, so not rooms. So per room per day. Whereas deluxe is charging 2.5 times of standard. That means 250 rupees per room per day. Whereas luxurious is charging twice of the deluxe. That means deluxe is 250 per room per day into 2, 500. Now if I compare this with the standard, how much is that? 5 times. Whereas deluxe, 2.5 times. Hope you are getting it. Yes, sir. So you can see the rent of deluxe suite is to be fixed at 2.5 times of standard suite, and that of luxurious suite is twice of the deluxe. Since all the three types of suits use the same amount of overhead, expenses will be common. Overheads, common overhead, general overhead we saw. Now we need to apportion it to each category. How will I do it, sir? Base is not same. Common base is not there. You calculate. Since all the three types of suits use same amount of overheads, but to attach qualitative weight, these rooms are required to be converted into equivalent units. So either take standard as a base or luxurious as a base and convert all others equivalent to that. Yeah, I would suggest you to go by the lowest one, standard. Okay, but I will show you both the ways. If I take standard as a base, how do we do it? If I take luxurious as a base, how do we do it? Oh. So assume 360 days in a year. Okay, that means guys, when they are not given room occupancy, we will assume all the rooms are occupied throughout the year. Or else sometimes they will tell you 80% occupancy. In that case, you have to take 100 into 80%. Or each room category into respective occupancy. Okay. 360 days into 100. How many room days? 36,000. Room days we call it. Means each room is occupied for how many days in a year? 100 rooms is occupied for full 360 days. How much will you get? 36,000. Clear? I told you. See, if nothing is given, you will take the occupancy as 100%. Assume they have given it as 80%. Then you have to multiply here 80%. Where you will get less than 36,000. Clear? Yes. Same way, deluxe. 50 rooms are there, occupied for full 360 days. 18,000 room days. Then 30 into 360. 10,800. Clear? Now, can I take the total of this to calculate cost per room day? No. Why is that? Because they are not for the same base. They are not equivalent. Can I compare luxurious straight away with standard? No. Now let us calculate equivalent standard room base. Now I am taking this as a base. Which ones are standard? Converting all others for standard, equivalent to standard. So 36,000 into 1, 36,000 because it is same. Whereas, guys, when it comes to deluxe, it is 2.5 times of standard, right? So 18,000 into 2.5 will give you 45,000, which means 18,000 deluxe room days is equal to 45,000 standard room days into 2.5. That's all, nothing I can do. Same way, 10,800 luxurious room days equivalent to 5 times of my standard. So into 5. Into 5. How much do you get? 54,000 standard room days. Now, if I just divide my total cost by this, we will get what? Cost per equivalent standard room days. Okay, I will explain. If you want, sir, why are we doing all this calculation? That also I will explain. Now coming to, sir, why did you take standard? Why not luxurious? Now we are taking luxurious as a base and converting standard and deluxe equivalent to luxurious. Okay, this will anyway remain same. Now, luxurious 10,800 will remain same, 10,800. Clear? Divided by 2, that is deluxe divided by 2 will be the equivalent luxurious room day. Correct? Now, this is twice of this. That means, can I tell? This is half of this. Will Clear? Yes, sir. So I took 18,000 deluxe room days into half. Same way. 36,000 standard room days. Luxurious is equal to how many standard? 5. So divide it by 5. Divide it by 5. Hope you understand. So now 27,000 is what? Equivalent luxurious room days. Luxurious room days. Sir, what is the purpose of doing all this? I want to calculate cost per room day. Now, where did you find out, sir? You only found out the equivalent room days, no, sir. Okay, fine. I will come to that also. Yes. All this in detail we are covered in the class, okay, but I will try to explain it as early as possible, quickly, all those things. That is why we are doing this calculation. See, you can see standard room is like 1, deluxe room is 2.5 times of standard rooms, whereas luxurious room is 2.2 times of deluxe rooms. That is nothing but 5 times of standard rooms. Correct? Yes. So I have written the equation here. This is only for your better understanding. If you can understand, you need not write all this in the exam. Yeah, you can see one deluxe room is equal to 2.5 standard rooms. So one luxurious room is equal to 2 deluxe rooms, which is equal to 2.5 into 2, 5 standard rooms. 5 standard rooms. How did we get 5? 2.5 into 2, which is nothing but 5. Okay, yes. I am assuming 4,05,000 is the total overhead cost we have incurred for the entire hotel. Entire hotel. Okay, sir. They are asking, find out cost per room day for each category. Also calculate the charges per room day for each category if the company wants to make 20% profit on cost. Means they are asking you to fix the room charges. To fix the room charges. Okay, guys. First, taking standard food as a base. We already did the calculation till here. What is the use of this, sir? Guys, my total overhead cost is how much? 4,05,000. We will divide it by 1,35,000. What is 1,35,000? Equivalent standard room days. You will get cost per standard room day, which is 3 rupees. Which is 3 rupees. Now let us multiply. What is the total cost of each category? 3 rupees into 36,000. 3 rupees into 45,000. 3 rupees into 54,000. That is equivalent. Sir, why are you multiplying this with this figure, sir? Why not this figure? Guys, this is cost per equivalent standard room days. Multiply that with equivalent standard room days. Okay, now. So you got the total cost for each category. Sir, I want to calculate cost per each category. For each room per day. Can we do it now? Yes. We have got total cost. Divide 1,08,000 by 36,000. You will get 3 rupees, which is same because my equivalent was that one. Next for deluxe, 1,35,000 divided by 18,000. What is the cost per deluxe room day? 7.5. Cost per deluxe room day. 7.5. Check it. Is it 2.5 times of 3? Yes. Next. 1,62,000 divided by 10,800. You will get 15. Cost per luxurious room. Is it 2 times of my cost per deluxe room day? Yes. Now they want to add 20% profit on it. So 2020 add for this. What is the room charges? 3.6, 9 and 18. That means if you come to my hotel to stay in a luxurious room per day, I will charge you how much? 18. Per room per day, I will charge 18 guys. Hope you're understanding. Same way, if you come to my hotel and ask to stay for 1 day in standard room, how much will I charge? 3.6. Understood means I'm trying to explain why did we calculate this. Clear? Even in process costing, we did equivalent units calculation. Now, how did we get cost per equivalent unit? Sir, cost divided by equivalent units. Why did we do equivalent units as a base, sir? Because output is 100% complete, whereas closing WAP was not 100% complete, sir. Can I take straight away that as a denominator? No. We will convert that into equivalent units. Only then both are comparable. Output is 100% done, whereas closing WAP, if it was 100% done, how much equivalent units I would have got? I would have done notional calculation, yes, same way. Same way here. Now, if I also ask you, what is the total revenue did this hotel earn? Simple. Multiply this with the respective room size. That's all. Total revenue, correct? Huh? Total revenue 3.6 per room day into 36,000. Same way, 9 rupees per room day into 18,000. 18 into 10,800. Add up everything. This is the total revenue made by. This is the total revenue made by them. Hope you got it. Easy. Okay. Same way, sir. What if I am taking luxurious rooms as a base? Till here we already learned. Now, sir, what is the cost per luxurious room day? 50. Correct. Huh? That is 4,05,000 divided by equivalent luxurious room day 27,000. How much do we get? 15. Now take it. 15 into 7,200. You will get 1,08,000. 15 into 9,000. You will get 135. 15 into 10,800. You will get 160. What did we do? Cost per luxurious room day into equivalent luxurious room day. We get total cost for each category. Now you might ask me, sir, why didn't you multiply with this? This is 15 rupees is not the cost for each category. It is for equivalent luxurious room days. Luxurious room day. Did you observe? Same thing we will get. Same amounts we will get. Only way we did was this. That's all. Yeah, yes. Next, calculate cost per room day. 1,08,000 divided by 36,000. 135 divided by 18,000. 162 divided by 10,800. This is the cost per actual room day, not equivalent. Actual room days. And company wants to make 20% profit. 20% profit for each room category. So add 20% for each of us. You will get 3.6, 9 and 18. Same to same answers. Same to same answer. Pawan, one we did like this, the other we brought like this. It is going to the same place. Chalo. Hope you understood. Here also, if you want to calculate total revenue, multiply this respective amounts with actual room days and add up. That's all. Clear? In the exam, please don't do both the ways. I would suggest you to go with this way. Take the least as the base and convert all others. Clear? But either way you do, you get same answers. Clear? Sir, what if I take deluxe, sir? Please don't do that. Okay. ನನಗೆ ಒಬ್ರು ಕೆಲವರು ಡಿಫ್ರೆಂಟ್ ಆಗಿರುತ್ತೆ ಸರ್ ಐ ಆಮ್ ಉಪ್ಪಿ ಫ್ಯಾನ್ ಉಪ್ಪಿ you know na? Sir, I like to be different. You taught us this way, I want to try this way. You will get the same, but lot of confusion in that. Clear? So better don't take the middle one. Take the higher one or the lower one. Okay? Yes. Statement of cost for service sectors. For preparing a statement of cost or cost sheet for the service sector, Costs are usually collected and accumulated for a specific period, that is like month, quarter, or a year. Guys, one thing you have to be careful, hey Rohit, one thing you have to be careful is while calculating the total cost, few costs might be given per month, few costs might be given like per quarter, per annum and all. Please convert everything to a equivalent time period, either year or per month. Clear? Yes. The cost statement for services may be prepared either on the basis of functional classification, like how we do cost sheet, as done for the product costing, that is in cost sheet, or on the basis of variability, that is variable and fixed. Cost sheet is prepared classifying all the costs into three different heads, that is fixed cost or standing charges, variable or operating expenses, or even we call it as running cost, semi-variable or maintenance expense. Especially for transportation, please give a breakup like this. Sir, what about other service industries? Guys, in the question itself, if they have given a breakup like variable, fixed, and all, where you can present your answers by giving a breakup of variable, fixed, you also follow the same. I'm talking about other industries. Clear? If not, sir, they are simply given the cost, sir. In that case, you just add up all the costs divided by unit of service. Clear? Because there are number of service industries, guys. We will not be able to discuss about them in this revision class. Each of them. Clear. So if you guys have attended already the class, you will be knowing we have tried to cover the questions on each and every sector in the class. Clear. But now it won't be possible for me to go and tell for each industry how do you present. Simple. Keep it very simple. For any service industry, you will calculate the total cost. If they are asked you to calculate cost unit, total cost divided by number of units of service rendered. Okay, few things you have to be careful is when cost will vary with number of students, number of rooms, or number of days and all, please be careful with that. Clear? And also few costs might be given like per month, few can be given like per week, per quarter and all. Please convert everything into equivalent time period. Yeah. Yes. In the absence of information, we will exclude semi-variable and only give a breakup between variable and fixed. Sir, now depreciation, is it fixed or variable, sir? If depreciation vary with how many units we produce or how many units of service we render, then it is called variable. No, sir, it will only vary with the passage of time. It is because of passage of time. How much ever units we produce or how much ever kilometers we travel or how much ever students are there, it will not vary. Then it is fixed. Then it is fixed cost. Then we have a concept called build, operate, transfer, BOT approach. Maybe theory topic they will ask. Guys, under this, there's an approach which is followed by the governments where they will outsource the work to the private sectors. For example, assume central government has outsourced the construction of national highway to Dilip Buildcon. Now Dilip Buildcon will invest their own money into construction of the road and they will put a toll there, collect the toll. But is it forever, sir? May not be. The government would have given a right for them to operate maybe for 10 years, 20 years, 30 years. After that, they have to transfer the ownership to government. Or else sometimes it can be like joint venture also. Government will invest 50%, Dilip Bitcoin also will invest 50%. Even in the toll charges, they will share. They will share. Something like that, they will have an understanding. So in this case, what do we call it as that? Build, operate, and transfer. Means you invest your own money, build the infrastructure, you operate it for a few years, collect whatever is the revenue for that many years. Then you give back the transfer. You give back the ownership to whom? Government. Government will take care from now. Is that clear? Yes, sir. So this is all about the service costing, guys. Yes, students. Now we will revise chapter 13, which talks about standard costing. Many of the students find it difficult because of the formula, but we will try to make it easy. We will try to analyze the logic behind each of the formula, guys. So there are three different types of variances we need to calculate in this chapter. That is material, labor, and overhead. Under overhead, there are two subcategories. That is variable overhead variance and fixed overhead variances. Okay. But before we start with the variance calculation, first we'll understand, sir, what is the logic behind or what is the concept behind this chapter. Guys, whatever we will learn in this chapter, the standard costing, the concept behind this is nothing but the cost control. Cost control. See, in the first chapter, we learned about cost control. Sir, what is that? we will follow different steps in order to control our cost. That is, at the beginning of the year, first we will set a standard cost, which we also call it as predetermined cost. And when we are doing the actual work, we will try to ensure that my actual cost is equal to the standard cost or much below that, if possible. Yes, sir. We will make sure that my actual cost will not cross the standard cost. If by chance, if actual cost goes above the standard cost, then there will be a difference or variance called adverse variance. And the respective department will be answerable for it. Why did you incur this additional cost? So once we get a variance, we will also analyze that variance. What is the reason behind this? So standard costing is not a method, it is a technique of controlling the cost, where we will set the target at the beginning of the year or at the beginning of the period. Okay, the period might be month, quarter, or year, guys, anything. So let us take it as a year for easy sake. At the beginning of the year, we will set a predetermined cost tax, which we call it as standard cost. And as and when we do the actual work, we will get to know what is the actual cost of our actual work done. Compare this actual cost with the standard cost. And if there is any difference or deviation, we call it as variance. If actual is less than standard, very good. We call it as favorable variance. So even the department or the workers who are engaged in this work will be rewarded for it. Whereas if actual cost goes beyond the standard cost, then we call it as adverse variance. And we will ask the respective department to explain the reason for the same. So we will analyze the variance and ask them to report for the same. So that if there is any changes which we can bring, at least we will bring it so that in the next year we can control our cost. Okay. First, guys, I will try to explain the concept with an example. Then we will go through the formulas. See, at the beginning of the year, we always set a standard which acts like a target, which just act like a target. And at the end of the year, we get to know what is the actual work done, and for that actual work, what is the actual cost we are incurred. Now, assume a company has set a standard cost of 10 lakh to complete a work, but the workers have incurred a cost of 12 lakh. So that means we have incurred 2 lakh more. What do we call it as? 2 lakh adverse. Correct? Actually is more than the standard 2 lakh adverse. Now we will try to figure out a reason for it. Guys, this 2 lakh will be mainly because of three reasons. Either you have incurred material cost more, labor cost more, or overhead cost more. So now, for me, if I just tell 2 lakh extra, it won't be feasible. I need to tell why extra for what reason. Clear? So even this 10 lakh has to be given a breakup element wise. So when they have told 10 lakh, you have to incur the cost. How much for material? How much for labor? How much for overhead? Give me the breakup. So in this 10 lakh, they have told standard material cost should be 5 lakh, standard labor cost should be 3 lakh, and standard overhead cost. Here I'm not breaking variable and fixed. We will take it as a whole. Overhead is 2 lakh. So the total is coming to 10 lakh. Yes. This is the cost which we are supposed to incur, standard cost. Now we got to know the actual cost. Total is 12 lakh. If I break down, material is 6, labor is 3 lakh 50, and overhead is 2 lakh 50. Now compare each other. Now we are trying to find out this 2 lakh is because of what? How much because of material? How much because of labor? How much because of overhead? Okay, sir. Now, standard material cost was supposed to be 5 lakh, but actually I have incurred 6 lakh. That means 1 lakh more. So, what is the material variance? 1 lakh adverse. Means I have incurred an additional material cost of 1 lakh. Now, let me again try to figure out the reason for this. Sir, this 1 lakh extra, why, sir? Either I have used excess quantity or I have paid excess price for each kg of raw material. So now let us try to figure out that. So this I am breaking down. I was supposed to use standard quantity, 50,000 kgs of raw material in my production process. For each kg, what is the amount I was supposed to pay? 10 rupees. But actually, how much did I use? 54,545. So I have used excess. If I have used excess, obviously because of some wastage or loss in the process, yes, sir. Because of that, will I have adverse variance? Yes. Same way, I was supposed to pay 10 rupees, but I actually paid 11 rupees. This is called standard price, this is called actual price. So actually, I have paid more. That means even this will lead to an adverse variance? Yes. Hope you are understanding. First, we got 2 lakh. We 2 lakh, we tried to find out how much is because of which element. We got 1 lakh because of material. Now we are trying to figure out the reason under that also. Because of excess usage of material, because of excess payment. Okay, sir. We got. Fine. Material part done. Now let us go to labor. I was supposed to incur 3 lakhs standard labor cost, but I have incurred 350. That means there is an adverse of 50,000. Now let us try to figure out the reason. Maybe I have taken more hours to complete the job, or I have paid more rate to my workers. I was supposed to work only for 3,000 hours to complete this work, but we have worked for 2,800 hours. Good, sir. We have saved the time. Really good. Okay. So that means with respect to hours, we will get positive variance. But with respect to rate, we have paid more. We have paid more. Instead of paying 100 standard rate, we have paid actual rate 125. So here we will get adverse. So if I net adjust both, we will get overall 50,000 adverse. Clear? So when do we have adverse labor variances? Either you have used excess hours or you have paid excess to the workers. Same way we will try to figure out the reasons for this 50,000 adverse also. Under overhead there will be two breakup, variable and fixed. So we'll try to calculate. So 50,000 is because of what? Variable overhead or fixed overhead. Under that also there are various variances. Understood? Means I'm just trying to explain you why are we doing all this. Yeah, I want to know why we have incurred the excess cost or extra cost, and I'm trying to figure out the reason for it. So that at least in the upcoming period, I cannot change my past. At least in the upcoming period, I can take some necessary steps so that my cost would come down. Yes. Next important thing is see this standard data, whatever they would have given, should always be for actual should always be for actual output. Here everything I have taken plain. Let us go to the next table here. Guys, see, they have given a standard cost. Assume this is like a different case. Standard cost, they have given it as 10 lakh. In that, how much is material, labor, overhead? 5 lakh, 3 lakh, and 2 lakh. Yes, sir. But this was for 1 lakh units. Standard data was given for how many units? 1 lakh units. Now coming to the actual data. Now let me come to the actual data. Actual cost is 11 lakh. In that material, labor and overhead is 580, 320 and 2 lakh. And this is for 80,000 units. Means actual output is 80,000 units. Guys, now you guys tell me, can I compare directly this with this? No, sir. The base is not the base is not same. What base, sir? Here, whatever data is given for 1 lakh units, whereas here it is for 80,000 units. And obviously, I know that if I compare this two, we will get a difference. Why, sir? Because this is for 1 lakh and this is for 80,000. Correct. Now I cannot tell you whatever you are supposed to incur for 1 lakh, you incur for 80,000. How is it fair? Clear. Now convert the standard data for what? Actual output. Now what is actual output? 80,000 units. Convert all the standard data. Standard data should always be converted for actual output price. So 10 lakh is for 1 lakh units. How much for 80,000 units? We get 8 lakh. I have given the equation here, you can see. A is nothing but standard. Okay, A is for 1 lakh units. We need to calculate for actual output of 80,000 units. Same way, 5 lakh is for 1 lakh units. How much for 80,000 units? So you'll get 4 lakh material cost, labor cost 2 lakh 40 and overhead 160. Now can I compare this two, sir? Yes, because both are for same level of output. That is 80, 80. Now this both are comparable. Correct now guys. So please be careful normally, especially with respect to quantity and hours. While calculating material variances, quantity, and while calculating labor variances, hours, you should always convert it for actual output. I am explaining the reason. Why do we do that? Because we will learn all that now. Yeah, I'm explaining you, sir. Why do we convert always standard data for actual output? Because actual cost will always be for actual output. So actually you have done that. Now what should have been done is standard. So standard also should be for actual work done. Okay. Hope you understood. Now this both are comparable and we will see if there is any variance. Like however we did. Clear? Yes. So here we assumed that everything was like for actual output only and I explained it. One step ahead I went and I took here. Sir, should we convert our standard data for actual output? Very simple. Let me give simple example. Now can we compare your 10th mark sheet with CA marks? 10th, sir, all 90 plus, 95 plus, or even plus 2. Chinmay, correct? Sir, state rank holder, sir. But when it comes to CA, reality we will understand. Sir, CA we should not take so lightly how we took our +2 or even our 10th. It will teach you everything. Clear? Yes. It's not like you are taken lightly now, but it will teach you that you should not take lightly. Yes. Because many students, what happens? They will understand the standard of CA exams only after 1 or 2 attempts. After seriously, because they believe that, especially those who have come from degree route also. Sir, degree push model, sir. They used to push up. Clear now? Whereas in CA it is pull model. They will not pass you. In degree, whatever you write, they will pass you. Correct? In respective universities, okay, or colleges, because they want you to go out after 3 years. They don't want to keep you. New batches are coming. Whereas when it comes to CA, it is not like that. They want to keep you in the majority side. Majority side is which side? Failing, unsuccessful side. Clear? So please make sure that you will not fall under the unsuccessful category. For that, you have to be exceptionally good, guys. Clear? I know. See, most of you would be giving your best till now, but may not be 100%. May not be 100%. I tell you, see, only when you give your 100%, you get the results what you want us. Clear? Because I have seen literally students taking 6 attempts, 7 attempts, 8 attempts, or 10 attempts. See, nothing wrong in taking the attempts because TA is TA at the end of the day. But the thing is, if you just give your 100% in one attempt, you can just close the game and move forward. Clear? Instead of studying the same thing, you again and again, you also feel like, oh, all this I had studied last time also. When you open the book also, you feel like, oh, I had studied all this. Yeah, that hurts. But somewhere you would have taken something for granted. Something you would have left. Something, somewhere you would have gone to your comfort zone. Just think about it. Sir, now assume 1 or 2 months is left for the exam. If you just push yourself hard, complete it as much as possible, give your best. Sir, 12 hours, 14 hours a day, you are able to study. You can study. 12 to 14 hours, assuming you are not doing anything else other than CA, you can study 12 to 14 hours if you avoid all your distractions. Now, if you can give your best in this 1 or 2 months, again it will avoid studying same thing, guys. Clear? Because again repeating for 4 months, that will not be fruitful. And over a period of time, you will also lose interest. Ayo, why to wait so many times? My friends and all, after already degree, they are already working, they are already earning. Please don't give up. I tell you, you will realize the importance of this qualification once you qualify. Very, very much important, guys. I tell you. See, I will give one example which is very close to me. That is my wife. Okay, she cleared her exams later, but today we both are qualified chartered accountant, and she is enjoying her qualification. Clear, and it will happen for many people. It will happen. I can see some of them even after married, they are doing it. Highly appreciable. But you guys make sure that before you get other responsibilities in your life, you clear it off, because managing studies along with other responsibility, maybe your work or family or whatever it is, it's highly challenging, guys. I'm not telling it is impossible, it is highly challenging. Now you don't have anything in your life except studies. Eagles, you will feel. Yeah, just think about managing studies with other things. Will be I like more challenging for you. Clear. See, I was just following this cricket. I'm the big cricket fan. Okay, but now we don't get time to watch. Previously, when I was in school and all, even test match ball to ball I used to watch. Okay, but now we cannot watch because of our time constraints. I was just watching. Just look at the players how they are performing, even when they are completely injured. One person going to play only in one hand. Another person is coming with a broken or fractured leg. Okay, like this number of examples have happened. See their dedication. They know that they cannot go and perform there. They know that I can at least stop the match. I can at least stop the other person winning the match. That is their intention. Correct? Now, Chris Wokes came with an intention of not he hitting the ball and winning the match. He just wanted to go and stand there. Same way with Pant and all. So many people have played like this. So I know you guys also somewhere feel mentally tired, physically tired. Okay, sir, I am not able to do it. Oh, yo, I am not able to sit for so long hours. But somewhere, guys, just try to remove that from your mind and see that can you give better. Okay, is it possible for you? Yes, I really appreciate for you guys who are attending both the revision classes now. Morning costing, evening accounts. Sir, sitting for so long hours, is it practically possible? You guys showed that yes, it's possible. Clear? If I ask you to sit for a regular classes and all for so long, you will tell no. But now, just before the exams, you guys are ready to sit. because you will also know the importance of the classes. Clear? Sir, if it is helpful for me, I will do it. Tough, I agree, it is tough, but I can do it. Clear? So even at your home, guys, when you feel that after 8 hours or 10 hours, oh, my body is tired, let me rest. Maybe if it was during your regular study period, yes, I would have suggested take rest. But just before the exam, try to push as much as possible. Try to push. Sir, 8 hours, try to make it 9 hours. 9 hours, try to make it 10 hours. 10 hours, make it 11 hours. So how much ever is possible, because guys, assume just half an hour or 1 hour extra in a day can bring you a lot of things in your life. Just imagine 2 marks extra you are studying every day. 2 marks into number of days. Sir, whoever is in 120, 130, 140, pass. Correct. Many people have failed just by getting 130, 140, 145, 146, 148. Passed in all the subjects, but not passed. Sir, how is it possible? In CA, everything is possible. Passed individual subject, but failed in results. How, sir? Aggregate. Clear? And it is very painful to accept that results during the results time and to move forward. So that is why I suggest you, see, you have that potential in yourself. Make sure that you are giving your best, and whatever is possible, try to cover entire syllabus, guys. Solve good number of questions, then we will see why you cannot pass. And especially costing, the more number of questions you solve, the more comfortable position you will be with respect to passing the exams. Clear? So even in these concepts, I am telling you, however, to apply the concepts in the questions. But you guys also watch the questions marathon. For each and every chapter, I have done a questions marathon, yeah, which is also available. In the regular class, I would have already covered number of questions, including the past examination questions. But now, if time permits, please do also watch the questions marathon, where you will get an idea about, sir, how to solve the question, the stepwise, how to start, how to solve, and how to end. And once you watch, try to take up some interesting question. Maybe now you are not able to solve all the questions. At least in one chapter, you will find 1 or 2 questions interesting. Take up that question. Don't look into the answer. You try solving. And while solving it, don't simply put only numbers. Plus, minus, plus, minus. Please present it as if it is an exam. Particulars, so amount, working note, everything you give us. Because in the exam, what happens now? If you are not writing the notes, working notes now, in the exam also, like automatically you will follow that one. Or in a hurry, you will feel like our notes is not required. We will go forward. Guys, many students lose marks in that. So please ensure that you write 100% of your answers, which the evaluator would be impressed with. Don't take a chance thinking, let us see what he will do. Okay, if you take that chance, you can correct it only in the next step. Now you cannot go and plead the evaluator, because you are nowhere aware that who is that guy or who is that girl who is evaluating your paper. So try to give that proper 100% answer in your answer sheet, and that will come only by way of practice. Sir, now I will practice roughly, sir, in the class or during preparation. In the exam, perfectly I will present, sir. Maybe your hand will not run, guys, automatically. Yeah, this will happen because now you are used to writing only numbers. There you are supposed to write notes, so particularly data ella ಬರೀಬೇಕಲ್ಲ. There you will not feel that comfort in writing. Somewhere you feel that you are getting stuck or your hand is getting stuck. Please don't get into those problems. Okay, now let us get back to our syllabus or problems. Sure. Let me read. Standard costs are divided into 3 main cost components, which is nothing but elements: direct material cost, direct employee cost, and overhead cost. So we saw standard cost, they had given us the target of how much? 10 lakh. Now 10 lakh we will break down element wise. How much should be my standard material cost, standard labor cost, and standard overhead cost? Now, by comparing our actual cost with standard cost, what do we calculate, sir? Variance. If variance is positive, we call it as favorable. If variance is negative, we call it as adverse. The primary object of standard costing is to reveal the difference between actual cost and standard cost. Standard cost is nothing but how much should have been my cost. It is like a target. After standard costs have been established, the next step is to ascertain the actual cost under each element and compare them with the standard cost. The difference between them is called cost variance. If actual cost is more than, I have given it here, if actual cost is more than standard cost, then we call it as adverse variance. If actual cost is less than the standard cost, then also we will have variance, but that is favorable variance. Favorable variance will increase the profit of the organization, whereas adverse variance will bring down the profit of the organization because we have incurred more costs. Now coming to the variance calculation. So please be little attentive because all this formulas, derivation also I will tell you, very easy. Guys, while calculating any variance means you are finding out the difference. When you are finding out finding out any difference, something minus something. Correct? Something minus something. Now standard minus actual, actual minus standard. You tell me what will come first. Standard will come first or actual will come first? ಮೊಟ್ಟೆ ಮೊದಲ ಕೋಳಿ ಮೊದಲ ಅಲ್ಲ ನಾನು ಕೇಳ್ತಾ ಇರೋದು. Will standard come first or actual come first? Standard. So in the formula always it should be standard minus actual. Clear? No need to get confused in any formula except two, which we will learn it under fixed overhead. Clear? Everywhere else it is always standard minus actual, because standard we will have it at the beginning of the year, whereas actual we will get to know only at the end of the period. Okay, sir. Now, material cost variance. Sir, we are trying to find out what is the difference between standard material cost and actual material cost. Yes. Guys, for this kind of question, whenever they ask you to calculate the material variance, labor variance, or the overhead variance, first draw a table. Even though they have asked you to calculate the variances, but draw a table. Sir, what kind of table you are talking about? Let me show you. Like this. The table which is showing you the data about the standard and actual. Clear? Normally, number of materials will be given, guys, like X, Y, Z, and all. There are different kinds of raw material used in the production process. Okay. So you will write first the standard quantity. Guys, standard quantity you can see here. Sir, they have given per unit of output 6 kg and 4 kg. And what is the actual output, sir? 1000. Always convert the standard data for actual output. Clear? So that is your first job. Whenever you are solving the question, first check whether standard quantity is for actual output. If it is already given, well and good. But most of the time they don't give it directly. You need to calculate it. Standard should always be for what? Actual output. Okay, sir. Standard rate they would have given. Standard rate is nothing but like per kg or per unit. Okay. We call it a standard rate or standard price. One and the same. Then if you multiply both, what do you get? Standard cost. This is nothing but standard cost of material. Then actual. Actual will be already directly given in the question. You need not do anything extra. Clear? So actual quantity, actual rate will be given. You calculate actual cost. Actual cost means you need to multiply both. That's all. Clear? Now, sir, what is the material cost variance? We are finding out the difference between standard cost and actual cost. You can find it out in two ways. Sometimes even ICS suggested answers will give only the total calculation. That is standard material cost minus actual material cost. Here you will get adverse because actual is more. Clear? Yes. Or else you can do individually also. That is this minus this minus this, then add up. I would suggest you when they have given more than one kind of raw material, do it individually and show the total like this. Show the total also, don't miss it. You can just observe the presentation. Write the formula first. That is also very important thing. Sir, formula I have in my mind, sir. I will do only the calculation, sir. They will also give marks accordingly. Clear? They will cut the marks for sure. Please write the formula, and I suggest guys to avoid the shortcuts. See, even sometimes ICI in suggested answers they will use AQ, SQ and all. But we don't know whether evaluator will accept it or not. Okay. To be safer from student angle, please try to write full forms. I know it will take little extra time. That's okay. That's okay, guys. Oh, hope you understood. That is the material cost variance. What are we calculating here? The difference between the standard material cost and actual material cost. Got it? Next. Next, sir, if I divide the cost variance into two, we get usage variance and price variance. I discussed, we had a material cost variance that will be due to two reasons. Either you have used excess quantity or you have paid excess price. I discussed at the beginning. Yes, sir. Now, either you have used more raw material or you have paid more price. So that might be the reason for material cost variance. So let us find out that. What is the formula for this? Okay, first material cost variance let us discuss, which we have already finished. standard cost of material for actual output minus actual cost of materials, which is nothing but how do I get standard cost, sir? Standard quantity into standard price minus actual quantity into actual price. And please be careful, guys. Standard quantity should always be for actual output. Okay. And if there is any variance, it will be either due to price or usage. Now we have two formula for it. Price and usage. Guys, come on. If there is a material price variance, we are finding out the difference between whom? Use a quantity na price. Price. So which price will come first? Standard price. So what is the formula? Standard price minus actual price. This is the extra cost we have paid. For how much quantity? Actual quantity purchased. Actual quantity purchase. And who is responsible for purchasing that? Purchase department. So if there is any adverse price variance, that is material price variance, who is held responsible? Purchase department. You didn't negotiate properly. You didn't find a better supply. So they are held responsible. Next is usage. Now usage, what do you use? Price or quantity now? Quantity. So we are finding out the difference between the quantity. So what is the formula, sir? Standard quantity for actual output minus actual quantity. And actual quantity here, which ones are used or consumed? Because you are using. There is a difference between purchased and used, you know, na? Yes, I will explain that. Into standard. Who is responsible for using the raw material? Production department. So if there is any adverse usage variance, who is held responsible? Production department. Production department, because they are the one who is using the raw material. If there is excess usage of raw material, who should be held responsible? Production department. Got it? And sir, see guys, for price variance we are supposed to use whatever we are purchasing, whereas for usage we should use what is used or consumed. Clear? Normally they may not give separately. They will just give actual quantity. We will assume that quantity purchased is equal to quantity used. But if they have given opening stock and closing stock, then there is one question on elicitation in ICA material about this. Clear? I have explained this even in my regular class. If there is opening stock and closing stock of raw material given, then purchase would be different, use would be different. But for academic purpose, in order to reconcile the variance, you use consume. You use consume. I have given a note here, you can see. It is always assumed that quantity purchased is equal to quantity used or consumed. Because if nothing is given in the question, we will assume. Until unless separately given in the question. Means in the question they have given purchase separately, consumed separately. Or else they have given the information about opening raw material and closing stock of raw material. In that case. If in the question both quantity purchased and quantity consumed is given, then use quantity consumed for variance calculations. Clear? Actually speaking, sir, here we should use purchased, here you should use used. Clear? But for academic purpose, you need to reconcile the variance also. Clear? If it has to tally and match, better used here also consumed, here also consumed. If they have given it separate. Sir, only they have given actual quantity in the question, sir. Assume purchased is equal to consumed. Whatever is purchased is consumed. Hope you got it. Yeah. So in simple, I repeat once again, because this should not lead to confusion for you. If by chance in the question they have given consumed and purchased separately, including the opening stock of raw material and closing stock of raw material, in the variance calculation, consider consumed. Consider consumed. Okay. And once you calculate the usage and price, guys, if you add up both, that should be equal to material cost variance. Only ensure that and then move forward. Only ensure that and then move forward. And easy to calculate also, guys. All this are once you know the logic and the formula, application is easy. Sir, use price variance. Standard price minus actual price. Okay, now into what? Actual quantities. Clear? Individually you calculate and add it up. And please be careful. One is favorable, one is adverse means. Please do the net. Okay, students always do add up and write on them. If one is favorable, one is adverse, one is negative, one is positive. So you have to do net adjust. That is where sometimes students will miss out. Yeah, they will be exceptionally good in advanced topics. Some simple things like this they will miss out. Yeah, so please don't give chance like that. Next, usage. Sir, what are we comparing? Quantity. So standard quantity minus actual quantity into standard price. Into standard price. Clear? You can see that. Next coming to mix and yield variance. So usage variance is subdivided into mix and yield gas. Sir, when will this come as? Only when there are more than one kind of raw material used in the production process. Let's assume I am using three categories of raw material A, B, C. In the production, I was supposed to use 2 is to 3 is to 1 ratio. That is 2 kg of A, 3 kg of B and 1 kg of C. Clear? But I am mismatched, sir. I have used more of C, sir, and less of B, sir. Something mismatch I have done. Because of that, will I get a variance? Yes. Because the cost of A, B, and C raw material will be different. So if you have made any mistake in the mix of using the raw materials, whatever variance you get is called material mix variance. Material mix variance. When do you get it? Only when there is more than one kind of raw material used in the production process. Sir, I am using only one raw material in my production process. Then this will not come. Then this will not come. Okay. Material mix variance. Sir, what is the formula for it? Revised standard quantity minus actual quantity used into standard price. Sir, what is this revised standard quantity? It is the total actual quantity which we need to break up in the ratio of standard quantity ratio. In the standard quantity ratio. So if I have to tell it in this question, we need to take this 10,700 and divide it in 4 is to 6 ratio. 4 is to 6 ratio. We get revised standard quantity. Simple. If this quantity was used in this ratio, what is that mix? Clear? Yes. And you will get this variance only if this mix and this mix is mismatching. You are supposed to use in 6 is to 4 ratio, but you have used it in some other ratio. Only then you will get this mix variance. Got it? I repeat once again. Take the total actual quantity, divide it in standard quantity ratio. So I will show it. Revised standard quantity. You can see how 10,700. I have divided it between X and Y in 6 is to 4 ratio. We will get the respective numbers. Take that here. Revised standard quantity minus actual quantity into standard price. Is that clear? Sir, instead of doing it separately here, can I add one extra column here also? Yes, that is fine. If you're comfortable, you can do that. Clear? Or else, please show the calculation. If you're not done here, please show it here. I have shown here, you can see. Revised standard quantity. And the last formula is yield variance. Yield variance. What is the formula, sir? Standard quantity minus revised standard quantity into standard price. Clear? Standard quantity and revised standard quantity I already explained. Deduct each other and multiply with standard price. You will calculate it for each raw material. Each raw material. You can see here. Each raw material. We have another way of calculating yield variance. See, using this formula, I calculated for each kind of raw material. One overall formula is there. What is it, sir? Total standard input. What is the total standard input? 10,000 minus total standard, I repeat, total standard input minus total actual input into average standard price. Into average standard price. Sir, how do I get average standard price? Standard cost divided by standard quantity. You will get 8.8. Clear? Yes, sir. So find out the difference between this. You will get 700 into 8.8. I have shown it here. You can see. This is the total standard quantity. This is the total actual quantity into average standard price. This is average standard price. How do I get average standard price? Standard cost divided by standard quantity. Clear? That means you will get overall. You can see it is matching. Same thing, it is matching. Yeah. So if you want to calculate individually for each element of raw material, do this. No, sir, I will calculate overall, then you can use this. Sir, which do you suggest us in the exam? Maybe this. If it is like MCQ question and all, you can use this. Tuck, 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 tuck calculation. Clear? If not, better use this. Okay, sir. Fine, sir. Then coming to labor. Sir, in my example, where are you? My example. Sir, we found out the reason why 2 lakh. Now let us try to find out reason why 1 lakh. There will be two major reasons. What is it, guys? Two major reasons. What is it? Either you have worked for more hours or you have paid more wages to the workers. Clear? Yes, sir. And here also, guys, one more thing. If you add up both of this, you will get equal to usage variance. Just try to reconcile at the end. If it is not matching, that means somewhere you have gone wrong. Please quickly cross check. Clear? Yes. Yes. Now coming to labor cost variance. Sir, what is labor cost variance? Same like material. Guys, once you know material, labor is easy. Instead of quantity, here we will get hours. There it was like price or rate per unit. Here it is price or rate, or normally rate. We don't call it as price. Rate per hour. Rate per hour. So labor cost variance is nothing but standard labor cost minus actual labor cost. Then, sir, this will be due to two reasons. What are those? Efficiency, rate, or idle time. See, rate variance is how much we have paid. Guys, here itself, name itself is telling rate. So you are finding out the difference between what? Rate. Standard rate minus actual rate. And this you will pay for what? Actual hours spent. Actual hours spent. Okay, sir. Next, labor efficiency variance. Guys, efficiency can always be measured for actual hours work, the spent hour work. Productivity we will get for actual hours work. So this will always be for worked hours. So what is the formula, sir? Standard hours for actual output minus actual hours work into standard rate. Into standard rate. And sir, if there is any difference between spent and work, what do we call it as? Idle time. So we need to separate to calculate idle time variance. So what is the formula? Idle time into standard rate. That's all. And it will always be adverse. It will always be adverse. So let us see now the formulas. Labor cost variance. What is the formula, sir? Standard hours for actual output into standard rate. What do we get? Standard labor cost minus actual hours into actual rate. And actual hours here means actual hours spent, because the payment will always be made for spent hours. Okay. That will give us actual labor cost. And actual labor cost, if it is more or less than standard labor cost, then we will get labor cost variance. And if there is labor cost variance, there will be two reasons for it, either the hours or the rate. Now let us calculate that. Labor rate variance. What is the formula, sir? Standard rate minus actual rate. And here rate means will always be per hour. Will always be per hour. So standard rate minus actual rate into payment is made for spent hours or worked hours. Spent. So spent. Very simple. Sir, I am spending 9 hours in my office, but I am working only for 7 hours. So productivity is for 7 hours or 9 hours? 7 hours. So efficiency is measured for 7 hours, whereas the payment is given for 9 hours. So labor rate variance, we need to take for spent or work spent, whereas efficiency is for worked hours, that is 7 hours. Clear? There is a difference. Please be careful. Sir, actual hours, is it same? No, it will be different. That is only when there is ideal time. Okay. Labor rate variance, if it is adverse, guys, if it is adverse, who is responsible for it? HR department. Because you are the one who is negotiating with the workers, new workers. You should have negotiated a better price with them. Next, labor efficiency variance. Labor efficiency means, sir, efficiency is measured in terms of price or hours. Hours. So what is the formula, sir? Standard hours for actual output minus actual hours worked into standard rate, because efficiency or productivity is given for hours work, not for hours spent. Okay, sir. So who is responsible? If by chance, if actual hours is more than the standard hours, who is responsible? Sir, the production manager. He didn't make the workers work, or the supervisor. Okay, there will be a supervisor now who will keep on telling, hey, work, why are you wasting time? He didn't do his job properly. He didn't do his job properly. Yes. So, how do we calculate work hours, sir? Spent hours, or we call it as paid hours minus idle time. Idle time. And whenever there is idle time, while calculating the labor variances, always assume it is due to abnormal idle time. It is always due to abnormal idle time. Okay. So if there is idle time, then we need to calculate that also. Idle hours into standard rate, and it will always be adverse, guys. Always be adverse. Okay, sir. And sir, what if by chance if there is no idle time? See, you will reconcile here. Labor cost variance is equal to labor rate plus labor idle time plus labor efficiency. If by chance if there is no idle time, then obviously hours spent is equal to hours worked. So straight away rate plus efficiency. That's all. Rate plus efficiency will give you cost variance. If question is silent about idle hours, you don't assume something and take it. You assume there is no idle hours. You assume there is no idle hours. Okay, and I am telling you again, whenever they have given idle hours, please assume it to be due to abnormal reasons. So that is why we are doing a separate calculation for it. If it is due to normal reason, we ignore it. We ignore it. Okay, fine, sir. So we got this or even idle time. Next, sir, efficiency variance can be subdivided into labor mix variance and yield variance. Very similar to material. Very similar to material. Guys, for material mix variance, what was the formula? Revised standard quantity minus actual quantity into standard price. Here, instead of quantity, bring hours. Standard hours minus actual hour. Hello, actual hours spent or work done. Guys, simple logic. For efficiency, you are using work or spent? Work. And this two are the subdivision of efficiency. So what should you use? Work. Common sense. Correct. You have to use work. So revised standard hours. Revised standard hours minus actual hours work into standard rate. Whereas here, standard hours for actual output minus revised standard hours into standard rate. Clear? Yes. Sure. Let us see. Labor mix variance or gang composition variance. Sir, when will this variance come? Guys, only when there are more than one category of workers used in the production process, like skilled, semi-skilled, unskilled. Sir, only if there are one category of workers working in the manufacturing process, then you will calculate only till here. Clear? Yes. So, for example, why is this mix variance, sir? Simple, guys, listen. Sir, there are skilled, unskilled, and semi-skilled workers. To produce each and every unit, I was supposed to use 2 hours of skilled workers, 5 hours of unskilled workers, and 3 hours of semi-skilled workers, sir. This is what was standard proposition. But now I have mismatched this. I have used more of skilled. That means payment will be more, na? Clear? Yes. So that means I have missed out that mix. And gang, why are you calling it as gang? All these people put together gang. Boys gang irutal. Okay, or even girls gang will be there. Clear? So like that. Sir, the group of workers is called gang. Correct, Tejaswini? Group of students is called gang. Same way, group of workers is called gang. So mixed variance, we also call it as gang composition variance. So if there is any mismatch of the hours of each category of workers, then we will have adverse mixed variance. Okay, sir. Now here, so what is the revised standard hours? Simple. Take the total actual hours worked, divide it in standard hours each. What do you divide? Total actual hours worked. Guys, here you will take this now. Same thing total you take. Divide it in standard hours each. Clear? Yes. So formula is revised standard hours minus actual hours worked into standard rate. Next coming to yield variance. Standard hours minus revised standard hours into standard rate. Here also we can use the alternate formula. What is that alternate formula I told you? Total standard hours minus total actual hours work into average standard rate. How do we get average standard rate, sir? Standard cost divided by standard hours. Got it? Yes. Let me also show it in the question, guys. Just a minute. You can see here. I'm just showing you how to apply it. First, always prepare a table like this. This will help you in variance calculation. This is standard data. This is actual data. Always ensure that standard is for actual. Even here, they are given the standard data for 1 unit. 1 unit they have given in this. They have given for 1 unit of output. Convert it for actual output of 10,000. Okay, we have done it here. We have done it. Okay. Once we have got standard hours, multiply that with standard rate, we will get standard cost. Same way, actual hours spent would be given in the question. Clear? That is paid hours. This is the hours for which payment is made. Multiply that with rate, you will get actual cost. Clear? And when you are calculating the labor cost variance, you should always straight away deduct each other. Sir, standard cost minus actual cost for each of them. Clear? Or else you can do it total also. Standard cost minus actual cost. I suggest you to do individually and then show the total. Yeah. Then coming to rate. Sir, standard rate minus actual rate into what? Actual hours spent. Spent. Clear up? Yes, sir. Same way we have to do for all three and do the total. You can see here. And here we are taking spent. Please be careful. Next, coming to efficiency variance. For efficiency variance, we need work. So in the question, if they have given any information about idle time, deduct idle time from hours spent, guys. What do you get, sir? Actual hours work. We have got actual hours work. Clear. If possible, if you have space, you can add one more column here. Actually, two more. One is for idle time, the other one is for actual hours work. Hey, two column extra you have to add. One is idle time, the other one is actual hours work. Sir, no space, sir. Then better present like this. Then better present like this. Even revised standard hours will come. For that one additional column. So if you don't have so much space, better present it separately. Hope you understand. Please calculate this separately. Normally, this will not be given directly. Okay, sir. Then, so for efficiency, we use that. For efficiency, we use it. What is it, sir? Standard hours minus actual hours work into standard rate. And anything which comes under efficiency will always be for work. Okay. Then also calculate idle time variance. Idle hours into standard rate. And it will always be adverse. Normally, guys, while calculating the variance, if you get positive answer, favorable, negative answer, adverse. But for this, don't go for, sir, positive answer I got, sir. Multiplication, no negative symbol at all. So I will write favorable. No. Idle time is always a curse for a company. Clear? Because they are incurring the expenditure for the product output, which they are not got. No productivity, but still payment is happening. Okay, sir. Now you add up all these three guys. Idle, efficiency, and rate. Cross check whether it is matching cost variance. Clear? Only in totals you can check. Don't check it individually and all. Better check it in total. Just plus this. Everything is adverse. Is it equal to cost it? Clear? Only then you proceed further. If not, somewhere something has gone wrong, please cross check quickly. Then coming to mix and yield. Mix we need to calculate. Revised standard hours. Guys, how is it? Take this actual hours work total. Divide it in this ratio. 2 is to 3 is to 5. Total actual hours work in standard hours ratio. Standard hours ratio. Let me just show it. You can see. This is the total actual hours divided in standard hours ratio. Standard hours is simplified here. And ensure that total you will get same 1,07,000. Then you will also calculate yield variance, which is standard hours minus revised standard hours into standard rate. Once the data is ready now, just placing them. Apply the formula, place them. That's all. Tuck, 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 tuck. And don't take too much time for it. Yeah. And see, if you can do this calculation without calculator, do it. But if you're not confident, better use calculator. Yeah, because instead of writing favorable, you will write adverse. Instead of writing adverse, you will write favorable. So all that confusion don't want. Okay. So when you're doing, please follow the same order in the calculator also. So if you get positive answer, favorable. Negative answer, adverse. Assume. Then for this, we have an alternate formula also. I told you. What is it, sir? Total standard hours, which is 1 lakh. Take it here. I have done it here. Minus total actual hours work, 1,07,000 into average standard rate. How is it, sir? 3,90,000 divided by 1 lakh. We will get 3.9. Okay, now, so this is nothing but the total yield variance. Fine, sir. So clarification I have given. If any information in the question is relating to standard is given for other level of output, we call it a standard quantity because sometimes standard data might be given for 100 units, but actual output is for 1,000. So divided by 100 into 1,000. That is always convert the standard quantity as well as standard hours for actual output price. Now coming to overhead variance. Guys, whatever we discussed, material and labor will always be direct in nature. Whatever material variance and labor variance we discussed, that is with respect to direct. All indirect expenses will come under overhead. And overhead we will subdivide it to variable and fixed. But before we learn the overhead variances, sir, we should know how to calculate few rates. How is it, sir? Simple. Guys, I will try to explain with this example. Here they will use the word budgeted and all. So please be careful. Listen, guys. They will give budgeted data actual data. Budgeted is nothing but your target, which they have set at the beginning of the period. Actual is what you have achieved, what you have received. Okay. Chalo. Production, 1000. We call it as budgeted output. This is actual output. Then labor hours, budgeted hours, actual hours. Then overhead cost, budgeted overhead cost, actual overhead cost. Oh. Now you need to do some calculations, guys. I have just taken overall here and not divided variable, fixed and all, but same calculation for variable as well as fixed. You need to calculate the variances separately, but I have just taken overhead here just to explain you the concept. Sir, how do we calculate? For example, here, standard overhead rate per unit, 10 lakh divided by 1000. That is nothing but budgeted overhead cost divided by budgeted output. Divided by budgeted output, you will get 1000. Same way, sir, actual cost per unit, it is 8 lakh divided by 800, 1000 rupees. Got it? Then coming to, sir, standard overhead rate per hour, sir, 10 lakh divided by 8000, which we call it as budgeted overhead divided by budgeted hours. You will get per hour. Per hour output. Same way, sir, I want to calculate actual overhead rate per hour. How do we calculate it, sir? Actual overhead divided by actual labor hours. Got it. Hope you understand. Especially the standard calculations we need to do. Standard overhead rate per unit, per hour calculations and all we need to do, because this will help us in our variance calculation. Now, guys, when we are observing the overheads and all, it will always be based on standards. So here what they have given is not standard hours, it is budgeted hours. Sir, what is the difference between budgeted and standard? Guys, budgeted hours will always be for budgeted output. Whereas standard hours, we need to convert it for actual output. Sir, how is it? Simple. You can see standard hours for actual output. Sir, 8000 is for 1000 units. How much for 800 units? How much for 800 units, guys? Is that clear? So if you divide 8000 by 1000, how much you get? 8. Correct? Into 800. You will get 6400. What do we call this as? Standard hours. Standard hours is different, budgeted hours is different. I repeat once again. Budgeted hours is always for budgeted output. Whereas standard hours, we need to convert it for actual output. How is it, sir? Simple. 8000 is for 1000 units. How much for 800 units? That means to produce 800 units, how many hours you were supposed to take? You were supposed to take. Hope you understood, guys. Here budgeted is different, standard is different. Means with respect to hours. Now we will observe the overheads for each and every unit produced, because we would have fixed predetermined overhead rate. Correct? This is the predetermined overhead rate, guys. This is per unit per hour. Now, what is the standard hours? 6400. How much overhead we have observed? For each unit, 125 into 125, 8 lakhs. Or else we can go with units also. Observe. For each unit we produce, how much overhead we will absorb? 1000 rupees. How many units we have produced? 800. So 800 into 1000 will give us overhead absorbed. This is nothing but overhead absorbed, guys. 8 lakh, 8 lakh. You will get same. You can calculate it based on hours or output. Hours means it should always be for actual output. What hours? Standard hours. How much is my standard hours? 6400. For each hour we work, what is the overhead we should absorb? 125. So 6400 into 125. How much do you get? 8 lakh. We call it as overhead absorb. Clear? Then, sir, can I calculate in another way? Yes. What is the overhead rate per unit? Predetermined overhead rate. We discussed in overhead chapter also, now. Yes, this is nothing but predetermined overhead rate, fixed based on budgeted. Yes, sir. For each and every unit I produce, how much will I absorb? 1000 rupees. How many units I have produced? 800. So how much I would have totally absorbed? 1000 into 800, which is 80. Either way you can do, you will get same. Yeah, but please be careful when you are multiplying here, that is the rate per hour. Take standard hours. Standard hours. This is what you are supposed to take to produce 800 units. Hope you understood. So these are some basic calculations which you have to keep it ready first. Then you apply the formulas and calculate the variances. So I have given here, you can see. Standard overhead rate per unit. How do you calculate? Budgeted overhead divided by budgeted hour. Then standard overhead rate per hour, how do you calculate? Budgeted overhead divided by budgeted hours. How do you calculate standard hours for actual output? Budgeted hours is for budgeted output. How much for actual output? How much for actual output? Then standard output for actual hours. Budgeted output is for budgeted hours. How much for actual hours? Okay, especially these three are important calculations. Got it? Yes. Budgeted hours will be for budgeted output, where standard hours will be always be for actual output. Clear? So means budgeted hours only, we will convert it for actual output. What do we call that hours as? Standard hours. When I convert my budgeted hours for actual output, we get standard hours for actual output, like how we did for labor calculation. Oh, variable overhead variance. Now the overhead is classified into two. It can be variable or it can be fixed. Sir, what about material and labor? Whatever we discussed, I already told it is direct. When it is direct, it is always variable in nature. Okay, sir. Variable overheads consist of expenses other than direct material and direct labor, which vary with the level of production. Any cost other than direct material and direct labor, which will vary with the output or level of production, we put it under what? Variable overhead. Means it will vary with the production, means higher the production, higher will be the cost. Lower the production, lower will be the cost. Like that. Okay. If the way, and I am not telling it is direct in nature. Any overhead, obviously, it will be indirect in nature. Is it directly attributable to my product? Can I tell for each and every unit how much I am incurring? Maybe not. But is it varying with my production? Yes. So we call it as variable overhead. If variable overhead consists of like indirect materials, then in this case, it varies with direct material used. On the other hand, if variable overhead is depending on the number of hours worked, then in this case, it will vary with labor hours or machine hours. So if nothing is mentioned in the question, we will assume it based on labor hours or machine hours. So variable overhead variance is classified into two: variable overhead expenditure variance and efficiency variance. First of all, how do we get variable overhead cost variance? Variable overhead cost variance. What is the formula? Standard variable overhead for actual output minus actual variable overhead income. This is nothing but whatever actual cost is incurred. And please be careful, guys. Here we are doing only variable calculation. There will be a fixed calculation separately. Yeah, yes. Variable overhead cost variance calculation is very similar to labor cost variance. What was the formula, sir? Standard labor cost minus actual labor cost. Now here also, how do I get this, sir? Standard variable overhead for actual output. How do I get? Simple. Whatever is the standard variable overhead rate per hour, multiply that with standard hours. Multiply that with standard hours. You get the standard variable overhead for actual output. Or else standard variable overhead rate per unit, multiply it with actual output. You get this. Got it? Next, we will subdivide this into expenditure and efficiency. Guys, very similar to labor variance. In labor, we had labor rate variance. Now, what was the formula for it? Standard rate minus actual rate into actual hours spent. Actual hours spent. Correct. But here we will always take work. So what is the formula, sir? Standard variable overhead rate per unit, per hour, minus actual variable overhead rate per hour into actual hours worked. Here it should be actual hours worked. Clear? Yes. Same way. I have given similar to labor rate variance. Next one, variable overhead efficiency variance. Very similar to labor efficiency variance. What is the formula for labor efficiency variance, guys? Standard hours for actual output minus actual hours work into standard rate. Here also same to same formula, but instead of writing only standard rate, we need to write standard variable overhead rate per. Here are same to same formula. Standard hours minus actual hours work into standard variable overhead rate per hour. Sir, how was this calculation? Let me quickly show it. Just a minute. See here, when it is overhead variances, guys, you can get three kind of question. One question only on variable overhead variance. The other question is only on fixed overhead variance, or else they may combine both and ask one single question. Yeah, yes. So in the class, actually, I have done all three types. Individually for variable, individually for fixed, one combined question. I'm going with that one combined question. Guys, budgeted data is given, actual data is given. Now, first we will focus on variable part. First we will focus on variable part. Sir, first standard variable overhead rate per unit per hour we need to calculate. How is it? Takes budgeted variable overhead, divide it by budgeted output. You will get the standard variable overhead rate per unit. 30. Same way. Sir, per hour I need. How do you do? 1,20,000 divided by 8,000 hours. Here machine hours is given. So you will get 15 rupees per hour. Standard variable rate per hour. Then we also should calculate standard hours for actual output. Sir, budgeted hours is for budgeted output. How much for actual output? We get standard hours 7,600. Then even actual variable overhead rate per hour is calculated, which is nothing but actual variable overhead divided by actual hours. Divided by actual hours. Okay, now translate the values in the formula. Overhead, variable overhead cost variance. What is the formula, sir? Standard variable overhead for actual output. How do we get it? Standard hours into standard rate per hour. Or else, you can also do it in another way. How is it, sir? Actual output 3,800 into the rate per unit 30. I have done it here. I have shown it. Actual output into rate per unit. Or else, standard hours into rate per hour. Both will give you same. Minus actual overhead. Minus actual overhead. Oh, you will get same answer. This is just an alternate calculation. I have not done two different calculations. Yes, sir. Next, expenditure variance. Standard rate per hour is how much? 15. Minus actual rate per hour, 15.38. 15.38 into actual hours. Guys, as we have got decimal here. If you want to avoid the difference, then better take as it is. If I want to avoid the difference, then take this. You can see I have considered the same. 120 divided by 7,800. Because if I take 15.38, which is a decimal, you might get some difference. If you are reconciling, it will not. So in order to avoid the difference, you can do it. Sir, when I do this calculation, how will I do it in calculator, sir? Simple. You do 15 into 7,800 minus 120 divided by 7,800 into 7,800, which will give you 121. Clear? Huh? Hope you understood. 15 into 7,800, you will get 1,17,000. Here, cancel this out. You will get 120. Take as it is. So 3,000 others. By doing this, we are avoiding the difference. We are avoiding the difference, guys. Nothing wrong even if you take 15.38 here, but you will get some minor difference. Okay. Then efficiency variance. Standard hours minus actual hours into standard rate per hour. So everything is already ready. Just start. Clear? So 3,000 adverse, 3,000 adverse should be equal to 6,000 adverse. Matching, sir. Matching is okay. Let us move forward. And guys, till now, whatever we have discussed, all the variances which is having positive, favorable, which is having negative, adverse. Until now, whatever we have discussed, standard always first, actual next. Clear? Whereas under fixed, in two places it will change. Clear? Yes. Fixed overhead variances. Fixed overhead represents all items of expenditure, all items of expenditure all items of expenditure which are more or less remain constant irrespective of the level of output. Sir, how much ever the level of output changes, the cost will remain same, sir. We call them fixed overhead. So fixed overhead cost variance can be divided into fixed overhead volume variance and expenditure variance. And volume can be subdivided into three, which is efficiency, capacity, and calendar. And when there is calendar, we will calculate the revised capacity variance. Okay, if there is no calendar, then we will calculate only two. If there is calendar, then we will calculate capacity also, but that is revised capacity. Revised capacity. And when do we calculate calendar variances? Only when they are given the number of days information in the question, like budgeted days and actual days. Oh, pay attention. Fixed overhead cost variance. Fixed overhead cost variance is the difference between the actual fixed overhead and observed fixed overhead. Guys, in overhead chapter, we used to calculate under absorption, over absorption. Nothing but that only. Here they are not calling it as under absorption, over absorption. They are calling it as variance. There also it was difference only, people. Overhead observed minus actual. The difference is to be under absorption or over absorption. Here also same to same we are calculating, but they are naming it as overhead. Sorry, variance. They are naming it as variance. Chalo. What is the formula for fixed overhead cost variance? Observed fixed overhead minus actual fixed overhead. Sir, how do we calculate the observed fixed overhead? Recall your overhead knowledge. We will first fix predetermined overhead rate and assume it is per unit 100 rupees. For each and every unit we produce, how much we will be observing? 100 rupees. Correct? Yes, sir. So, observed can be calculated in two ways. I have written the equation here. You can also write the RMR. Observed fixed overhead is equal to Chinmay, right? Put the RMR. Manjunath done? Observed fixed overhead is equal to standard hours per actual output. How do we get standard hours? How do we get standard hours? Budgeted hours divided by budgeted output into actual output. Yes. Standard hours for actual output into standard fixed overhead rate per hour. How do we get this? Budgeted fixed overhead divided by budgeted hours. Oh, we'll get standard rate per hour. Or else the other way one is observed fixed overhead is equal to actual output into standard rate per unit. Please be careful. If this is the output, here you have to take rate per unit. If this is hours, then you have to take per hour. Both the ways you will get same answer. Both the ways you will get the same answer. Okay, sir. Then fixed overhead expenditure variance. What is the formula, sir? Budgeted minus actual. What is budgeted? They would be given in the question. Budgeted overhead will always be for budgeted output. Take as it is. Take as it is. Sir, what is the difference between budgeted and observed? Guys, observed, I have converted the budgeted data for what? Actual output. Clear? Means if predetermined overhead rate was observed for actual output, how much it would have been? Clear? Whereas budgeted will always be for budgeted output. Budgeted fixed overhead will always be for budgeted output. Whereas actual is for always actual. Actually, what is clear? Sir, how come, sir? Confusing terms. Listen. There is a difference between all three. Observed means if I am following the standard rate to observe on actual output, how much will I get? Clear? Now, standard rate I am following to observe for what? Actual output. How much do I get? Whereas budgeted is budgeted cost for budgeted output. Whereas actual is actual for actual output. Actually, how much you have? Clear? Yes. So this is like a mix of both. Rate is standard, but output is actual. Whereas this is both budgeted. Whereas this is both actual. So this is like a combination of both. Observe. Clear? Yes. Sure. So fixed overhead expenditure variance. What is the formula, sir? Budgeted fixed overhead minus actual fixed overhead. Whereas overhead volume variance. What is the formula, sir? Observed minus budget. Observed minus budget. There is a chance of that you might get confused. So please be careful, guys. Here observed minus observed. A minus A. Yeah. Whereas here B minus A. That is budgeted minus actual. Whereas last one, that is volume. It is A minus B. A minus B. Okay, sir. Next. Oh, first, let me discuss this with the question. Sir, coming to fixed data. How can we calculate fixed overhead rate per unit and per hour rate? Guys, simple. We have fixed budgeted overhead divided by budgeted hours. You will get standard fixed overhead per hour. If you divide 4 lakh by budgeted output of 4,000 units, you will get standard fixed overhead rate per unit. Got it? Yes, sir. Don't assume the variable and fixed rate per unit per hour will be same, Anta. It will be different. You can just observe in this question only. Yes. So we have got per unit 100, per hour 50. Let us see. Fixed overhead cost variance. Observed fixed overhead. How do we calculate it, sir? If I observe based on hours, 50 hours 50 rupees into standard hours. Standard hours, how much? 7,600. Hours data will remain same for both fixed and variable. Yes. Sir, what if I use output data? Then per unit. Per unit into actual output. 3008. You will get same. You will get same minus actual fixed overhead. You are getting 10,000 adverse. Next, fixed overhead expenditure variance. Budgeted, which is given in the question for budgeted output only, minus actual. Both will be given in the question. Don't worry. Both will be given. This minus this. That's all. Budgeted minus actual. Then volume variance. Observed minus budget. Observed minus budget. Okay, observed we already calculated minus budgeted. Just cross check, is it matching? 20,000 favorable and 10,000, sorry, 20,000 adverse, 10,000 favorable. You will get 10,000 adverse net. Sir, is it equal? Yes. Only then proceed further. Only then proceed further. Okay, let us now proceed further. Fixed overhead efficiency variance, similar to labor efficiency variance. What is the formula, sir? Standard hours for actual output minus actual hours, that is nothing but work, into standard fixed overhead rate per hour. Guys, one thing you keep, whenever you are finding out the difference between hours, even the rate should be per hour. Okay, sir. Efficiency variance. Next, coming to capacity variance. Guys, these two formulas are different. Please be careful. Till now, wherever we have calculated the variance, we have always taken standard first, then actual. Okay, for all the variants. Whereas here for this, it was a bit different. Whereas for all other variances, it was always standard minus actual. Positive means favorable, negative means adverse. Clear? Now we are thinking from capacity utilization point of view. Now guys, assume my capacity was to budgeted hours to work for 100 hours. But I worked only for 80 hours. Good or bad? With respect to capacity utilization? Bad. We have underutilized the capacity. You have underutilized the capacity. Clear? So will you have positive or adverse variance? Adverse variance. Or else, assume my budget hours is 100, but I work for 110. I use the capacity to the best. Overutilization. Clear? So will you have positive or adverse now? Positive. Clear? So that is why the position is interchanged. When it comes to capacity, guys, if actual is more, good. If actual is less, bad. If actual is less, that means what, sir? We have underutilized the capacity. Guys, here we are not thinking from cost point of view. We are thinking from what point of view? Capacity utilization point of view. Sure, should actual be more or less? Sir, it should be more, sir. It should be more. Okay, so actual hours minus budgeted hours into standard rate per hour. Clear? So please be careful here. The positions have changed. We are taking actual first, then budgeted. Then coming to fixed overhead calendar variance. Sir, here also we are talking with respect to the our days worked. Now assume I was supposed to work for 30 days. I have worked only for 29 days. Good or bad? Bad. I have worked one day less. That means one day's productivity we have lost. Yes, adverse variance. Same way. Assume guys, I was supposed to work for 25 days, but I worked for 27 days. Good. You have produced more. Good. See, obviously, if I have worked more, cost is more. But here we are not thinking from cost point of view. Did we work more or not? Did we use the capacity more or not? We are thinking from that point of view. Clear? So here also, if actual days worked is more than budgeted, it is always good. So we are taking actual first minus budgeted. Guys, what is the formula? Calendar variance. Actual days minus budgeted days. You will get the difference in days or hours or days. So rate should be per day. Per day. Sir, how do we get it? Simple. How do we get the rate per day? Simple. Listen here. Budgeted fixed overhead divided by budgeted days. Budgeted fixed overhead divided by budgeted days. That is the standard fixed overhead rate per day. See, by mistake, student might take here per hour, guys. Please don't do that. You are finding out the difference between days, not per hour. So even the rate should be per day. Per day. Hope you got it. Yes. And whenever you get confused with this, sir, should I take actual first or budgeted first? Just see, should actual be more or less? If actual is more with respect to capacity and work days, it is always good. So take actual first. If actual is more, it is favorable. It is favorable. Okay. And whenever we calculate calendar variances, whenever we calculate calendar variance, then instead of calculating capacity variance, we need to calculate revised capacity variance. Revised capacity variance. Sir, what is the formula? See, same thing, capacity, but this will change. What is it, sir? Actual hours minus revised budgeted hours into standard fixed overhead rate per hour. Sir, how do we get revised budgeted hours? Budgeted hours is for budgeted days into actual days. Means in simple, budgeted hours we are converting for actual days, sir. So let me show it here. How do we calculate it, sir? Simple, simple. Listen, listen. Budgeted hours divided by budgeted days into actual days. Into actual days. So you can see, I will show the calculation. In this question, calendar variance is there. Okay, that is actual minus budgeted into standard rate per day. So we are calculating capacity as revised capacity. So what is the formula, sir? Actual hours minus revised budgeted hours into standard rate per hour. So how do we get the revised budgeted hours? 8,000 budgeted hours divided by budgeted days into actual days. Into actual days. Okay, fine. General note at the end. What is that general note, sir? Whenever, just a minute. Yes. Whenever the variance is positive, then it is known as favorable variance. And when the variance is negative, we call it as unfavorable variance. But ideal time variance will always be adverse. Will always be adverse. And unfavorable and adverse is one and the same. Yes. Unfavorable is otherwise called as adverse. Fine. So we are done with discussing the standard costing. To the extent possible in this short period, I have tried to explain you each and everything. But if you have already attended the regular class, you will be knowing each and every formula. I have gone in detail and I would have explained you guys. Because this formula should not be mug up. You need to understand what you are calculating. Accordingly, you can only derive the formulas. Okay, which is very, very important. Because if you try to mug up and if you try to keep it in your mind, you cannot retain it for a long period. So this is all about standard cost. Yes, students. Now we will revise chapter 14, which talks about marginal costing. So before we learn marginal costing, we will see, sir, what is marginal cost? Then we will understand what is marginal costing. Guys, marginal cost means the cost of producing one additional unit. Sir, I was producing 1,000 units. Now, if I produce 1,001 units, will the cost be same? No, it will increase. So that what is that additional cost is called marginal cost, which is nothing but variable cost. Why is that? Because if I produce 1,000 units or 1,001 units, my fixed cost will remain same, sir. Will it change? No. The only cost which will vary along with my output is variable cost, which is nothing but marginal. So marginal cost and variable cost is one and the same, sir? Yes. So even if you have seen, whenever there is a semi-variable expenses or semi-fixed cost, sir, how do we compute variable portion and fixed portion? We will do a calculation. Normally, the data would be given for two activity level or for two period. Calculate change in cost divided by change in output. You will get variable cost per unit, which is nothing but marginal. Here, yes, sir. So you can see, I have given an example also. Guys, to produce 10 units, our cost was 10,000. Now to produce 11th units, we have incurred a cost of total 10,500. So what is the additional cost we have incurred to produce one additional unit? 500, which is nothing but variable. Clear? And marginal cost will include what and all, sir? Prime cost plus variable overheads. Variable overheads. Overheads can also be fixed. Will it be a part of my marginal cost? No. So marginal cost and variable cost is one and the same. Now coming to marginal costing. Sir, it is a method of technique. It is a technique. It is a technique used by the management for decision making within the organization. That is internal decision making. And marginal costing is a technique where we consider only variable manufacturing costs to value the products. So the product cost is only variable manufacturing cost. Sir, what if I incurred any fixed cost for manufacturing? Then we will treat it as a period cost. We will treat it as a period cost. So we need to first task under marginal costing is to segregate variable cost and fixed cost. And when we calculate as a format type, if I deduct all my variable costs, whether it is manufacturing, non-manufacturing, everything, if my entire variable cost is reduced from the sales, we get something called as contribution. And from my contribution, if I reduce all the fixed costs, then we get the profit. But under marginal costing, they are not bothered about this. They are not bothered about this. Why, sir? Simple logic is, sir, if my decision can influence it, we will consider. Will my decision influence the fixed cost? No. Accordingly, they don't consider the profit also. So any decision under marginal costing will be made based on either variable cost or contribution. Why, sir? Because only variable cost is in my control. Whereas the fixed cost is not in my control, let me not worry about it. As I cannot make any changes in that, why will we consider? And please be careful, marginal costing is always used for internal decision making. Something opposite to marginal costing is there, which is called absorption costing. Absorption costing is also called as full cost technique. They will tell cost is cost. Whether it is variable or fixed, we don't care. I have incurred a cost of 10,000. Yes, we will record. And absorption costing system will record all the manufacturing costs to value the products, whether it is variable or fixed. Got it? Under absorption costing, my inventory will always be overvalued. Why, sir? It will include one additional element called fixed manufacturing overhead. And anything which is not related to production, they will treat it separately. They will treat it separately. Yes. And absorption costing system is used for external reporting purpose or for income tax purpose. External reporting means, guys, when you are preparing the financial statements in your accounts, have you ever bothered about how much is variable, how much is fixed and all? No, just record all the expenses. Same way in income tax also, you will bother about what is allowed, what is disallowed under the TGBP. But do you care about, sir, what is variable, what is fixed, what is controllable, what is uncontrollable? No. So for income tax purpose and for preparing the financial statements, we always follow a technique called absorption costing. That is for external purpose. We always do this for external purpose. Correct? Income tax calculation is for income tax department, whereas financial statement is for the user or the shareholders. Yeah. Whereas within the organization, to make various decisions, we use a technique called marginal costing. Is that clear? Yes. So if I have to give an example also, I have made one example here. Just a minute. Yes, you can see. Guys, direct material cost to produce a product is 250. Means we are using 10 kg of raw material at 25 rupees each. 250. Direct labor is 2 hours at 200 per hour, so 400. Variable manufacturing overhead is 50. And fixed manufacturing overhead is 100. So total manufacturing cost per unit is what? 800. If I am following the marginal costing, if I am following marginal costing, I will value each and every unit at what price? Sir, only this much. That is 700. Whereas if I am following absorption costing, I will value each and every unit at what? 800. Let me go little one step ahead and explain you. Guys, assume I have produced 1000 units in a month. In that 800 I have sold, 200 is the closing stock. Sir, how do I value it? How do I value each of them? Product cost is 700 under marginal. I told you which includes only variable portion. Yeah. And guys, please be careful. This is only related to manufacturing. Over and above that also there might be other variable cost and all. Clear? For example, variable selling expenses, variable administration overhead. Yes. See, when we are calculating contribution from sales, we will reduce all the variable costs. We get contribution. But while valuing the product, we will take only the variable manufacturing portions. Clear? That is nothing but prime cost plus variable manufacturing overhead. Clear? Which gives us 700 here. Whereas under absorption, it is 800. Now, if I ask what is the cost of production, 1000 into 700 under marginal costing, whereas 1000 into 800 under absorption costing. Whereas if I ask you cost of goods sold, because there is a closing stock, what is the cost of goods sold? 800 into 700, 800 into 800. Sir, what is the cost of closing stock under marginal costing? 200 units into 700, whereas under absorption, 200 into 800. So they may ask MCQ question and all guys like this. And Under absorption costing, can I tell my closing stock will always be overvalued? Yes, because of one element, which is that fixed manufacturing overhead. Got it? Yes. So please be careful. We call this as product cost under marginal costing. Whereas under absorption costing, the entire manufacturing cost is a product cost. Sir, under marginal costing, you told we will consider only this as product cost. What about under it? We call it as period cost. We will charge it to the profit, that is P&L account. Is that clear? We consider only variable manufacturing expenses. Even direct material and direct labor is also part of manufacturing expenses only. Whereas this is variable manufacturing overhead, which is like your factory overheads. Okay, sir. Coming back. Coming back to this. So first thing which we have to do under marginal costing is to differentiate variable cost and fixed cost. Marginal costing is also called as variable costing or differential costing or direct cost. Direct costing is nothing but, sir, whatever 700 I took, is it directly attributable to my products? Yes. So we also call it as direct costing. Okay. Under marginal costing, inventory is valued at what and all, guys? Only variable cost. That is direct material, direct labor. I had told you, hope you remember, prime cost is always variable in nature. Even if by chance if other direct expenses comes, even that also we will take it. Clear? Plus variable manufacturing overheads. Okay. Guys, now coming to one of the important, guys, this is the format of marginal costing. Format looks very simple and plain, but lot of things are there in this. Sir, what is the format we follow in marginal costing? Sales minus variable cost will give us contribution. Sir, here variable cost means only manufacturing variable cost or all variable cost? All variable cost. Total variable cost. You get contribution. Minus fixed cost will give you profit. And as I told you, any decisions under marginal costing we will make either based on variable cost or contribution. Why, sir? Because only those things are in my control. If I take any decision, which cost can I influence? Only variable cost. Yeah, yes, sir. Now, guys, listen. Sir, there is something called as like break-even sales and all. We will discuss one by one. First, PV ratio. Sir, what is PV ratio? Profit volume ratio. We also call it as like CVP analysis. Means, sir, if quantity or volume changes, how will it affect our profit and cost? Will it affect, sir? Yes. But which cost? Only variable cost. Clear? If quantity is nothing but the level of production, if quantity or volume changes, will it affect my cost and profit, sir? Yes. Clear? Yes. Why, sir? How will profit affect? Guys, higher the contribution, higher will be the profit. Why is that? Because fixed cost will remain same. So if you can earn more contribution, that will lead to what? More profit. Clear? Now, what is PV ratio? The first item under this calculations are PV ratio, profit volume ratio. Actually, the name used is profit. It is actually contribution. Clear? Sir, profit means what, sir? Profit divided by sales into 100. Correct? But actually, we are not doing that. We are doing what? Contribution by sales into 100. It should have been called as contribution to sales ratio or contribution volume ratio. Clear? So it is a wrong name, but still, this is what they will ask in the exam also. You don't tell. PV ratio means profit by sales. If I go by name, that is what actually we can understand. But what we are supposed to calculate is nothing but contribution by sales into 100. So in simple, PV ratio means how much is my contribution when compared to sales price. We normally express this in percentage. So always multiply with 100. Clear? Yes. Now, if my contribution or PV ratio is 20%, how much is my variable cost? 80%. Balancing figure. Correct? Yes. Or else, if my contribution is 30%, how much is my variable cost? 70%. Because sales minus variable cost only will give us contribution. Got it? Yes. Next, we have something called as break-even sales. Break-even sales. Sir, what is break-even sales? This is the sales level at which my total cost is equal to sales. Total cost includes both fixed as well as variable. Clear? So break-even sales is the sales where the total cost is equal to total sales or no profit, no loss. Because total cost is equal to sales, right? So no profit, no loss. That means, assume guys, my break-even sales is 1 lakh units. Below 1 lakh units, I will be suffering loss. Above 1 lakh units, I start earning the profit. So if my break-even sales is 1 lakh units, assume my actual sales is 120. That 20 is what? Margin of safety. So that margin of safety will bring me profits. Clear? Now listen. Sir, at break-even sales, there is zero profit. Zero profit. That means, can I tell at break-even point, contribution is equal to fixed cost? Because profit is zero, right? Yes, they both will be equal. For example, this is 10 lakh, this is 10 lakh. So profit would be zero. Clear? I told total cost will be equal to sales, break-even sales. But I can also tell at the break-even point, the contribution will be equal to fixed cost. Why, sir? Because profit is zero. Profit is zero. Or else I can also tell my sales is equal to total cost. One and the same. One and the same. Now, sir, till I reach break-even point, my contribution is less than fixed cost. That means I will be having a loss. Once I cross break-even point, assume guys break-even point is like 10 lakh rupees. Once I cross break-even sales, that is over and above 10 lakh. Assume I have made a sales of 12 lakh. 2 lakh is my cushion, safety. What is it called as? What is it called as, sir? Margin of safety. Margin of safety. Now I repeat, my actual sales is 12 lakh. My break-even sales is 10 lakh. So my 2 lakh is what, guys? MOS, margin of safety. Like when used for exemptions are saved. Okay, even if I have to write other papers next time, but this paper exemptions are clear like that. Margin of safety. This this will come only after you achieve break-even sales. So for this, should I incur any fixed cost? No, because I would have already recovered all my fixed costs. If I produce more and sell more, should I incur more fixed cost? No, sir, it will remain same. So can I tell for this 2 lakh, I will incur only variable costs? Yes. So now listen. For this 2 lakh, can I also tell contribution is equal to profit? For 2 lakh sales, can I tell contribution is equal to profit? Yes. Why? Because for 2 lakh, I will be incurring only variable costs. If I multiply with PV ratio, I will get contribution. As fixed cost would be zero for it, that is equal to profit. That is equal to profit. Is that clear? Because all these techniques or concepts will help you in the questions. If you just mug up the formula, that will not help you, because sometimes if straightforward question is asked, just apply the formula, calculate. If not, you need to use few techniques. Clear? Yes. So what are the assumptions under CVP analysis we will see? So under CVP, first what do we do guys? We will learn the relationship between cost, volume and profit. Means if volume changes, that is quantity, will my cost and profit change? Yes. So certain assumptions under the CVP analysis. Costs are bifurcated into variable and fixed. Fixed cost will remain constant and will not change with the level of output. That is total fixed cost. Whereas variable cost per unit remains same. Whereas total variable cost will vary with my level of output. Selling price also will remain constant until unless given in the question. If nothing is given, we will assume all this will remain same. They only told selling price is increased by 10%, selling price is decreased by 10%. You will remember the assumptions. How can it change? Write the note. No, selling price cannot change. How can you give it in the question? Wrong question, please give me grace marker. Sure. So if nothing is given in the question, guys, we assume all this will remain same. The number of units produced and sold will remain same, as there won't be no opening stock, no closing stock. Then there will be no change in the operating efficiency. Whatever I am operating now, same thing will continue. And in case of multi-product company, the sales mix remains same. Sales mix means, assume I am selling 3 products, A, B, C, in the ratio of 2 is to 1 is to 3. That is, for every 2 units of A, I will sell 1 unit of B and 3 units of C. And this mix will continue as same. We call this as product mix or sales mix. Okay. Now, guys, this is the profit statement or the format under the marginal costing to compute the profit. We also have a format under absorption costing, which we will discuss later. But now we are discussing marginal costing. Let us focus on that. This is the format. You have to present like this. Guys, it is nothing but this format. Sales minus variable cost will give you contribution. Contribution minus fixed cost will give you what, Nishan? Profit. But in the format, when they have asked you to prepare the profit statement, Please give a breakup of this also. In variable, how much is manufacturing cost? How much is non-manufacturing cost? Non-manufacturing cost means expenses which is not incurred for manufacturing. Clear? You can see here. I have mentioned. Revenue, that is nothing but sales. Take it to the outer column. Then product cost. You already know now what all cost will you use to value the products. Hello. This one, correct? Yes, sir. Take it first. Direct material, direct labor, plus if at all, if there is any direct expenses, take that also, which will give you prime cost, plus variable manufacturing overhead. So whatever you get here, can I call it as product cost? Yes. So you can see variable cost of production. And we have to value the product at this price only. This is for the units produced. If there is any opening stock, closing stock, please adjust it. Opening stock of finished goods at last period cost of production. Normally the value will be given in the question. Value will be given in the question. Whereas closing stock of finished goods, you need to value it at current period cost of production. For example, assume guys, current period variable cost of production is 10 lakh and you have produced 10,000 units. What is the cost per unit? 10 lakh divided by 10,000. And assume closing stock is 500 units. How do you calculate it? 10 lakh divided by 10,000 into 500. Yeah. So closing stock obviously will always be out of the current period production. I have produced but not sold. Whereas opening stock is I had produced last year but I am not sold it. Will I sell it in the current period? Yes. So we will add it to the cost. But this is at what cost? Last year cost of production. Last year cost of production. Normally they would have given this value in the question, if at all if it is. Or if question is silent about opening stock and closing stock, please ignore it. Yeah, yes. So once I adjust opening stock and closing stock, what do I get? Variable cost of goods sold. Guys, similar to cost sheet, but here we are using the word variable. Yeah, and anything fixed will come later. Okay, fine. So now we are seeing from the product what has happened. Product contribution margin means from product what we have got. And we should also reduce other variable costs not related to manufacturing, like variable administrative overhead, variable selling and distribution overhead. Now you get actual contribution. Actual contribution. This is nothing but what we calculate here. Clear? So we take total variable cost here, we get contribution. But in the profit statement, we need to give a breakup. In the variable cost, how much is relating to manufacturing, how much is non-manufacturing. This is nothing but non-manufacturing variable overheads. So now we are getting contribution. Contribution margin or contribution. From that, reduce all the fixed costs. You get profit. You get profit. Hope you understand. Clear? Same to same profit we will calculate, but the steps we follow in profit statement is little more. We need to present each and every step. Yeah. See, please be careful. You will follow this format only if they have asked you to prepare like cost and profit statement or profit statement under marginal costing. Each and every step you have to present it. But if they are asking you to calculate break-even sales, margin of safety and all, in simple you will use only this format to derive what's a contribution, net profit and all. You want it for calculation, just use this simple format. Clear? Yes. Now, what is the cost equation here? Marginal cost equation. Sir, sales minus variable cost. What do you get? Contribution, which is nothing but fixed cost plus profit. Can I tell contribution is equal to fixed cost plus profit? Yes. Now listen. At break-even sales, profit would be 0. Can I tell contribution is equal to fixed cost? Hello, at break-even sales. Sir, no, sir, we have already crossed break-even sales. In that case, contribution will be equal to what? Fixed cost plus profit also. Because we have profit. Now we have already crossed break-even sales means we already started earning profit. Okay. So, what is PV ratio? It is a percentage of my contribution when compared to sales. How do we calculate it, sir? Contribution by sales into 100. Even if you keep it in decimal also no problem. If you want to convert it into percentage, then into 100. Then PV ratio. So guys, first formula is always this. But sometimes they will give you 2-period data. 2-period data. In that case, how do you calculate? Change in profit or change in contribution divided by change in sales. Clear? And especially here, guys, please be careful. Change in profit. Assume they have given 2-period data. Period 1, period 2. Profit here is 10,000. Here it is 25,000. What is the change in profit? Sir, 15,000. No problem. But sometimes they will mess up like this. Sir, period 1, period 2. Period 1, 10,000 loss. Period 2, 25,000 profit. What is the change in profit? 35,000. Because from minus 10 to plus 25 we have gone. So minus 10 to 0, 10,000 plus 25,000. So totally change in profit is 35,000. Because sometimes students might miss out this. Where when they are given one period loss, the other period profit. Please be careful. And this formula you can follow only when they have given two period data. Yeah, yes. Now, sir, how can we improve our PV ratio? By increasing your sales. So what and all will come before PV ratio? By increasing your sales or selling price, produce more and more quantity, or try to reduce your variable cost. Try to reduce your variable cost. Or assume you are producing multi products, like number of products. Try to produce more of the product which is giving you more PV ratio. And maybe you can produce less or discontinue the products which is giving you less PV ratio or negative PV ratio. Yes. Some products might give negative contribution also. Chances are there. Okay. Next, break-even analysis. Break-even analysis is important, guys. See, topics looks very simple, but lot of hidden information would be there, especially for calculation. Guys, listen here. X-axis, Y-axis. Sir, in X-axis we are writing units, and in Y-axis cost and sales. Now, my fixed cost is something which will remain fixed irrespective of how many units I produce. Yes, sir. Then my variable cost will always start from 0 and it will increase with my level of production. They are not drawn variable cost here. So I have taken total cost here. You can see total cost means what, sir? Fixed cost plus variable cost. Clear? So you can see this part is there now, this variable portion. Anyway, your total cost will start with fixed cost only, because even if production is 0, still you will end up incurring fixed cost. So total cost is nothing but variable cost plus fixed cost. If I ask you this part is what? It is variable. Okay, sir. Then sales will always be from 0, guys. I have to put the efforts and only then I will be able to make it. So sales will be like this. You can observe this is a point of intersection. That is where my total cost and sales line intersects. That is called break-even point. If I extend it to x-axis, I will get break-even point or sales in units. If I extend it to y-axis, I will get break-even sales in rupees. Guys, listen. This is the point where my total cost is equal to total sales. Yes, you can see both are intersecting. Before that, my cost is more than sales. That means this is a loss area. You can see cost line is more above the sales line. Whereas once we reach break-even point, my sales will go above and cost will be lower. So that means, can I tell this is a profit area? Yes. So once I cross break-even point, I will start making profit. And anything over and above this, we will call this as what, guys? Margin of safety. This part is called margin of safety. And for margin of safety, we will incur only variable cost. So if I multiply margin of safety with PV ratio, we get contribution, which is equal to profit. Because for margin of safety, which is like additional sales, we will not incur any fixed cost. We have already recovered all my fixed costs below this one. Below this itself. So for margin of safety, we will incur only variable cost. Got it? Yes, sir. Now coming to break-even point. Guys, break-even point means I told you, a point at which my total cost is equal to total sales or no profit, no loss. So can I tell this both will be equal? Yes. So break-even sales can be calculated in rupees or in units. Guys, it is nothing but contribution divided by. If you want to calculate in rupees, it is nothing but contribution in rupees divided by contribution in percentage. That is PV ratio. If you want to calculate it in units, the formula is contribution in rupees divided by contribution per unit. Contribution per unit. But actually in the formula, they are not using contribution in the numerator. Instead of that, they are using fixed cost. Why, sir? Because at break-even sales, fixed cost is equal to contribution. They both are one and the same. Correct. So let us see the formula. Break-even sales in rupees. The formula is fixed cost divided by PV ratio. Guys, fixed cost here is nothing but contribution. So contribution in rupees divided by contribution in percentage will give you what? How much rupees of sales you have to make. Clear? That's simple. I will give you a simple example. Assume I have made 1 lakh profit. The profit percentage is 10%. Can you tell me what is the total sales made? 1 lakh divided by 10%. Profit in rupees, profit in percentage. You will get 10 lakh. What is it? I have made a 10 lakh sales to earn 1 lakh profit at 10%. Correct? Likewise, same way. I have made a profit of 1 lakh. For each unit, I will earn 100 rupees profit. Can you tell how many units I have sold? Yes. I have totally earned 1 lakh profit. For each unit I sell, I will make 100 rupees profit. So what is the number of units I have sold to earn a profit of 1 lakh? Same thing we are doing here. Sir, I want to have so much of contribution. My PV ratio is so much. Tell me how much sales I have to make in order to recover all my costs. That is nothing but break-even sales. So assume break-even sales, we are getting it as like 20 lakh. That means if my sales is 20 lakh, I have reached a point where there is no profit, no loss. If my sales is less than 20 lakh, loss. If my sales is more than 20 lakh, I start earning profit. So my initial target would be to reach 20 lakh. Same way, can I calculate break-even sales in units? Yes. Fixed cost divided by contribution per unit. Simple guys. If you want to calculate in units, keep the denominator as per unit. If you want to calculate in rupees, keep it as PV ratio. That is in percentage or decimal. Oh. Now assume you are getting this as 1 lakh units. What is the meaning of it, sir? If you produce and sell 1 lakh units, you will break even. If you sell 1 lakh, less than 1 lakh, loss. If you sell more than 1 lakh, profit. It is wrong. Clear? Assume my sales is actually 1 lakh 20,000 units. 1 lakh 20,000 units. So that means 20,000 is what for me? Margin of safety. Will it bring any profit to me? Yes, sir. So at break-even point, fixed cost is equal to contribution as profit would be 0. Guys, there can be another calculation of the ask. See here the profit is 0. Sometimes they will give it in the question. Company wants to earn 1 lakh profit. Tell what sales they have to make. We use the formula called required sales. So here profit was 0. Correct? So that is why we didn't take it. But now company wants to make some profit. They are asking you how much sales should we make. We will use the formula called required sales. Required sales. They would have given how much profit the company is desiring to make it. So if they are asking you to calculate how much rupees of sales we have to make, then fixed cost divided by desired profit by PV ratio. If they're asking how many units should we sell, if you want to make a profit of so much, then they use the denominator as contribution per unit. Clear? Guys, it is nothing but numerator is nothing but what? Total contribution. Fixed cost plus desired profit will give you what? Contribution. So total contribution divided by contribution percentage. Or else here, total contribution divided by contribution per unit. So if you want to achieve so much of profit, how much contribution should you maintain? Simple. Is that yeah? Sir, here you are taking desired profit, but in break-even sales you missed it, sir. Why? Because we know that it is 0. Even if you want to write and mention 0, why to waste time? Correct? Yes. So this formula is similar to break-even sales formula with one addition as desired profit. This formula you will use only when they have given in the question that company is willing to maintain a profit of so much. How much sales should they achieve? Or how many units should they sell? If they ask units, use this. If they ask rupees, you do this. Or else if you do one, the other one is easy. For example, assume you have found out in rupees. Now can you calculate in units? Yes, just divide it by selling price. Just divide it by selling price. Or else you have got it in units. Can you get now in rupees? Yes, just multiply with selling price. Just multiply with selling price. Here also. Here also simple. Sir, I have got the break-even sales in rupees. Can I calculate in units? Yes, just divide it by selling price. Alright, sir, I have got it in units. Can I calculate in rupees? Yes, just multiply with selling price. Ask it. Got it? Yes. Now, once I get break-even sales, sir, anything over and above break-even sales is what? My margin of sale. This is safer zone for me, sir. Sir, I have reached a point where I have started making a profit. Clear. Even in your exams, you will be counting. Okay, when will I cross 40 or 50? Correct. Now relax. Relax ಅಂದ್ರೆ ಎದ್ದಿ ಹೊರಗಡೆ ಹೋಗೋದಲ್ಲ. Okay. Now at least you will have that satisfaction. Okay. Now anything which I get more is margin of safety. Correct. Yes. Because first initial target is to break even. Break even actually ಎಷ್ಟು 40 ಅಲ್ಲ 50. Clear. 40 is like officially for the world it is 40 passing marks. But for you guys, you should understand it is 50. Because if you get 40 but not 50, gone. Gone. Okay. Sure. So first you reach break even point. After that, this is my level. Why, sir? Because we have already reached no break even. So margin of safety. Okay. This is adding value for which subject? Next subject. Correct. Above 50. This is for not this subject. For next subject, sir. For safety. Correct. Like that. Chalo. I just give an example. Margin of safety. Hey. I control. ನಿಮ್ಗೆ ಎದುರುತ್ತಿಲ್ಲ ಅವನ ಮೇಲೆ ನೀನು ಹಾ ಚಲ margin of safety is a sales over and above break-even sales. So how do we calculate it, sir? Simple. Total sales minus break-even sales. Or else you can calculate profit by PV ratio. Why, sir? Guys, for margin of safety, there is no fixed cost. So how do I calculate profit? Margin of safety into PV ratio. Margin of safety into PV ratio. Actually, this will give you contribution. But for margin of safety, contribution is equal to profit. So can I calculate margin of safety like this? Profit by PV ratio? Yes. Alternate. This same formula interchange. Yeah. And please be careful, guys. When you are applying PV ratio, don't apply it on total sales. Assume your total sales is 12 lakh. Break even sales is 10 lakh. Your margin of safety is how much? 2 lakh. Apply PV ratio on this. If you apply on this, you will not get profit. You will actually get contribution. Got it. From that, you have to reduce fixed cost also. Assume. Now you are applying PV ratio on this. You will get contribution, reduce fixed cost, you will get profit. If you want to calculate profit straight away, then straight away take margin of safety into PV ratio. Got it? Yes, sir. Now coming to this one. Sir, what if a company is a multi-product company? We have 2 or more products. In that case, we need to calculate the break-even sale using composite contribution per unit. That is, there will be a common fixed cost. Assume, guys, I am manufacturing 3 products. All 3 products put together, I have incurred a common fixed cost of 5 lakh. Divide it by composite contribution per unit. Sir, what is composite contribution per unit? You will calculate that by taking sales mix quantity as a ratio or sales mix value stacks. I suggest take it as a quantity. Means how many units of each product is sold. Clear? It is very similar to your weighted average cost of capital. Okay. So let me give an example for that. One question we have. You can see J and K is the products. The company is selling 4 units of J and 3 units of K, which we call as sales mix. And common fixed cost for both the products, that is J as well as K put together, is 6,16,000. And contribution per unit of J and K is 40 and 20 each. Now, sir, can I use 2 to contribution in the denominator? Not possible. Calculate like weighted average, which we call it as composite contribution per unit. Sir, what is the contribution per unit for K? 40. What is the ratio of K? 4 by 7. That is total. 4 by 7. Sales mix. 4 by sales mix is 4 is to 3, right? Total of ratios 7. So 4 by 7. Same way. What is the contribution of K? Okay. What is the contribution of K? 20. What is the ratio? 3 by 7. You will get 31.43. This is both put together on an average. What is the contribution per unit? So now divide common fixed cost by composite contribution per unit. What do you get? Break even sales in units. Means you should totally sell 19,600 units in order to break even. Sir, please tell me how many units of J, how many units of K. Again, divide it in the sales mix ratio. Into 4 by 7 for J, into 3 by 7 for K. So if the company want to break even, they have to sell 11,200 units of J and 8,400 units of K. Hope you understand. Yeah, and guys, this calculation, nothing new. You would have already done it in your financial management. Weighted average cost of capital. For example, sir, cost of equity into weight of equity plus cost of debt into weight of debt. Correct. Now, what do you get, sir? Weighted average cost of capital. Means, what is the cost for the company as a whole? Sir, for equity separate, for debt separate, I want to know for a company as a whole, what is the weighted average cost? Same thing we did here. Sir, for J it is 40, for K it is 20. I want to know overall how much per unit. Why, sir? Because fixed cost I have not incurred individually for J and K. I have incurred overall 6,16,000, which we call it a common fixed cost. So when I'm dividing common fixed cost, I should have one common contribution per unit, which is nothing but we call it as composite contribution per unit. Clear? And when you get break-even sales also, it is overall. Please split it again between the products in what ratio, sir? Same weight, same sales mix ratio as. Is that clear? Now, if by chance if they ask you rupees, just multiply with selling price. Ashte. Just multiply with selling price. Got it. And now this can I multiply with selling price? No, because this is both put together. First break it down between the products and then multiply with selling price. Hope you got it. Clear? Yes. Next, cash break-even point means it is a point at which total cash inflow is equal to cash outflow. Yeah. So cash break-even point means there is no cash profit, there is no cash loss. How do we calculate it, sir? Cash fixed cost divided by contribution per unit. Same like BES, but here we are not taking only fixed cost. We are taking cash fixed cost. Sir, how do we get cash fixed cost? Guys, from fixed cost, if there is any non-cash fixed cost, you remove it, like depreciation. Clear? You will get cash fixed cost. Oh, yes. Done with this. Next. We are going for decision making part. Short term decision making using the concept of CVP. CVP stands for cost volume profit analysis. The areas of short term decisions may be classified into two broad categories. First one is decisions related with excess supply. Excess supply means, sir, I am producing more, but I have less sales. For example, assume guys, I have the capacity to produce 1 lakh units. But as of now, the demand for my product is only 80,000. Now I will try to create a demand for additional sales of how much? Additional sales of how much, sir? 20,000. Clear? Now, listen. I am already making profit by selling 80,000 units. That means I have break even. Yes. Now tell me, for this 20,000 units, what should be my selling price? If I have to create extra demand for this, sir, my selling price can be anything more than marginal cost. Marginal cost. Why is that? Because this 20,000 is like margin of safety for me. I will incur only variable cost. So anything I am earning as a contribution will be my profit. Clear? Assume guys, originally I am selling 80,000 units at 100 rupees. Now 20,000 also I can sell it at 100, but there is no one to purchase it, sir. Maybe you will offer it at a discount price, or I will find a new customer. Assume your variable cost is 60. Now you will fix the selling price for 20,000 at any price over and above 60. Assume you are fixing it at 75. That means how much is your contribution? 50. That is equal to profit. That is equal to profit. Why is that? Because I am already making profit from 80,000 units. Means I have already break even. So if you have achieved a break even over and above your actual present sales, whatever remaining unutilized capacity is there, or unused capacity is there, or underutilized capacity is there, you can use it to sell the product at any price more than your marginal cost. But make sure that you are not selling it in the same market where you are selling this product. Why, sir? Because if you sell 20,000 units at 75, where you are also selling 80,000 units, this customer will be like, love. Why, sir? Because obviously you will lose that customer trust, loyalty. Because they feel like my neighbor is getting same product at 75. Only prestige, pride. Clear? How can you sell for me for 100? Clear? Now he is taking full liberty. Now he is teasing me that same product I have bought it at 75. So you cannot do that. So what you try to do for this 20,000 is maybe you will find a different market, or you will export it, or you sell it under a different brand. You will sell it at a different brand name. You guys would have seen same company will sell the same product but in different varieties under different brand name, different costs. Especially HUL, they sell different soaps at different prices. Lifebuoy, Pierce, Lux, everything are manufactured by them only, but their target customers are different. Accordingly, price is also clear. Yes, even mobile manufacturer, Oppo or Vivo or even OnePlus, all these are from same parent company. They're trying to sell it under a different brand name. Oh, sure. Come back to this. Processing of special order will always happen if at all, if your selling price is more than marginal cost, but make sure that you're already making profit. Okay, by selling 80,000 units, you are already making profit. And also, your additional sales will not impact your present sales. Determination of price for stimulating demand means, sir, presently the demand for my product is only 80,000. Maybe you offer a discount. You offer a discount or else give buy more, same more. If you buy 10 units, I will give you 10% discount. 20 units, 20% discount. 30 units, 30% discount. 100 units, 100% discount. ಆಮೇಲೆ ನೀವೇನ್ ಮಾಡ್ತೀರಿ local versus export sale. You consider various benefits. Sir, if I sell it in domestic market, yes, I may get less price. But if I export, I may get it in dollars, sir. Dollars. So more revenue. But obviously complication also would be there. Okay, licensing, import, export, the export duty, import, export actually country supports. Okay, even in GST, it is stated as zero rated supply. If your outward supply is zero rated, on your inward supply, can you claim ITC? Yes, you can claim ITC. Clear? Yes. So considering all other benefit, you check whether to sell in domestic market or to export it. Then determination of minimum price for price quotation. Minimum price. Price quotation means I am offering you to supply the goods in the coming future. I should also tell at what price I am ready to supply. Okay, for that I need to prepare something called as quotation as. So while preparing the quotation, in that I should mention the price. For that price, I should have worked out what is my cost also. While discussing even overhead chapter, I told you we should know our total cost per unit cost. So for that is why we will do so much of exercise for overhead costs. Yeah, why sir? To give the quotations. That is to quote a price, telling at what price I am ready to supply the product to you. This is done. Next, shutdown or continue decision. Shutdown or continue decision is with respect to temporary period, guys, not forever. See, forever, if you want to shut down, no decision. Sir, close it today, get lost. Clear? If you want to shut down for a temporary period, then you will see, is it better to shut down for 2 months or can I continue? Guys, if you shut down also, there will be loss. If you continue also, there will be a loss. But see where the loss is lower. Where the loss is lower. Because if you shut down, you may avoid few fixed costs. Few costs you will continue to incur, but few costs you will avoid. So considering it, if I continue, what will be a loss? If I shut down, what will be a loss? Check both. Wherever it is lower, you go. Yeah. If you continue, you may still suffer a loss. But if you shut down, it will be more loss. Better to continue. Better to continue. Next, decisions related with excess demand. Excess demand means, sir, for my product, there is a huge demand, but I am not able to produce so much. Because I have less capacity, or less labors, or less raw material, or less vitamin, which is money. Make or buy in-house processing versus outsourcing of raw material. That is with respect to raw material. Should I make it in-house or should I outsource it? Guys, there are two criteria here or two situations. If I was already manufacturing raw material, I will be incurring variable cost as well as fixed cost. Yes. Now I am thinking to stop manufacturing and start purchasing. I should compare what with what. Variable manufacturing cost with outside purchase price. Why, sir? Because if I stop manufacturing today, still I will continue to incur fixed cost. So I have to compare with what, guys? Variable manufacturing cost with purchase price and choose whichever is lower. Whichever is lower. Hope you understood. Because fixed cost is like irrelevant. Whether I manufacture or I purchase, I will be incurring fixed cost. Sir, even if you stop manufacturing, will you incur? Yes. So in that case, can I consider it as irrelevant? Yes, because under both option it will remain same. Now, will it affect my decision? No. Next scenario is, sir, I was purchasing till now. I am thinking to start manufacturing it in-house. If I start manufacturing, I should incur the cost from zero, which includes both variable and fixed. So I should compare outside purchase price with what? Total manufacturing cost and choose whichever is lower. And choose whichever is lower. Then product mix decision under resource constraint, that is nothing but limiting factor. Now, sir, I have 5 products to manufacture, but I have very limited resources available with me. Now tell me which product to produce how much. That is deciding how many units should I produce. That is called product mix or sales mix. Considering limiting factor, which is called key factor. Sir, what is key factor? Something which is available in limited. So I have given it here. Limiting factor or key factor means something which is available in limited. So I should plan my activities by keeping this as a yes. Because assume guys, there is huge demand for my output. I can sell 10 lakh units, but to sell 10 lakh units, I don't have sufficient raw materials. Assume I have only 5 lakh kgs of raw material. Now, using this as a basis, I need to plan my production. Clear. So if something is available for me in limited, we call it as key factor or limiting factor. So while preparing the budget or sales mix or the product mix, I need to keep this as a base. Guys, if there is no key factor, whichever product is giving me more contribution, that is more profitable. I will try to produce more of that. But when there is key factor, you cannot make decision based on contribution. You need to make decision based on contribution per key factor. Contribution per key factor. Sir, how do we calculate it, sir? I have one illustration for it. Yes, please pay attention. There are 3 products which company is manufacturing and selling it. So selling price is 20, 25 and 30. Variable cost is 8, 10, 12. So can we calculate contribution, sir? Yes, 12, 15, 18. Now if there is no key factor and all, if I ask you which product will you manufacture more? C. Next, B. Last, G. But if there is key factor, let us see. Raw material per unit. You will use 2 kg of raw material to produce each unit of A, 3 kg of raw material to produce each unit of B, and 4 kg of raw material to produce each unit of C. Market demand for my output, not for raw material, is 10,000, 8,000, 7,500. That means this is what maximum I can produce and sell. Because I cannot produce more than the demand and keep it. No? Yes. What is the total raw material available? 50,000 kgs. Now can I tell this is the key factor? Because this is available in limited. So I should plan my production by keeping this as a base. So this is the key factor. Now what should I calculate as? Contribution per key. Contribution per key factor. So when there is a key factor, I cannot make decision based on contribution per unit. Assume there is no key factor. If I ask you which product is more profitable, C, sir. Which is least profitable? Yes. But now key factor is there. Take it. Raw material per unit, 2 kg, 3 kg, 4 kg, whatever I have given you. Divide each other. Contribution per unit divided by key factor. What do you get? Contribution per key factor. That means for each kg of raw material, product A is able to generate how much contribution? 6 rupees. B, 5 rupees. C, 4.5. Now if I ask you, who is able to use the raw material effectively, profitably? Who is using it? A. Raw material is available in limited. Who is able to generate more contribution for each kg of raw material? A. Rank them now. Rank based on what, sir? This guys. A. First rank. B. Second rank. C. Third. Now based on that you decide how many units of each you will produce. What is the maximum demand for this product? 10,000, 8,000 and 7,500. This is what you can maximum produce. Now let us start with A because that is the first rank product. So to produce 10,000 units of A, how much raw material we require? 2 kg per each unit. So totally 20,000. Do we have it? Yes, we have it, sir. So after producing 10,000 units of A, still how much raw material is left? 50,000 minus 20,000, 30,000. Okay, sir. For B, how much we require? To produce 8,000 units. For each unit, 3 kg. So how much we require? 24,000 kg. Do we have it? Yes, sir. We have it. So we will produce full 8,000 units. Coming to C, how much raw material is left, guys? Still only 20 plus 24, 44. So 50 total availability minus 44. How much is left? Only 6,000. Only 6,000. From 6,000, how much can I produce? For each unit, I require 4 kg. So 6,000 divided by 4. How many units can I produce? 1,500. Now you might ask me, sir, why not 7,500? If you do 7,500 into 4, you will get 30,000. Do we have so much of raw material? No. After producing A and B, we are left with only 6,000 kg. So using that, how much units of C we can produce? 1,500. So now what is the product mix? A is to B is to C. 10,000 is to 8,000 is to 1,500. Hope you understood that. So whenever there is a key factor, you need to make decision based on contribution per key factor. So guys, here raw material was the key factor. Same way, labor hours might be the key factor. So instead of kg, it will be like labor hours per unit. Labor hours per unit. Assume this is like 2 hours. So whatever you get 6 rupees. That means, sir, for each and every hour the worker work for product A, we are able to generate a contribution of how much? 6 rupees. It is like that is the meaning. Got it? Yes, sir. And for many company, what would be the key factor? The demand for their products. So they have everything, but no sales, no customers to buy. Clear. So in that case, what would be the key factor? Sales. Or else, sir, I have very good brand. Customers are ready to purchase from me, but I am not able to supply it on time. In that case, what would be the key factor? Maybe money, that is the capital, or raw material, or even the power availability, or even the labor. Labor hours. Oh. Then, whenever we are making any decision steps, we need to consider few things. What are those? Note. The cost and benefit of an option is identified for measurement if it passes the principles of controllability and relevance. Yes, any cost we are incurring will give us some benefit. See, what is the benefit? What is the cost we are incurring? So, benefit should always be more. Correct? Now, even in your FM, you would have done. What is the return on investment? Clear? Sir, if net cash inflow is more than cash outflow, we will go for it. NPV positive. If NPV is negative, Tata buy. We will not accept. Correct? Same way. So see the cost and benefit analysis. Sir, if I incur so much cost, what is the benefit I will get out of? Clear. That is what you do in NPV and all. Na? Present value of cash inflows minus present value of cash outflows. What do you get? NPV. If it is positive, accept it. If it is negative, then yes. So here also we will see, sir, whatever we are doing, is it in our hands, controllable, and is it also relevant? Relevant means I told you, sir, fixed cost is same under both the options. Is it relevant for us? No, ignore it. While making decisions, will I consider it? No. Or else there are some costs which is not in my control. Will I consider it while making decisions? No. So you please consider what is in your control as well as what is relevant. Relevant means, sir, when do we call it as relevant is when assume I have to make a decision between two options. Under both the options, that cost is changing. That cost is changing. Assume guys, I have plan A, plan B. Under both, direct material cost is 100 rupees. It is irrelevant. Whereas assume direct labor cost is 70 year, 80 year. Is it relevant? Yes. It is changing under both the options, so it is relevant. Here, yes. Sir. So we need to consider the decisions which are both controllable, that is, which can be controlled through my actions, as well as which is relevant. Done with the marginal costing, not with the chopper. Now coming to absorption costing. Just opposite to marginal costing is our absorption costing. Absorption costing is also called as full costing technique. They tell cost is cost. Whether I can control it or not, I don't care. I have incurred it on record. And absorption costing is used for external reporting purpose. That is for preparing financial statements or for income tax purpose. And under absorption costing, we will always value the inventory at total manufacturing cost. I already explained this now. Remember now? 800. And can I tell, under absorption costing, my inventory will always be overvalued? Yes, because of one extra element, fixed manufacturing overhead. So you can see that I have mentioned. So inventory is valued under absorption costing at what? direct material plus direct labor plus manufacturing over variable manufacturing overhead plus one extra thing I have also underlined, fixed manufacturing overhead, guys. Sir, what is the format to prepare income statement or profit statement? We already saw under marginal costing. Under marginal costing, what is the sequence we will follow? Sales minus variable cost is equal to contribution minus fixed cost is equal to my profit. But variable cost, I need to see how much is product cost, how much is non-product cost. Non-product cost is something but not related to manufacturing. Here it is very similar to cost sheet format. Don't prepare cost sheet at all. Here, okay, similar to. Yeah, sir, what do we do, sir? Just calculate total cost and remove it from sales, you will get the profit. But while calculating total cost, try to follow the format of cost sheet. Sir, we will see. Sales, we will take it first, or you can also take it at the end. Direct material consumed, direct labor, variable manufacturing overhead plus fixed manufacturing overhead. And do we charge fixed manufacturing overhead for each and every unit produced? Yes. But do we know it at the beginning? No. So for that, what do we follow? Predetermined overhead rate. Assume we have fixed a predetermined overhead rate 10 rupees. So for each and every unit we observe, or for each and every unit we produce, how much we observe? 10 rupees. Clear? It is purely based on predetermined rates. Okay, sir. We get cost of production. For that, you adjust opening stock of finished goods and closing stock of finished goods. Add opening stock of finished goods. This will be normally valued at previous period cost of production. Whereas closing stock of finished goods will be added, will be deducted, and it will be valued at what cost? Current period cost of production. For example, assume guys, the cost here is 20 lakh for producing 1500 units. What is the cost per unit? 20 lakh divided by 1500. Assume out of this, closing stock is 200 units into 200 into 200. Asset, deduct not. Sir, why are we deducting? I already explained everything in cost sheet format. We are not selling this product this year. So it is not helping me to generate any revenue. So in order to match revenue, we should record only the cost which has incurred and which has helped me to generate the revenue. Clear? Yes. Okay. We got cost of goods sold. For that, one important thing, guys, we need to add or deduct under or over absorption of fixed manufacturing overhead. Sir, will there be under absorption or over absorption? Yes, guys. We discussed now in overhead chapter. If you are following predetermined overhead rate, at the end of the year, we will have under absorption or over absorption. We used to add, if there's under absorption, we used to add it to the respective cost of goods sold, that this and all. Closing stock and all. Sir, if it is over absorption, we used to reduce. Clear? Yes, sir. Same way. Listen, guys. Assume, sir, we have fixed a predetermined fixed overhead rate at 10 rupees and we have produced 10,000 units. How much is absorbed, sir? 1 lakh. But we got to know actual fixed overhead is 1 lakh 20,000, sir. So we have under absorbed. So we need to add 20,000 more in. We need to add 20,000 more. Hope you understood. Under absorbed. We had observed only 1 lakh here, but actually it is 1 lakh 20. Sir, what if it is vice versa? For example, assume actual overhead is only 90,000. Only 90. Whereas we have observed how much? 1 lakh. So we already observed 10,000 more. So what should I do? Deduct 10,000. Deduct 10,000. When I observed more means you already charged more. So deduct. You observed less means you have charged less. So now you need to. Hope you understood. Okay. Sure. Then we will get non-manufacturing expenses also, which is like administrative cost, selling and distribution cost, which is not related to production. Which is not related to production. Bring it here, you will get total cost. Yeah, I repeat, guys. If it is under absorption, you have to add. If it is over absorption, you have to deduct. If you want, you can make a note. I have written actually here. Under means like positive, over means in bracket means deduct. Oh, so you will get total cost. Reduce total cost from sales, you will get profit. Whereas they may ask question for both preparing the income statement under marginal costing as well as absorption costing. If you remember, we have solved a question in our regular class. Clear? For one single question, they may ask both, or else for one question, they may ask any one. If they ask both, obviously marks weightage would be more, guys. Yes. So this is all about absorption costing. Now, as we have understood both, let us analyze the difference between both. Even this theory question you can expect. The difference between absorption costing and marginal costing. Once you understand both, it is easy to differentiate. What is it? absorption costing. Stock is valued at only variable manufacturing cost plus, not only variable plus fixed manufacturing overhead. Whereas under marginal costing, it is only variable manufacturing cost, which will include direct material, direct labor plus variable manufacturing overheads. Absorption costing. It treats all the variable manufacturing costs and fixed production overhead as what? Product cost. Means all the manufacturing expenses. Whereas under marginal costing, only variable manufacturing cost will be treated as product cost. So what about the fixed manufacturing cost? We will treat it as period cost. Under absorption costing, under absorption or over absorption generally arises. Correct. Why, sir? We are also charging the fixed manufacturing overhead based on predetermined overhead for each and every unit produced. Whereas under marginal costing, I am not at all charging this. I will wait till I get actual figure and I will charge it later. So under marginal costing, there is no question of under absorption or over absorption. Then under absorption costing, decisions are based on what? Profits, because they don't care about contribution at all. Whereas under marginal costing, decisions are based on contribution because fixed cost is not in our control. Under absorption costing, administration, selling and distribution overhead is treated as period cost. That is anything other than manufacturing. And charged against the profits in the period in which they are arise. Means we will not treat it as product cost, we will treat it as period cost. While calculating the profit, we will reduce. Whereas under marginal costing, all fixed costs will be treated as period cost, including fixed manufacturing overhead. Now, under absorption costing, will product cost change, guys? Will product cost change? Yes. Because more number of units you produce, less will be the cost because there is a fixed element. Whereas under marginal costing, what is product cost? Only variable. Variable cost per unit will always remain same. Will it change? No. For example, if I take this only. Here, guys, will this cost change? No, sir, because this 3 will remain same per unit. Whereas, guys, fixed overhead will it remain same per unit? No. Higher the number of units you produce, fixed cost per unit will decrease. Lower the number of units you produce, fixed cost will increase. So, will product cost vary under the absorption costing? Yes, because of one element. What is it, sir? This. More the number of units you produce, product cost per unit will go down. Lower the number of units you produce, product cost per unit will go up. Where? Under which system? Absorption. Whereas under marginal, it will always remain 700. It will always remain 700. Got it? Yes. Fine. So this is all about this chapter. One more topic is there, which is indifference point. Actually, in ICI material, they have not covered anything about indifference point, but question is, if you remember, we have covered the question on from ICI material on indifference point. Clear? So if you are not yet watched, do watch it. The questions marathon for this chapter, where I have discussed a question on indifference points. Okay, from ICI material only. Yes, but let me just mention about it, guys, so that listen. Sir, what is indifference point? Guys, I have two choices, but I am indifferent between them. Means I can either choose that or this. Assume I have product A, product B. Now I am confused. Should I produce product A or should I produce product B? Now there is something called as indifference point. How do I calculate? Formula is change in fixed cost divided by change in variable cost per unit. So calculate. There are two products. What is the fixed cost? 10 lakh, 15 lakh. What is the change in fixed cost? 5 lakh. Then variable cost per unit is what? 25, 20. What is the change in variable cost? 5. Divide each other. You will get 1 lakh units. That means it is like this. If your sales is 1 lakh units, you can either go with product A or product B. Anything is fine. Anything is fine. Guys, it is similar to, profitability index which you calculate in, if I am just trying to connect. If you get profitability index exactly equal to 1, what do you go? Indifferent. More than 1, choose it. Less than 1, reject it. Same way NPV. If NPV is positive, accept. Negative, reject. 0, indifferent. Correct? Same way here. Sir, we got indifference point 1 lakh. If my sales is exactly 1 lakh, which product should I sell, sir? A or B? Anything is fine. Anything is fine. Sir, what if my sales is less than 1 lakh? Then choose a product, choose a product, choose a product where variable cost per unit is more, but total fixed cost is less. because you are producing less number of units. Na? So go with variable cost where it is more and where fixed cost is low. I repeat, where your sales is less than 1 lakh units, you will choose a product which is having higher variable cost per unit but lower fixed cost. Sir, what if my sales is more than 1 lakh units? Then you will choose a product which is having lower variable cost per unit and higher fixed cost. Simple logic. Guys, here you will produce more number of units. More number of units means variable cost will increase. So try to keep it low as possible because you will multiply this with number of units. You will multiply this with number of units. For example, assume your sales is 2 lakh. You will multiply 2 lakh with 20. Clear? If you choose a product which is having higher variable cost, then you will get much more variable cost. Clear? I repeat once again. If your activity level or if your sales is less than the indifference point, then choose a product with higher variable cost per unit and lower fixed cost. Clear? Yes. Then, if your production or activity level is more than the indifference point, then choose a product with lower variable cost per unit and higher fixed cost. Clear? Yes. So I would suggest you, if you want, still, if you already attended the class, if you already watched it, but try to watch it again. There is a question on this in ICI material. Clear? Actually, this concept is not covered in ICI material under marginal costing, but they have given a question. That means they may test you in the exam also. Be ready for it. Fine? Yes, fine. So this is all about the revision of chapter 40. Yes, students, we will revise one last chapter, that is chapter 15, which talks about the budget and budgetary control. In this chapter, whatever we will be learning is like an extension of what we learned in standard costing. Sir, what is the first concept behind the standard costing? It was the cost control. What do we do, sir? We will set a standard cost at the beginning of the period. Then, as and when we do the work, we will compute the actual cost, compare the actual with the standard, and see if there is any variance. We will look into the reasons for it. Okay. If it is favorable, very good. If it is adverse, then we will look into the reasons and we will try to implement some changes in the organization so that at least in the next year, it will not repeat again. Clear. So means standard cost is what, guys? It is acting as a target for you. You have to keep your actual cost below that or maybe at par with that. But you should not go above that, which is nothing but like our budget. Clear. Now even our country has a budget. The finance minister of the country, the Madam G. Okay, every year she will come and present a budget in the month of February, which will be applicable from 1st April. Okay, very important for tax students. Correct. Every time I pray that Madam should not make any changes on that. But Madam has to come out with changes. If not, she cannot impress the public. Clear. And whenever there is amendments, it's a big attack for teachers, and next attack is for students. Clear. Especially last time, lot of changes in capital gains and tax rates. They made it. That too in between the year. It became very difficult for students for academic purpose. Why, sir? From 1st April to 22nd July, different rates. From 23rd July, different rates. Clear. Means in the same year, two different rates. Clear. Chalo. Anyway, that we can manage in taxation. Let us come back to costing now. So in this budget, what does the madam present is? Sir, in the upcoming year, it is always for future. Budget is always for future. In the upcoming year, that is from the beginning of the next financial year, that is 1st April. Sir, what is our plan? What all estimated income we have? What is our estimated expenditure? All the plans, they will explain it through the budget. And what are the government plans? For which plan, how much they are planning to incur. Everything they would be discussing in this. Okay. Now, even for a family, there would be a budget. Parents would have normally worked out a budget. Okay, this is our earnings. Okay, this is our regular expenditure. We will set aside some amount for savings or investment. Remaining, we will see. Okay, or once in a year, they can also plan a trip for student, children's education fee. Everything they would set aside. Clear. Remaining, if any, they will plan some discretionary things. Discretionary things means maybe shopping or maybe going for a trip like abroad trip or maybe buying some new items for a home or even buying a gold or anything like that. Clear. That is only when they have huge surplus or extra surplus money. Yes. Even when it comes to organization, they will prepare a budget, guys. That is in the upcoming year or in the upcoming period. Normally, budget is prepared for a year, but what they do is once they prepare for a year, they will break down into a small parts, guys. that is per month, per quarter and all, so that they can make sure that at the end of every month they are achieving their targets. Because if I wait till the end of the year, what if I have not achieved? I cannot go back and correct everything. At least if I break down the budget into small parts like per week, per month, or per quarter, at the end of every month I can reach it, whether we are acting as per the budget. So once the organization set a budget, in this what do they do, sir? They will first fix sales budget. When they are fixing a sales budget, they will also coordinate with other departments, guys. First they will call a meeting. There will be something called as budget committee. They will call for a meeting in which all the functional managers would be there, like production manager, purchase manager, sales manager, marketing manager, all HR manager, all these people would be involved in this. What do they do, sir? Simple. Now for sales manager, first the top level management will ask, sir, what is the expected sales we can achieve in the next year? Assume in the current year 1 lakh units we have sold. We cannot expect the same 1 lakh units in the next year. There should be some growth. So now sales manager will tell, sir, we can achieve 1 lakh 50,000 units, sir. 1 lakh 50,000 units. Now for this, what are the different ways? They will also tell, sir, we need to do marketing, we need to do advertisement, we need to spend so much, we need to appoint more salesmen. Everything they will give the strategy and idea. How do we reach 1 lakh 50,000 units? Because we are planning 50% increase. Clear? So this is what the sales manager will explain. Now we will ask production manager, are you ready to produce 1 lakh 50,000? Do we have enough resources to produce 1 lakh 50,000 units? Because if I have to sell 1 lakh 50,000 units, I have to produce 1 lakh 50,000 units. No? Yes. So production manager, we will question, do we have enough capacity to produce 1 lakh 50,000 units? If not, employ more people, purchase new plant and machinery, take new factory. Okay, that is nothing but where the production happens. That is opening a new branch. Okay. And if there is no enough purchases, I mean, sir, if there is no enough raw material available, then we call it as key factor. Assume maximum raw material available is only 1 lakh 20,000 kgs. So as per that, I have to plan my sales also. So our sales I can do 1 lakh 50, but there is no raw material. What do you do? So if there is any key factor also, you have to consider that while preparing the budget. Same way, sir, to produce 1 lakh 50,000 units, we need labors. Check with the HR manager. Do we have so much labors? If required, please appoint new people as early as possible, because there is a manpower requirement. Now consult even purchase manager. Sir, can you purchase 1 lakh 50,000 raw materials? When do you purchase? Please plan properly. Is the raw material available in the market? How much money is required for it? Do we have so much money? Everything we need to plan, because if I have to purchase 1 lakh 50,000 kg, assume for each and every unit of output, I require 1 kg of input. So totally how much raw material I have to purchase in a year? 1 lakh 50, which we call it as annual demand. Now you properly plan how much should be my reorder level, how much should be my purchase quantity, that is reorder quantity, everything you plan properly and confirm us, can we achieve this? With respect to purchase, production manager will tell, yes, I can produce, provided we have labors and raw material available with us. So for labors, whom will we consult? HR manager. For raw material to be purchased, whom will we consult? Purchase manager. Clear? Like this, we will consult each and every one of them, and also the supervisor. Sir, how are the workers improving or working? Can we increase their efficiency? Yes, maybe by giving them some bonus or incentives. Correct? If I am giving them fixed pay, okay, every day you work, I will give you so much. Their productivity may not improve. If I ask them to work, and if you save time, or maybe if you produce more and more, I will give you some incentives or bonus, maybe they will get a motivation and they will start working. So all this has to happen well before us. Clear? So like how you guys also prepare a timetable, correct? So just before your exams, when you start your preparation, you will also prepare a timetable either for 3 subjects or 6 subjects, depending upon how many papers you are writing or how many groups you are writing. Accordingly, daily target you will keep on achieving. No? Same way, organization also. They will prepare a budget for a year and they will break down into like per day, per week, per month. So they keep on achieving it. And they will also see at the end of month, you assume, they will see what is the actual work done with the budgeted. Are we in line, or if there is any deviation, immediately take action. And whoever is responsible for it, maybe we may penalize them. Okay, because you are not able to achieve the target as desired. Got it, guys? Yes. So this is all about the budget, and there is a lot of things to coordinate also. As I told you, sir, just preparing the budget is not enough. I need to coordinate with each and every department functional manager. And now this functional manager, assume I have given a target for production manager to produce 1 lakh 50,000 units. Now he will take care of his team. He will make sure that his team will achieve this. Clear? Yes. And every functional manager means the head of each department, including finance and Even finance department, we will ask, do we have so much of money, okay, to do all this? If not, please raise the extra money through either debt or equity or whatever it is. You try to raise. So each and every functional manager or department manager will be a part of this budget committee while discussing. But for this budget committee, one head would be there. One among them, we will choose them as a head. Why, sir? Because whenever the top level management calls, like CEO or CFO, everyone cannot go. Correct. There will be one person who is representing this budget committee, who is called as budget controller or budget officer. Is that clear? So you guys know, like there is something called a GST council. Correct. Any decisions with respect to GST will be taken by whom? GST council. And GST council has various members. Correct. From each and every state, one member. Plus, totally how many states are there for GST? 31, including 3 union territories with state legislation. That is Delhi, Pondicherry or Puducherry, and Jammu Kashmir. These three actually are union territory, but are considered as states for GST purpose. So totally 31 states. Correct? So 31 state members plus 2 central members. One is Union Finance Minister, another one is Union Finance Minister in charge of state, who is called actually Pankaj Chaudhary. Okay, names you need not remember, but I'm just telling you. Nirmala Sitharaman is a Union Finance Minister, the head of GST Council. GST Council. So while conducting the meeting, all the members should be there. At least half of the members should be present. Correct? Quorum for the GST Council meeting. At least half of the members should be present. Okay, sir. Now, anything with respect to the GST Council meeting or decisions taken, who will communicate, sir? Madam, head of the GST Council. Correct. Actually, it is as if Madam is taking all the decisions. No, there would be a team, but the front face is Madam. Even while reading out the budget, is it like Madam prepared the budget whole night and came and read it on the next day? No, sir. There is a team working on it. Clear? Maybe the finalization, everything would have happened through Madam. Okay, that is, they will conduct a meeting just before presenting the budget and all. Finally, Madam will come and read it. Clear? Yes, guys. Chalo. Let us begin. I have just given an overview of this chapter, guys. Let us quickly go through. Budgeting, budgetary control, and standard costing are essential tools frequently used by business executives for the purpose of what? Cost control. For the purpose of cost control, which is nothing but purpose of planning, execution, and control of business activities, guys. A budget is a precise statement of financial and quantitative implications of the course of action that management has decided to follow. That is their future plan in the immediate next period of time, usually a year. Budget can be prepared for any period, guys. But usually, if nothing is given, we consider it for a year. Sir, can we prepare it for a month, for a week, for a quarter, for a half year? Yes. Next. A budget fixes a target. Budget is nothing but a target, guys. We need to work as per that. Same way you guys do it. No, you will set a target for each and every day, or maybe once in a week, or once in a 15 days. You try to achieve it. For example, sir, I have to finish this subject within a week, sir. You would have set a target. So that is nothing but your budget or standard. Yes, fixes a target in terms of money as well as quantities against which actual performance is measured. Actual performance means actual work is done. Now, sir, can budget be in terms of money as well as quantities? Yes. Yes. For example, sales. I fixed how many units to be sold? 1,50,000 units. This will generate a sales of, assume, 50 lakh. So did I fix it in both the ways? Sales in rupees 50 lakh, sales in units 1,50,000. Same way, sir, how many units should I produce? Assume considering opening stock, closing stock and all, I am supposed to produce 1,60,000 units. Sales is 150, but there will be some opening stock, closing stock. So assume we got to know production is 1,60,000 units. So for that, obviously we need to incur a cost, material cost, labor cost, everything. Just check how much it should be. That is in terms of finance. Correct? So I can set a budget both in terms of quantity as well as money. That is finance. Thus, the essential features of budget are as follows. It is a statement expressed in money or physical units. That is, as I told you, it can be expressed in money terms or physical units. Physical units is nothing but quantity. Then all the department of a business unit should cooperate for preparation of business budget. I told you, we will call the meeting for all the functional manager. Only then we will fix the budget. Because assume I have fixed a sales budget of 1,50,000. Now production manager is telling later, after 1 week he came and told, no, we cannot achieve it. I don't have so much facility. And better talk with everyone, only then fix a budget. Then, and also coordination should be there. For example, sir, we have fixed a budget of 1,50,000 sales quantity. Now, if I have to achieve a sales, production manager has to produce on time and give it to the sales department. Correct. So our sales department is working rigorously on advertisement, marketing, everything. They are calling the customers, they are approaching the people. But production manager, full latte, full late. They are not able to produce on time. Then is there a coordination? No, sir. Whatever efforts the sales manager is putting or sales department is putting is going into vain. Next, budget is a mean to achieve business objectives and it is not an end in itself. Sir, budget is like for a short period. Business will always have a vision and mission. Correct. They will also have an objective, which is for a very long period. Now, budget is for 1 year, 1 year, 1 quarter, and all. Sir, once a budget is achieved, is it a end? No. Again, for the next period, we will set a new budget. We will start working as per that. It is laid down prior to budget period. That is very important. Sir, budget should be ready always before the budget period. Clear? So assume financial year. Budget in India will always be prepared for a financial year. Should it be prepared and submitted or like presented before 1st April or after 1st April? Sir, before 1st April, sir. Clear? Because it should be implemented from 1st April. Clear? So if you remember, it would be presented in February, then far against all discussions will happen. Very healthy discussion. You know, na, in the both the houses of parliament, how the discussion will happen. They will discuss far against everything, and once it is finalized, madam will sign. Another madam is there. That is the president madam. Clear? So once she gives her assent in the form of signature, the bill will become act. You know, na, finance bill. Before any bill is signed by the president, means any act, it is called bill. Once the president gives her or his signature, it will become an act pass. Clear? So I will just give an example. This I normally teach in income tax, but still, at least for you guys to recall. Once the finance bill is presented by the finance minister, which includes all the changes to be brought or proposed, it has to obtain the majority of the members' approval both in Lok Sabha as well as Rajya Sabha. Once it obtains the majority of the members' approval, it will go to the president. Once president gives his or her assent, that is in the form of signature, the bill will become act as. This is not only for finance bill, this is for any bill. When will the bill become act as? Once the president gives their signature. Oh, so in simple, budget should always be ready before the period starts. Then it should be prepared for a definite future period. Now I told you, you achieve 1,50,000 sales, but I didn't tell for what period. Sir, is it for a month? Is it for a quarter? Is it for a year? Now assume you thought it is for a year, but in my mind it was per month. Now at the end of the year you came and told, sir, I have achieved so much. I told it is per month. Correct. It should not lead to confusion. Let there be a clarity. When you are telling a budget, please mention it is for which period. Is it for a year, month, or quarter? Then the policy to be followed to attain the given objective must be laid down before the budget is prepared. That is, sir, what if I just tell what is the target? It is not enough. I should also tell how to achieve. How do you break down that? And I should also provide the facilities whatever is required. For example, I have told you how to do this, but I have not released the money. I have not released the money. What is the use? Correct. So whatever facilities, whatever resources is required, even I need to provide that. Correct. So for example, assume, sir, I have been asked to take class here, but no setup, sir. Or no classroom only, sir. Clear. So is it possible? No. If you have given me some task, then better give me the facilities also, and also tell how to do it. Okay, for teacher, no one need to tell how to do it, but still, maybe if it is a top level management or a good institution and all, they may tell some inputs. So this is what is our students' expectation. Please try to do like this. Correct. Some inputs they might give. Okay, sure. Budgeting. There is a difference between budgeting and budgetary control, guys. What is budgeting? Budgeting is the complete process of designing, implementing, and operating. That is, just planning the budget is not enough. Prepare a budget, implement it, and also make sure that you are working as per the budget. Operating means you are working as per the budget. The main emphasis in the budgeting process is the provision of resources of to support plan. I told you. Now, whatever budget is there, please provide the necessary resources for it. Clear, whether it is money, human resources, whatever it is, please provide the resources whatever is required in order to achieve this target, which are being implemented. Okay. Next, budgetary control. Guys, budgetary control is like this. Sir, you have given us the target. We are working as per the target. But every now and then, compare actual with budget, and keep on seeing whether we are in line. Whether we are in line. Correct. Now, for example, simple example, I will tell you. Now, once you guys are studying, I always suggest try to take up some questions on that chapter. Assume you have finished one chapter today. You will take up some questions, maybe past examination questions, and you try to answer. Compare your answer with ICI answers. Check whether you are in line with ICI standard. It is always a good practice, guys. Clear? Because sometimes students believe that whatever I know is is the best. Clear? Yes, might be, but may not be as per ICI standards. Clear? May not be to get 50 marks or may not be to get 5 out of 5 in the theory question, especially theory question. Numerical question, I think you guys can manage. Clear? With respect to, see, theory questions means you have to present it in a best way, guys. Some students will have a habit of writing general answer in general. 2 or 3 lines, very perfect. Rest, full story. Sir, we are very good, sir, in be calm. That is what we did, sir. Calm. Name itself is telling. Be calm. Yuntara. Okay. Calm. ಬರ್ತಾನೆ ಅವನು ಅಲ್ಲಾಡ್ಸ್ಕೊಂಡು ನೋಡಲಿ ಹಂಗೆ ಹೋಗ್ತಾ ಇದ್ದಾನೆ ಚಲೋ so try to inculcate all that, guys, because I have told you it is very important for you to understand the reality before jumping into the exam hall. Don't straight away go and eat the examination and there don't get shocked. Oh, this is what the question paper. Ah, first question is compulsory. Ah, oh, your first question is for 14 marks. Ah, oh, your 30 marks MCQ. Na. See, then your exam will become a trial for you. Correct. 1 or 2 attempt is for Devru God. Like RCB fans. Sir, first match always for God, sir. Clear. 17 years we took to win the match. And 18th year we won. And what and all happened. Correct. So I felt okay, winning was not like required for whatever happened. Okay, I was a huge RCB fan because I am from Karnataka, but still the thing is, whatever happened, I felt this win was not required at all. Okay, whose failure it was, we don't care about it because ultimately some people lost their lives. It is not like some people lost their life. What about their family also, especially young people? And I saw, okay, one of my cousin actually posting, okay, he's 15 years of age. He posted, oh, 18 years of wait is over. I was shocked. You are 15 years. You are 15 years. How did you wait for 18 years? ನಾನು ಹೇಳಿದ್ರೆ okay. If I am telling it, okay. Because I am there till from the day the IPL started. This guy 15 years. Obviously, ಹುಟ್ಟಿದಿಂದಾನೇ ನೋಡ್ತಾರಲ್ಲ. From the day he was born, he was not seeing. 18 years of wait is over. Fine, guy. So it is simple. Even for CA course. Okay, let us now come back to CA. Even for CA course, guys, the journey is little longer. When compared to any other course, the journey is little longer. But I tell you, the wait is worth. The wait is worth because, guys, you are making something big in your life. So obviously, you cannot do it in a short period. Especially now, there are a lot of misleading information which is happening. CA will take time. So do that course, do this course, and that. CA will take time because obviously they cannot release to the market semi-finished goods. They have to release the output. So to produce the output, it will take time. That output will be you. Okay. Yes, sir. So it will take time, guys. See, they are not planned only from academics point of view. ITT, orientation, articleship, everything should be a part of this because you should be that all-rounder. You cannot be only, sir, I know everything theory, but I don't know how to apply it in the work. You cannot be that person. Correct. Or else, sir, I am very good in my knowledge, but I don't know how to present it. I don't know how to communicate. I don't have any skill. That is why all this ITT, orientation, everything is there. Clear? Everything will make you that perfect person or perfect product ready to the market. So don't worry about the time it is taking or the time you are taking it, guys. You are making your better future now. Just focus on that. Because see, I am always telling this to the students, good things take time. Good things take time. Don't follow the shortcut. Now, for example, sir, assume I saw a video telling in 10 minutes you will get 10 marks. 100 minutes, 100 marks. Andre 100 hours of class yake. Clear? We take normal classes for 100 hours, 150 hours, 200 hours. There will be one person coming and telling 100 minutes, 100 marks, take it. And if that was so easy, then CA everyone would have passed, guys, just by watching 100 minutes video. Or There will be seriously, if you also watching YouTube or finding any videos, you will find 10 marks in 10 minutes, 20 marks in 20 minutes, like that. Yeah, see, if you're following it or if they're really doing good, great. But the thing is, don't fall for the shortcuts. For example, this attempt pakka questions, guaranteed questions, okay, sure short questions. Guys, no one is god, including me. Clear? If sir, I can predict whatever questions will commit in the exam, no, I may tell what is important, what is not important. Clear up, but still I cannot sure shortly tell this will definitely come, that will definitely come. And you see, many people do this also. I would have solved 100 questions in the class, definitely one or two questions out of that will come in the exam, same to same. Now can I claim a credit for it? I don't think so, because whatever I would have done is from ICI resources only. One or the other question, maybe here and there one few changes I would have done. Now can I claim a credit for it? No, guys. Maybe for solving that in the class I can claim. I cannot tell this is what my own question, ICI picked it. No. Clear? Yes. Chalo. So when you're also studying, please don't fall for shortcuts. Don't give ear for your rumors. Clear? For like, especially during exam time, they will tell this paper will be tough this time. Okay, last time this paper was easy, that means this time it would be tough. Or this time the evaluation would be tough, or results will be less, or results will be more. Lot of things will happen. Guys, no one will know how the things will happen. Okay, everything is external. Is it in my control? No, sir. What is in your control? Only worry about that. Prepare well, give your best. Leave the rest to the gods. He will take. He or she will take care. Clear? So don't worry too much, and just make sure that you try to gain as much as the focus as possible. Especially in today's generation, there is a lot of distractions, guys. Okay, more than the attractions. Means, sir, to study, I'm telling you have a lot of distractions. And I tell you, one small deviation might take you somewhere else. And it may create a lot of gap between your goal and what you are doing. So please make sure that you don't take that deviation. You guys still now are in the right path. If you have taken CA in your life, I know you are already accepted a biggest risk in your life. But make sure that you come out of this as a successful person. That is very, very important. Don't be a loser in your life, guys. Because if you go out of this course as unsuccessful person, everyone will look up to you as a loser. Or if you win and if you go out of this course as a qualified chartered accountant, then everyone will look up to you as a winner. You might be a role model. You might be an inspiration for many. See, whenever someone asks me, why did you do CA? Why did you work so hard? Only one thing I will tell you. Only one thing I will share is, I didn't want my next generation to take someone else's example. That is, when you are telling your next generation, do that, do this, you cannot show someone else to be the example. Clear? I cannot show my neighbor and tell, be like that. Correct? Be that example in your home. And you need not tell the next generation what to do. They will follow you. And I tell you, trust me, your next generation will outperform. For sure. Clear? That is what happens. Clear? You are outperforming your parents and grandparents in terms of knowledge and qualification. I'm telling you. Okay, now don't and go to home and tell, hey, I am superior. Anta. ಅಲ್ಲೇ ಹೊಡೆದು ಕೂರಿಸ್ತಾರೆ. ಚಲೋ ಬಾಲ ಕಟ್ ಮಾಡ್ತಾರೆ. ಚಲೋ. So when it comes to knowledge, qualification, and all, obviously we have more facilities than what they had. For sure, that is the reality. And obviously you will give best to the next generation. Clear? So definitely they will outperform you provided you set a right example. If not, what can you tell them? Correct. One or the other day they will also question, you only cannot do. What will you tell us? Clear? So please be that example, at least, if not for the society and public at large, at least for your family. And your family is waiting for you to get successful, guys. Whether your parents tell it or not, every day they are waiting, literally waiting. Almost all of you would have already been like 18 plus. Clear? Yes. Means in next few years you have to settle down. That is what your parents are expecting, and they will have their own plans for marriage, that to this, everything. Okay, and responsibility, giving away the responsibility, delegation. Okay, parents have to delegate their responsibility to their children now after a certain age. Yes. So they would have their own plans. Please make sure that you will not make them wait for a very long time. Clear? So try to achieve it as early as possible. See, not only for your parents' sake, but also for you. You guys also will have a lot of wish and dreams. I should do that. I should do this. I should buy this out of my own earnings. Clear? So all that has to happen as early as possible, guys. Don't keep on postponing. Some students take the attempts also lightly. Ah, if not this attempt, next attempt. If not next attempt, next to next attempt. You got three attempts there. Clear? So every 4 months, one attempt is there. No, sir. We will see. If not this attempt, next attempt. So please don't do it, guys, because you are making yourself wait for a longer thing. And the longer you wait, the interest might come down. Interest might come down because what interest you will be having in your first, second attempt and all, gradually it will come down, guys. Diminishing marginal utility. Correct. Because you will be studying the same thing and again and again, you will also feel like, I know all this. Okay, how many times to study all this? I can manage it. And maybe after a certain period, you have to start working. Managing studies along with working will be highly challenging. So please make sure that you complete it at the right time, guys. And there are a lot of things to experience in life after you qualify. Because qualification is not the end. After that, there are a lot of things. Okay, new avenues will open to you. Clear? And I will not definitely promise you that life will be easy after being a child accountant, but it will be better. It would be better, guys. So simple example I will give you. Assume you are working for 1 month. Whatever time you are putting in 1 month, you are able to earn 1 lakh per month. Another person is there. He is also working for 1 month. He is earning 20,000. Will it not make a difference? And to earn that 1 lakh, obviously you have to put a hard work, efforts. But maybe in a managerial role. 1 lakh, what examples are? Very 1 lakh. See, it depends on the person. I'm just giving an example. Clear? It depends. It varies from person to person, qualification to qualification, years of experience, and the skill you possess. Everything it will vary. So there will be a lot of differences. The life what you lead and the life what others lead. So be that extraordinary person. And for being that extraordinary person, you need to just put that extra efforts. That's all. Okay. Chalo. Where were we? Budgetary control. Okay. So in budgetary control, what do we do is, sir, we will set a budget. We will work as per the budget. And continuously we will be comparing the actual work with budget and see if there is any deviation. And if there is any deviation, immediately we will inform the top level management and we will try to bring necessary changes. Necessary changes. So that is what is budgetary control. Okay. Next, components of budgetary control system. There are different components of budgetary control system. There are totally four. What are those? One by one. Physical budget, normally expressed in quantities. Physical budget is normally expressed in quantities like sales quantity budget, purchase quantity budget, production quantity budget, like that. Whereas cost budget expressed in rupees tax. Clear? Like production cost budget, under production cost budget, material cost budget, labor cost budget, overhead cost budget. So all these are expressed in cost. Then profit budget. Profit is nothing but sales minus the cost. Okay, which includes both the sales as well as cost budgets. Here we will try to find out the profit. Then financial budget, which is nothing like cash budget. Financial position, which will help you to decide the financial position of the company. You know, na financial position, where do you decide? In P&L account or balance sheet? Balance sheet. So wherever you are finding out about the balance sheet figures, or you are planning about the balance sheet figures like cash budget. Cash budget, what will you do? You will take the opening balance, add all the estimated cash receipts, deduct all the estimated cash payments, you will get closing cash balance, which will affect your balance sheet. Closing cash or bank balance. Yes. We will also prepare something called as capital expenditure budget. Will it affect my balance sheet? Yes. Sir, in the upcoming year, what all assets I am planning to buy? So this are called financial budget. So through this, can I prepare the budgeted balance sheet also for the upcoming period, like estimated balance sheet? See, normally financial statements are always prepared after the books are closed. But when it comes to budget, can I prepare an estimated balance sheet for the upcoming period? Yes. Next, preparation of budget. So what are the steps to be followed in the preparation of budget? First, know the organizational objectives. Your goal or your budget should be in line with organizational objective. Organizational objective is long term. Okay, they will tell for what purpose they are here. Clear? So your budget should accordingly match with that. Clear? So budget in the short run has to match the objectives of the company. Next is identification of key budget factor. I mentioned about this. Sir, I have planned to produce 1,60,000 units of output. For that, I need 1,60,000 kgs of raw material. But we maximum have only 1 lakh. Assume 1 lakh 20,000 kgs of raw material. So that is a key factor. So I have to plan my budget by keeping that key factor as a base. If you remember, while teaching marginal costing, one question we did, clear, where the raw material, I guess, was the key factor. Correct. So, sir, for all three products, we had a demand, but the last product I couldn't fulfill full. Why, sir? Because of limiting factor. So within the limited resources, whatever I can do, I will plan it. We fixed at the end product mix, right? Yes. So even though there is a demand for the last product, I couldn't produce fully. Why? Because I had a limited raw material. Next, appointment of controller or officer. Like madam's example, I told you, there would be a budget committee. In this budget committee, all the members, that is, the members would be the head of each functional department. Clear? And one person will be the head of all of them, who is called the controller, budget controller or budget officer. Anything with respect to the budget will be communicated through them to the top level management. Or even if top level management has to communicate anything, they will straight away communicate not to each and every person. They will communicate to this guy. They will spread the information. Next, budget manual. Sir, what is budget manual? Guys, it is a document in which they would have told what you are supposed to do and how you are supposed to do, who is responsible for what. Clear? Because now top level management assume they've just communicated orally what everyone has to do. Now, some people might forget over a period of time, correct? So document it. Better prepare a document telling who is supposed to do what is your responsibility, what is her responsibility. So that at the end of the year, if you guys don't achieve your targets, I can make you held responsible. Yeah, so document whatever has been discussed and communicated. Then budget period. Budget period should be specifically mentioned. I told you, whenever you are preparing a budget, please specify the period for which budget is prepared. Month, year, half year, whatever it is. It should be for a definite period. Clear? Yes. Definite period means, for example, you should have mentioned for the year, for the quarter, like that. Simply don't tell. For example, budget for the period. Which period? Month, quarter, year. Standard of activity or output. Guys, normally, whenever we are preparing a budget, we will take the past as a base. Last year, what we have achieved, we will set a target based on that to the next year. But obviously, will we copy paste the same? No, sir. Obviously, any company wants to grow, guys. So we will consider the growth rate. We will consider the growth rate. Sir, how much can we grow? How will we grow? I told you, for sales manager, sir, we have planned to sell 50% more. How can we achieve this? So they would have figured out a way. How do we sell more 50,000 units? Yes. And even in your FM and all, you would have seen growth rate and all. Cash flow may not be constant. It will be growing. If it is a constant growth rate, how is it? Dividend growing model and all you have. Correct? Yes. That G, small g. Okay, stands for what G? Growth G. Okay. Different types of budgets. Depending upon the various bases adopted, budget may be classified into different categories. Madams, pay attention. Based on capacity, fixed budget, flexible budget. We will discuss each of them later. Based on the period, long-term budget, short-term budget, current budget. Okay, sir. Based on function. Based on function means, guys, we call someone like functional managers and all. They are nothing but the managers of each department. Now, functional budgets means what, sir? For each activity, we'll prepare a separate budget. Clear? First, we will log what? Sales budget. And for sales budget also, we will do a lot of research. We will do external factors, we will consider internal factors, we will consider pricing, we will decide. So if I want to sell more, maybe I will plan something about discount offer. Clear? Or else maybe I will try to enter the new market or exports. Clear? Or else I am operating only in south. Now I am planning to go to north or new states. So it can happen like that. Sales budget we will fix first. Then based on sales budget, we will prepare a production budget. But you cannot keep it as it is because there might be some opening stock and closing stock as. Yeah. Yes. And based on production budget, we will prepare a production cost budget. Under that, material, labor, and plant utilization or even overhead will come. Plant utilization means, sir, to produce so much, assume we have prepared a production budget for 1 lakh units. To produce that, do we have a capacity? Do we have a plant? Do we have a factory? If not, please get a new one. Get a new one. Then under overhead, we had a different heads under the cost sheet, same head. Manufacturing overhead, administrative overhead, selling and distribution overhead. Then coming to research and development, this is discretionary, guys. Every company may not have it, or again, even if they have it, how much money to spend for it depends on how much money you have. Okay, how much money you want to invest on R&D. Then comes financial budget. Financial budget includes your cash budget and capital expenditure budget, which normally affect your balance sheet. Okay. Guys, first we will prepare all this individual budget. Then we will prepare a summary of all this. We will prepare a summary of all this, which is called master budget. Master budget, or we also call it as like targeted P&L account and balance sheet. Targeted means the budget. Clear? So targeted P&L account and the balance sheet. Now we will see each of them. Classification on the basis of scope or functional. Functional budget. Budgets for a period are classified according to the various activities in the organization. The main activities are what, sir? The sales, production. Under production, there will be like purchase, labor, recruitment, all those things. So for each activity, we'll prepare a separate budget. The fourth, and all these activities are interrelated. Sir, can we work without the others? No. For example, can production work without the others? No. If there is no purchase department, who will purchase the raw material? If there is no stores department, who will store the raw material? And whenever required production department, the stores department has to supply the raw material, right? We discussed it in the material chapter. Yes. So all the department has to work in a coordination, guys. The forecast for individual activities are prepared and coordinated with those of other activities and then consolidated to show the total effect of all the activities as a whole. Once we prepare all individual budgets, next we will consolidate it, which is called the master budget, guys. The consolidation of all the functional budget is called master budget. You also, guys, prepare in accounts consolidated financial statements, right? You will first prepare the standalone financial statements for each companies. Clear. And for the entire group as a whole, we will prepare now. Consolidate. Clear. Likewise. For each department, we will prepare a separate budget. At the end, we will combine everything and prepare one budget for the entire company, which is called master budget. Principal functional budgets are one by one. First one, sales. Guys, sales budget can be prepared both in quantity terms as well as in rupees. And while preparing the sales budget, as I mentioned you, we will consider various factors, the pricing, internal factor, external factors. Then what is the market? Now, especially now if I tell you, Donald Trump, full crazy guy, clear a full crazy buy. Now he told we will increase the tariff first to 25%, now 50% already. I don't know again how it will make like with China also they played the same game. Okay, they will increase, they will increase, they will increase, they will. Finally, they both came for an agreement. Coordination. Clear? Yes. So now they made it like for in from India, whatever we import, we will charge 50% tariff. Now obviously cost will increase. Now, will the US citizens prefer Indian products there? Maybe not, because the cost of Indian products will increase. Clear. Will it affect our sales? Yes. That is why Indian market is getting corrected now. If you guys observe, Indian stock market, I am telling you, whoever has the exposure for US market, they're getting corrected. Whether it is pharma company, IT company especially, they're dependent hugely on US clients. Clear. So this will affect their sales. Why, sir? Because automatically when they're charging more tax, your cost will increase. When your cost is increasing, what do? You try to shift it to the customer by increasing your sales, but you are not able to manage. So now what customers will do? They will try to shift to other people or your competitor. Yeah. So there are a lot of things. Even taxes we have to consider. Clear. In India, they're supporting the businesses by bringing a lot of things with respect to startups and all. Even in income tax, if you see, there is a section called 80 IAC and all, where they give deductions for the startups. For the startups. Okay, first few years, don't pay any tax, even for SEZ and all. If you go and operate your business in SEZ, 15 years, enjoy. First 5 years, 100%, next five years, 50% of your eligible profit, or last 5 years is like how much amount you will transfer it to special economic zone reinvestment reserve, whichever is lower. Correct. All these are to support the companies or businesses. Especially SEZ has been set up to support export businesses. Clear. Even in GST, if you see any supply to or by SEZ unit or SEZ developer is always interstate. Sir, it is within India only. It is within Karnataka only. Assume, guys, in Karnataka, in Bangalore, electronic city, a particular area of electronic city is declared as SEZ. Now I supplied from a area, Jainagar, to a area in electronic city, which is SEZ. What supply it is? Interstate. Sir, within the same state, within the same city, still interstate. Why? Because for GST, SEZ is considered to be a location outside India. Outside India. Now, if you supply anything to SEZ, it is zero rated. It is at par with export. Interstate, okay. Sir, is it also zero rated? Yes. If you supply anything to SEZ, it is a zero rated. Sir, what if there is any supply by SEZ? Means they are supplying to me. It is interstate supply, but not zero rate. At par with import. IGST would believe it. Clear? I will explain this and this. Interesting, interesting. Okay, may not be so much relevant here, but still I am mentioning. Assume this is SEZ. What is this? SEZ. Supply by them is zero rated. Supply to them is interstate. Interstate at par with import. What would be levied here? IGST. And this is zero rated. Zero rated means it's taxable, but rate is zero. Sir, can I claim ITC? Yes, you can claim ITC for your inverter. Oh, come back, come back. Production budget. Sir, once we have locked sales budget, as per that, we will plan our production budget. But please be careful when you are preparing production budget, you should also consider your opening stock and closing stock. I will show you a question. Assume guys, in this question, they have given the sales already, estimated sales. And they are asking you how much units should you produce. For that, you need to adjust the opening stock and closing stock. Sir, what is the formula, sir? Guys, simple. You know this formula already. Opening stock plus production minus closing stock is equal to sales. Yes. But actually, in this question, sales they have given, but asked you to find out production. Just interchange the position. So, sales minus opening stock plus closing stock is equal to production. Correct. Opening stock is something which is already produced, sir. Should you produce again? No. So, deduct it. And, sir, why are you deducting it from sales? Very simple logic. Sir, as soon as I start this year, first I will sell what? Opening stock, which is already produced in the last period. Correct? But did I produce it in the current period? No, deduct it. Whereas closing stock is produced in the current period, but not yet sold. So is it included in sales? No. But have I produced it? Yes. So we are adding it. What do you get? Production. So this is the format. When they ask the production budget. Yes. And for production and all, sometimes for production or for closing stock, they will give you some pattern. Here actually for closing stock, they have given the pattern. What is the closing stock means? 20% of next quarter sales. And remember one thing, closing stock of this quarter will be the opening stock of next quarter. Or closing stock of this year will be the opening stock for next year. Hope you got it. Yes. So we'll get a production quantity. Based on that, we need to plan the raw material, labors and all. Yes. Yes. So production budget, and also guys, here we need to prepare. Once I have locked the production budget, both in terms of cost as well as quantity, then prepare material budget, labor budget and plant. Sir, assume we have prepared a production budget for 1 lakh units. Now for 1 lakh units, how much raw material is required? Can we purchase it? At what price? Everything you prepare. Clear. So now assume the annual requirement for each and every unit of output, we require 1 unit of raw material. So how much raw materials I totally require? 1 lakh. So annual demand is 1 lakh. Plan your reorder level, maximum stock level, minimum stock level, reorder quantity, everything you plan in advance. Clear, correct? See all that whatever we calculated in second chapter, that is material. Will we do it at the beginning of the year or at the end of the year? Beginning of the year, correct? At the end of the year, if you do, what is the use? At the beginning of the year, standing today, I will calculate what should be my EOQ. Here, what should be my reorder level? Everything. Accordingly, I will be following it throughout the year. Next, labor budget. Sir, to produce 1 lakh units, how much labor is required? Assume to produce each and every unit, we require 5 hours of labor. That means totally we require 5 lakh labor hours. That means how many labors? Each labor can work for how many hours? Divide it. Clear? Now assume totally we require 100 labors. Do we have them? Assume presently we have only 80 labors. Make them to work extra shift or else appoint new workers. Appoint new workers. One more thing, if you ask them to work extra shift, you have to pay them overtime premium and all, additional cost. Are you ready to bear it? If yes, okay. If not, better appoint the new workers. See, both has their own advantage, disadvantage, guys. See, if you appoint new workers, you have to appoint them throughout the year. Even when there is no work or even if there is no demand, you have to pay them salary or wages. Whereas present worker only, whenever required, sir, I will make them to work overtime. Okay, some extra cost in that in terms of overtime premium I will pay, but only when they are working. Extra overtime. Correct. Huh? Overtime is not required throughout the year, sir. Only when the work is more or commitment is more. Clear. So as per the needs, the organization will plan this. But you should also not like appoint more people and make them to sit in the bench that is waiting for their work. At the same time, you should also not have very less number of employees, because whoever is having will have too much of work. They will have too much of pressure. When they cannot handle it, they will decide to quit the organization, which will lead to labor turnover, which will lead to replacement cost. Correct? So many linkages. Sure. Next, plant utilization budget means, sir, to produce 1 lakh units, do we have already the capacity? If yes, continue. If not, plan to have an increased capacity. Increased capacity will come with an increased fixed cost. Got it? Yes. I will just show you. You can see, guys, once I lock the production year, based on this production units, we will prepare even the raw material budget and all. You can see units to be produced, which we got from the previous calculation. And for each unit, how much raw material is required? 2 kgs. Clear? So what is the total raw material required for production? This quantity. Should I purchase everything? No, sir. I might have some opening stock and closing stock. So this is my total raw material required for production, which is nothing but raw material consumed. Now, take raw material consumed, add closing balance, deduct opening balance. You will get raw material to be purchased. This equation I am followed. Opening stock plus purchases minus closing stock is equal to consumed. We already have consumed. Now do the reverse calculation. Add closing stock, deduct opening stock of raw material. What do you get, sir? Raw material to be purchased. Sometimes they will also ask you, what is the cost of raw material to be purchased? Just multiply with the price per kg. Yeah, and for this question, they are told we will purchase 30% in first quarter, 50% in second quarter, 20% in the third quarter. Accordingly, we divided 3,15,000 in this ratio. If nothing is given, if they have just given purchase price, multiply purchase price with this, you will get raw material purchase cost. That's got it. Yes. And also, using this, they may also ask you to prepare labor hours or labor budget. Sir, how is it? Simple. This is the units to be produced. Yes. Multiply this with the number of labor hours required to produce each and every unit. Clear? Yes, sir. You will get total labor hours required. If you multiply that with labor rate, you will get labor cost. That's overhead budget. So overhead budget here is nothing but manufacturing overhead budget, administrative overhead budget, selling and distribution overhead budget. That's nothing new. We already discussed about this in detail in cost sheet chapter also. Clear? But there we used to present once I incur the cost. Now we need to estimate it in advance. Estimate it in advance. And guys, when it comes to overhead, they may not be able to estimate it accurately as it is not directly attributable to the work. So what they do is they will fix a percentage. For example, factory overhead will be fixed as a percentage of direct wages. They will observe it as a fixed percentage of direct wages. For example, assume direct wages is 1 lakh. They will tell factory overhead is 20% of direct wages. So 20,000. Same way, administrative overhead, selling, distribution overhead and all, they will fix it as a fixed percentage of factory cost. Factory cost. So whatever is the factory cost you have got, apply that percentage, you will get the respective overheads. Got it? Yes. So if I have to just tell it in simple, guys, manufacturing overhead is an indirect expenses which we incur in a factory, not the direct expenses. Okay, sir. And factory is a place where production happens. Then administration overhead is an expenses which is incurred for the purpose of planning, execution, administration of an organization. If I come to the cost sheet format, this can be general or related to production. If it is related to production, like, sir, planning my production, the execution of production and all, then it will be a part of cost of production. If it is general, it will come after the cost of production. Then selling and distribution overhead. Selling is different, actually distribution is different, but you can club both also. Selling overhead means, sir, to generate sales or to promote my products, what all cost I have incurred is called selling overhead, including advertisement. Whereas distribution overhead is the cost which we have incurred to distribute the product once it is sold, including the transportation cost, carriage outward. Then coming to research and development budget. Sir, some companies set aside certain part of money also for research and development. Clear? Sir, many companies, especially in today's generation, they have to come out with a new way, new products, innovative products. Clear? Today my product might be hero product, but it will not remain as hero forever. So you have to be even like na Apple or iPhones or iPads and all. So they're doing really good. But are they sitting idle? No, they are not settled. They want to come out with a new product. Sir, iPhone 16, 16 Pro, 16 Pro Max, or what all varieties. Yeah, maybe few extra features. Extra feature. Will they stand there? No. Next they will come out with 17 or 18 or 20, 25. I don't know what all numbers they will bring. Yes, sir. Same way. I'm just giving one mobile manufacturer name, but it is same way all the places, sir. Even in teaching, sir, if teachers remain same with same knowledge, same way of teaching, can he be a teacher, successful teacher? In fact, forever, no, guys. Correct? Because we also always be working on how can we present better, how can I teach better, or how can I simplify it. If you see my notes or my teaching today or after 2 years will not be same. Definitely, we would have also improved over a period of time. And whatever notes you are seeing now, colorful notes, sir, did I make it in 1 day or 2 day? Definitely not. It will be over a period of time, guys. Clear. Even you guys, will you become an overnight chart accountant? No. So you will be investing a lot of time. You will also find your innovations. You will students also will do innovations. Clear. Actually, I would have solved assume a question in one way. You will come out with another way. Sir, can we solve like this? Correct. Huh? If it is giving same result, yes, you can do it. Especially in standard costing, I only try to simplify it. In ICI material, whatever questions they are given, answers, it is bit challenging. I have told you when I was discussing the questions on standard costing and all, I have told you follow my way. It is more easier, clearer. So that is better because that is more simplified. When we were discussing the questions on IC from ICM material on each and every chapter, and even while I am discussing the question paper, I will tell you the better way of doing it. Yeah, ICA would have given some suggested answers, but maybe little confusing for the students. Let us do it in an other. For that, even I would have spent a time thinking, oh, this can be presented in another way, which is more simpler to the students. Yeah, and now you will also tell, some students will tell, sir, this subject didn't happen well. I only did full innovation, sir. I only studied myself, sir. I found a way how to study. Correct. That you how to do is, guys, now you cannot blame anyone for your failure results. If something didn't go your way, please find a way. Clear. Please find a way and as early as possible. Sir, nowadays you have lot of opportunities, lot of options. If not this way, you find out the other way. But I suggest you to find as early as possible. Clear? Sure. Financial budget. Under that cash budget and capital expenditure budget. Cash budget is nothing like cash and bank balance budget. So we normally take opening cash and bank balance. We will add all the estimated cash receipts, deduct all the estimated cash payments. We will get the closing cash and bank balance. Clear? And you guys would have prepared receipts and payments account and all. Very similar to that. Clear? Debit side, you will start with opening balance, record all the receipts, credit side, all payments. What do you get at the end? Closing balance. Clear? Very similar. Or your cash and bank account is there now. That also you can do. Okay. Normally budget means we will do it in the statement form, but can I do it in account form also? Yes. Start with opening balance, two balance brought up. Add up all the receipts, estimated receipts, because it is for the future. Then on the credit side, record all the estimated payments. You will get closing balance. That's all. Yes. Then capital expenditure budget, normally this will be long-term price. Because capital expenditure budget, I will not be incurring every day, every year. Once I purchase the budget, I expect it to use for number of years. So capital expenditure budget is like a long-term budget where I am investing the money into the capital assets or fixed assets. This will come only when the company is expanding their operations. Correct? Because if I am remaining same, then I will continue with whatever assets I have. Or if at all, if there is any asset which has become outdated, I may replace it. But normally, guys, even when you are reading the balance sheets and all, I spoke about this in my regular class. Okay, about how do we decide whether to invest in the shares or not? Fundamental analysis. One of the thing I told you, if the investment in the assets are increasing, if reserves and surplus are increasing, that means the company is expanding. Correct. So assume last year the assets was 100 crore. This year they've invested in 120 crore. It is a signal of what company is expanding. When company is expanding, obviously it will result in additional sales, additional profit. Correct. Then master budget. That is the summary of all the functional budget. Whatever we discussed now of all the summary is called master budget. We also call it as targeted profit and loss account and balance sheet. Sir, how do we prepare it? Similar to cost sheet, but format is bit changed. Sales minus cost of goods sold. Sales minus cost of goods sold is equal to gross profit. That is whatever you take care in trading account. Trading account, you know now, you already forgot? No, right? Yes. Then whatever you take in P&L account will come here. Less administration expenses, selling and distribution expenses, I can call it as like indirect expenses not related to production. Not related to production. Then what do you get? PBT, profit before tax. From that you reduce tax, if at all if they have given the question. If not, you can stop it at this point. If they have given tax rate, apply tax rate on this figure, reduce tax, you will get profit after tax, PAT. Profit after tax. Then classification on the basis of capacity or flexibility. Fixed budget, flexible budget. Fixed budget means, guys, here the cost will remain same irrespective of the activity level you achieve. Now I have told you to produce 100 units, you have to incur a cost of 1 lakh. Now whether you produce 110 units or 90 units, your cost should be 1 lakh only. It should not vary. Clear? Sir, this is fixed budget where your cost will not vary with the level of output. That means you can follow this budget only if your cost is fixed cost, or else if you know that I can exactly produce 100 units. Target is to produce 100 units. You know that exactly you will go and end up producing 100 units. Only then you will follow fixed budget. Clear? This is not practically followed, guys, because normally what budget I prepare at the end of the year, I may not be exactly going and achieving it. Some plus or minus will happen. Clear? So that is where the flexible budget will play here. Fixed budget is also called as static budget. Now, what is flexible budget, sir? Assume, guys, to produce 100 units, I have told you 1 lakh is the cost. Clear? I would have given a breakup. How much should be variable? How much should be fixed? For example, assume this is 60,000, this is 40,000. Now, my actual target achieved is, assume 80 units, 90 units. Can I change this cost? Yes. Anyway, fixed will remain same, whereas variable will vary with activity level. So, flexible budget will give you cost at any level. Any level. Now they will fix one level. Now if the actual levels changes, can I change my cost also? Yes. For example, I will show you. Yes. So you can see one simple question. See, at 50%, this is my sales, variable cost, fixed cost, and semi-variable cost. Clear? Yes. Whereas now if I operate at 60, 75, 90, or 100, they will ask you to give flexible budget. If I operate at so and so level, what should be my cost? Fixed cost will anyway remain same. Whereas variable cost will straight away vary with activity scales. So 50,000 is for 50% means how much for 60%? 60,000. 60,000 for 60% means how much for 75%? 75%. Likewise, variable cost will directly vary with activity level. Whereas semi-variable, if at all if it is there, they would have given some pattern. Up to certain level, it will remain fixed. After that, it will increase. They would have given some pattern. They would have given some pattern. Here in this question, they were given like this. Here like this. Semi-variable expenses remain constant between 45% and 65% of capacity, increasing by 10% between what? 65 to 80. So if your capacity is between 65 to 80, it will increase by 10%. If your capacity is between 80 to 100, then it will increase by 20%. It will increase by 20%. Sir, what about up to 65%? Remain same. Remain same. You can see only if it goes above 65%, it will increase by 10%. Some pattern they would have given for semi-variable costs. Clear? And if nothing is mentioned in the question, we assume fixed cost will remain same. But sometimes if they tell after 80% it will increase or after 100% it will increase, only then you consider. If nothing is mentioned in the question, you will assume that it will remain fixed cost. And whenever you are preparing flexible budget, you need to give a breakup between variable cost, fixed cost and all. And if at all if there is semi-variable, then calculate that also. Yeah. And even semi-variable we can divide actually into variable portion and fixed portion. That we will do only if it is required in the answer guys. So you can see in this question we have done that. There are some semi-variable expenses. Okay, there are some semi-variable expenses for which we have calculated. Like what is the variable portion? That is change in cost divided by change in output. You will get the variable portions. So once you get the variable cost per unit, actually these are variable. Sir, how will I know whether the cost is variable? Simple. If variable cost per unit remains same at all the levels, it is called variable cost. Whereas fixed cost in total, if it remains same, then we call it as the fixed cost. Total. Clear? Sir, per unit also not same, total also not same. Then it is semi-variable. So how do I divide semi-variable expenses into variable and fixed, sir? Simple. Take change in expense divided by change in output. You will get variable cost per unit. Then take any one activity level. Find out what is the total variable expenses. We have taken 8,000. What is the variable cost per unit? 0.025. Calculate total variable cost, 200. Now deduct this from total expenses. 600 is the total expenses. In that, how much is variable? 200. Remaining 400 is what? Fixed. Clear? So should I take 8,000 units activity only? There is another activity. Can I consider that? Yes, same answer. So simple you will do, guys. You will take total cost at a particular activity. From that, you reduce total variable cost. How do I get, sir? Number of units into variable cost per unit, which you have got here. Remaining is your fixed cost. Remaining is your fixed cost. Okay. Then classification on the basis of time period. That is long-term budget. Long-term budget means, see, sometimes they tell it is more than 1 year, but actually it is 3 to 10 years. Like your fixed assets budget or capital expenditure budgets. These are the long-term budgets. Then short-term budget is between 1 to 2 years. 1 to 2 years. Whereas current budget is like months to weeks. That is presently what I am working. Months to weeks. Okay. Sometimes company will do like this also. They will prepare a budget for a decade. Then they will break down into years. Then that year budget they will break down into months. Clear? It can happen. See, you cannot oversee a decade exactly now with certainty. Clear? May not be like decade also. So at least like 3 years, 5 years and all, they will prepare a budget. Then they will prepare a yearly budget. Then they will subdivide that into monthly budget or quarterly budget, because it is very difficult to oversee a decade. And we don't know, sir. You know, COVID came and turned all things around, clear, upside down, over it. Clear? No one was planned for it. No one had planned for it. So how the things, it was like doing, especially COVID time. What is happening? It is like we are watching some movies, Hollywood movie. Okay, ಇದೆಲ್ಲ ಬರುತ್ತೆ, ಟಚ್ ಮಾಡಿದ್ರೆ ಏನೋ ಆಗುತ್ತೆ, ಕೆಮ್ಮಿದ್ರೆ ಏನೋ ಆಗುತ್ತೆ ಅನ್ನೋದು. Clear? So all this was a first time experience. Okay, and we have crossed that. What and all we have seen in our generation. ಇನ್ನ ಎಷ್ಟೊಂದು ಇರುತ್ತೆ ನೋಡೋದು. Sure. Zero based budgeting. Zero based budgeting. Like actually, traditional budgeting works like this. Assume last year my units was, okay, let me take it here better. Last year, assume like 2024, my production was 10 lakh units and I had incurred a cost of 100 lakh. This year, I am planning that my cost would be 120 lakh. Under traditional budget, I need to explain only this why 20 extra. Why 20 extra under traditional budget? Yeah. Whereas in the under zero based budgeting, you need to explain full 120 lakh. Why are you incurring 120 lakh? Explain me each and every. Explain me each and every rupee. Hope you understood. Under traditional, I will not explain everything. I will explain only what is extra. What is the change? I will explain only that. Sir, why 20 lakh extra? Whereas under zero based budgeting, there is no base. In traditional, this was a base, correct? We asked you to explain only this. Whereas under zero based budgeting, no base, nothing. Please explain full 120 lakh. How much for what? Why? Please explain. That is what is called zero based budgeting. Zero based budgeting is a method of budgeting which requires each cost element to be specifically justified. Means you should tell why this cost, why that cost. Each and every rupee you have to explain. Though the activities to which the budget relates are not being undertaken for the first time. Sir, zero base means we don't have any base, we don't have any history. No, we will have it. Okay, but we will not consider it. Clear? You explain me each and everything. Zero based budgeting differs from conventional system of budgeting. Conventional means traditional, because it mainly starts from scratch or zero and not on the basis of trends or historical levels of expenditure. I told you, conventional or traditional means you need to just explain the extra. Whereas under zero based budgeting, you need to explain from zero. Performance budgeting means here we are evaluating the performance of an organization or each and every department. I had given you the target for each and every department. Now at the end of the year, we will evaluate who has performed how. And accordingly, we will reward them or penalize them if they have not worked as per the plan. We will try to appraise. Okay, we will try to appreciate the workers whoever has worked well. Budget period. Even see, when it comes to students, also it happens felicitation. Clear. Once you guys have passed your exams or cleared your exams, you will be felicitated by the educational institutions. Clear. Wherever you are studied, like that. Even your employee has to be appraised for their work or their hard work. Budget ratio. Guys, there are various budget ratios to be calculated. Ratio means we compare one with the other. Even in your FM, you will calculate various ratio, current ratio, quick ratio, correct now, interest coverage ratio. What do? Divide one by the other. Clear. Don't deduct each other. Divide. Clear. Yes, sir. And we normally express it in percentage, so we will multiply it with 100. So we are comparing two figures here, guys. And here figures is nothing but hours. Clear. Yes, sir. Budget ratios provide information about the performance level, the extent of deviation of actual performance from the budgeted performance, and whether the actual performance is favorable or unfavorable. If ratio is more than or equal to 100, then it is favorable. If it is less than 100, then it is unfavorable. Actually, if it is exactly equal to 100, I can tell at par. More than 100, favorable. Less than 100, unfavorable. Oh. Okay. Chalo, we will see all these formulas you should know, guys. I will come from bottom. See, budgeted hours, I have given a note here. Budgeted hours is always for budgeted output. Whereas standard hours, we need to convert it for what? Actual output. How do we get standard hours, sir? Simple. Budgeted hours divided by budgeted output into actual output. Into actual output. This will give you what, guys? Standard hours. So please be careful. Don't get confused with the words standard hours and budgeted hours because we use both in the formulas. Now, calendar ratio itself. Guys, we somewhere heard about it. Calendar variance, fixed overhead calendar variance. What is the formula for that? Actual days minus budgeted days into fixed standard, sir. Standard fixed overhead rate per day. Correct. Same way here. Sir, we will not deduct each other. We will divide, sir. Actual working days divided by budgeted working days. No into rate. It is into 100. Into 100. Sir, if actual is more, good or bad? Good. They told you should work for 25 days, but I have worked for 26 days. Good, no? Yes. Next, efficiency ratio. Guys, efficiency variance we had, what is it, sir? Standard hours for actual output minus actual hours work into standard rate per hour. Standard rate per hour. Okay, same way, instead of deducting, you divide here. Standard hours divided by actual hours work into 100. Clear? Yes. Next, level of activity ratio. Level of activity ratio. Activity ratio. Sir, how much is my activity when compared to plan? Standard hours divided by budgeted hours. Sir, both one and the same. No, I already covered it. Standard hours will always be for actual output, whereas budgeted hours will always be for budgeted output. Clear? Yes, sir. So divide each other and you will calculate the activity ratio. Then coming to capacity ratio. Guys, under capacity ratio, there are three. There are three. Don't get confused. Small differences are there. Please listen carefully. First, actual capacity usage ratio means how much capacity we have used. Guys, assume maximum we can work for 10,000 hours. But actually, we have worked only for 7,000 hours. So, how much capacity we have utilized? Only 70%. So, actual capacity usage ratio means actual hours divided by maximum hours divided by means how much capacity you have used. Clear? Yes. Next, actual usage of budgeted capacity means how much you have used when compared to budgeted. Guys, see, maximum is 10,000, but I had planned to use only 8,000. I had planned to use 8,000 hours, but I used only 7,000 hours. They're also underutilization. They're also underutilization. How much, sir? 87.5. Hope you're understanding. Guys, maximum we can work for 10,000 hours. But I had prepared a budget only for 8,000 hours. But I ended up working only for 7,000 hours. Hope you are catching it. Yes, sir. Then, and this is there now. This is nothing but fixed overhead capacity variance. Fixed overhead capacity variance we had under fixed overhead. What was the formula to calculate that? Sir, actual hours minus budgeted hours into standard fixed overhead rate per hour. So instead of deducting, we need to just divide here. And into will be 100 because we need to express it in percentage. Next, standard capacity employed ratio. Standard capacity usage ratio means, sir, budgeted hours divided by maximum. Guys, maximum I can work for 10,000 hours. But now we are planning to use for how much? Only 8,000 hours. This is my plan, not my actual. Actual we have seen already 7,700. Clear? So your plan for how much? Standard capacity employed ratio, which is 80%. Budgeted divided by maximum. Budgeted divided by maximum, guys. Clear? Yes. Sure. So finally, we have done this. So we have completed the costing concepts revision or marathon. See, normally we take more than 100 hours or in fact like 130 or 150 hours in our regular class to complete the class. But in a short period of time, I have tried to complete the entire 15 chapters, all 15 chapters, but as short as possible. Okay, but I have tried to cover the concepts, everything, but in a faster way, guys. Yeah, and also make sure that you guys are watching the questions marathon. I would suggest you to watch the concepts along with questions so that you know the concept and also you know how to apply it. Here also in the concepts marathon, I have told you how to apply it, but specifically questions I would have not covered. So please refer to that also. And hope this was helpful for you guys. I know, especially when you guys are during the exam time, it's very hard to sit for a long hours, to focus for a long hours, but push yourself. You are working for your better tomorrow. Clear? And recently I had shared one quote actually in my channel, that is WhatsApp and Telegram channel. I would like to mention that here. See, when the cost of distraction is too heavy to pay, then the price of focus is better to pay. Clear? Is more affordable. The price of focus is affordable. Clear? I repeat. I repeat because first time it will not go. When the cost of distraction is too heavy to bear, which will cost our life, career, the price of focus is affordable to. Okay, means we can pay it. Because if you don't focus on your studies now, then you have to work hard throughout your life. Okay, and that too, when compared to others, when you guys see in your work or in your company, other people are like much ahead of you, are earning well, working in a better position, you will feel bad about yourself. You will feel guilty. Instead of feeling guilty later, please work now. Even many students will feel guilty even in the exam hall. Shit, I should have studied and others are all writing full. Clear? You are like, oh, yo, this topic I didn't study. You are sitting empty, idle. There also you will feel, na, okay, I should have studied. Or even after getting results, you will feel like, shit, I should have studied for some more. Okay, 145, 140 I have got. Just to miss. Clear. So instead of feeling guilty, please work now. And try to increase your productivity as much as possible. How much ever you can. You know what best you can perform best. There is no limit for it. Try to perform to your best. And definitely you will get the results what you want. So hope this sessions was helpful for you. So please make sure that you guys make the best utilization of the same. And also if it is helpful, don't forget to share it to your friends. Thank you.